mind can conceive and believe, the mind can achieve, regardless of how many times you may have failed in the past, or how lofty your aims and hopes may be. I caught my first fleeting glimpse of the profound law which provides the means by which we may choose our own purpose in life and attain it, while I was being coached by Andrew Carnegie during the organization of the Science of Success philosophy. I had just finished telling Mr. Carnegie that I feared he had chosen the wrong person to give the world the first practical philosophy of personal success, because of my youth, my lack of education, and my lack of finances. Well, at this point, Mr. Carnegie delivered a lecture that I shall never forget, because it changed my entire life and paved the way for my helping to change the lives of millions of people, some of them not yet born. Let me call your attention to a great power which is under your control, said Mr. Carnegie, a power which is greater than poverty, greater than the lack of education, greater than all of your fears and superstitions combined. It is the power to take possession of your own mind and direct it to whatever ends you may desire. This profound power, Mr. Carnegie continued, is the gift of the Creator, and it must have been considered the greatest of all of his gifts to man, because it is the only thing over which man has the complete and unchallengeable right of control and direction. When you speak of your poverty and lack of education, Mr. Carnegie explained, you are simply directing your mind power to attract these undesirable circumstances, because it is true that whatever your mind feeds upon, your mind attracts to you. Now you see why it is important that you recognize that all success begins with definiteness of purpose, with a clear picture in your mind of precisely what you want from life. We come now to the second of the 17 principles, which lead to the first view that you may open the door to the contempt of your definite purpose in life. This principle of success is called the mastermind principle. I want you to understand the nature of the mastermind principle, because you must use it before you can take possession of the master key. An understandable definition of the mastermind is this: it consists of two or more people who work in perfect harmony for the attainment of a definite purpose. Now, here are some interesting facts about the mastermind which give you an idea of how important it is and how necessary that you embrace this principle and make use of it in attaining success in your chosen occupation. First of all, it is the principle through which you gain moral and use the education, the experience, the influence, and perhaps help of other people in carrying out your own plans in life. It is the principle through which you can accomplish in 1 year more than you can accomplish without it in a lifetime if you depended entirely upon your own efforts for success. And I have heard well-informed Bible students say that the first known application of the mastermind was that which existed between the Nazarene and his 12 disciples. Of one fact I am absolutely sure: when you form a true mastermind alliance with others and work with them in a spirit of perfect harmony, you can draw freely upon the spiritual forces within you in carrying out your plans and desires. I also know that the mastermind principle can give you absolute protection against failure, provided always that your purpose in using this principle is beneficial to all whom you influence. In my research while organizing the Science of Success, I had the collaboration of practically every outstanding, successful man this country has produced during the past 50 years. And I can tell you definitely that their success was due in the main to their knowledge and application of the mastermind principle. I wish also to call your attention to the fact that our great American way of life and our unmatchable system of free enterprise is on the mastermind principle. The greatest document ever conceived by the mind of man is a perfect example of the mastermind principle in action. It is the Declaration of Independence, and the best evidence of the importance of maintaining perfect harmony in a mastermind alliance may be found in the fact that the 56 men who signed the Declaration of Independence knew full well that it might turn out to be either a license of freedom for all mankind or a death warrant which would cause each of the signers to be hanged. Now let us see how the mastermind principle has brought success to people whom we all know. First, consider when Kate Smith began her career as a singer. She had difficulty in earning enough from her singing to pay her living expenses. And she perhaps never would have made her singing pay if she had not discovered and applied the mastermind principle, which gave her access to the master key to success when she formed the Mastermind Alliance with Ted Collins. According to the report I saw in Reader's Digest, Kate Smith earned upwards of $13 million, and she is still in the upper brackets of income. Two, I remember when Edgar Bergen and that cute little block of wood known as Charlie McCarthy used to play anywhere they could get an engagement. I suspect that often all they got for their service was a meal. But Edgar Bergen is a smart man in the field of entertainment. So he formed the Mastermind Alliance, which introduced him and Charlie to millions of people by radio and television. And I suspect he is not concerned about money and his own mind. Well, this, our third visit, brings us to the success principle, which has marked the turning point of every person who has promoted himself or herself from the lower brackets of success to the higher planes of achievement, where one acquires everything he desires. This principle is called the habit of going the extra mile, which means the habit of rendering more service and better service than one is expected to render, and doing it in a positive mental attitude. I'm going to tell you all I know about this magic principle of self-advancement, because it is the one rule you must follow if you expect to write your own price tag and to be sure of getting it. Let me describe this success principle for you in a brief formula which you can easily remember. I call it the QQ&A formula, which means the quality of service you render.
Right. Hello, everybody. Thank you for joining in. This is Bola Lebalogun here on the global financial market trader. Thank you so much for taking your time out today to be part of this opportunity.
I was asking questions.
I would like to let you to understand that the session will begin shortly. I've got a couple of important people. Wow, who is that? That should be Chi. I've got Ade Eric here. I've got Christopher here. I've got Labins, interesting name. I've got Anu. I've got Damola Adeleke, Ajiri Anthony Lee, Atunrayo, Ola, my wonderful Raboni, Lupeju, Damola Adeleke, and Vesgondo. Is that the right pronunciation? Vesgondo. Right. So, I will begin by giving everybody an opportunity to mute themselves if they are producing a lot of background noise, and at the same time, obviously you can talk. And if you need to have a conversation going forward, you can then unmute. So in the meantime, I believe it's quite important to get ourselves muted without any background noise. All right? Anyway, right. Earlier on, we were listening to Napoleon Hill. I will recommend for anybody who really want to be successful in life, right? If you want to be successful in life, in anything that you do, right? Let's put every other things that we've learned in our life aside: religion, spirituality, the way that we call on God, and the belief that we have, our faith in every single thing, right? Especially for us that come from the developed nation, whereby what we do majority of the time, or what our parents has done, way back then is they've literally adopted the other set of rules or the other way of living of some other people in Africa, in the rest of the other part of the world. There's a norm to which we live, right? But in Africa, more than anything else, is the norm to which we used to live way back then has been tarnished. They literally take away some values away from us and give us another value entirely. That value that was given to us entirely, we keep navigating through it. We keep working through it to see how best it can help us. But what I then find out is we were given an incomplete version of the way things work. Okay, so if you are a Christian and you're calling on God, obviously what you want to happen is some kind of answered prayer or some kind of miracles to occur to make sure that things can work out best for you. That is the kind of illusion that is placed in our front. All right, I do not say there's no God. That's not what I'm saying. I firmly believe in the existence of God, the creator of all human beings. But at the same time, I want to enlighten you and open up your mind to let you understand that despite the fact that we were given all this, whether we are a Muslim, whether we are a Christian, whether we don't believe in anything, there has always been a proper way for us to attain success. It's created with us. You know, the world cannot be where it is today if attaining success or achieving success is not part of it. You know, there's been quite a lot of advancements in the world right about now, and it's still growing rapidly, such that the next 5 years is going to be different completely to the current 5 years or last 5 years that we've spent. You know, things are growing massively, you know, and what part of that sphere do you want to find yourself? Where do you want to put yourself? Everything has to begin from how you see success, right? Everything has to begin from you now going in depth into understanding success, right? So if you can understand the philosophy behind success, then it won't be long before you start to see answered prayers. And that is all I wanted to say. Good morning, Edward. That's all I wanted to say. You need to be able to understand what the successful people are doing, that they are doing right, okay? And then check that and see what you are doing that you are doing wrong, because don't forget that we've got a mixture of culture here. We've got a mixture of our normal culture, which is from wherever we come from, together with spiritual culture, all right? And there's no clear defined boundaries onto how to apply them, all right, or onto how to use them to their full potentials, all right? That's the reason why you see some other people succeeding more than the others, because if you are not open-minded, you can't be here with me at this point in time, right? Going through this if you are not open-minded. You are here with me at this point in time because you are open-minded, because you believe there is something out there, because you know definitely there should be a way of you doing it in a way that's going to be reasonable, that's going to be legitimate, that's going to be sensible. At the same time, it can be very challenging. That's life anyway. So if you're living life and then you are coming into the world of the financial market, the good thing for you guys being with me is over my last 13 years in this field, I have trade couple of different instruments, from fixed income to spreads to foreign exchange market to equities, which is stock, generally to indices. You know, there's nothing that can be represented, or to bonds. I actually started trading the bonds. We started trading the German bonds with TCA futures, you know. So my journey did not even start with Forex alone, but we started trading the German bond. We were trading the bubble, the charts. We were trading the we were trading the German bonds. That's the 30-year bond. You know, that's how I began my career in the city of London back then. You know, and it's been an exciting journey for me to even have you amongst me for us to be able to discuss this going forward. All right. So there's a belief in a supernatural being, whether we like it or not. But there are a couple of things I need you to take notes. All right. I need you to watch Napoleon Hill's Law of Success, Thinking and Growing Rich. All right. If you're going to be on this journey with me, I want you to be on this journey in a way whereby your mental attitude is going to be positive. You know, I want you to be on this journey in a way whereby your heart is already open to possibilities, and you know that you are the only one who is stopping yourself from achieving that success. Forget about, yeah, it's all about some family members that doesn't want me to succeed. No, life is beyond all that now. You know, if you sit down in a day, how many hours do you have thinking about other people? You sit down there concentrating on yourself more than anything else, you know? And concentrating on yourself even goes to a point whereby you don't have enough time to concentrate on yourself. Now that we are 19 people, there are a couple of videos that I need you to watch. Napoleon Hill's Law of Success and Thinking and Growing Rich is absolutely one of them. I want you to watch Outwitting the Devil as well by Napoleon Hill. Then I'll give you further videos going forward. If you can watch that, especially this one that I have here, I'm going to put it on the chat room. There's about 2 hours of it as well that you can find on YouTube. That is Thinking and Grow Rich. Start with that. Then you'll start to see different possibilities in your life. There's nothing that you want to achieve, right, that your prayers won't get you there. That's all I want to say. And I wanted to say to my brothers and sisters who are from Somalia, who are currently observing Ramadan Rabat now, I wanted to say that may God continue to answer your prayers. I wanted to say to my brothers and sisters who are going to be going to church tomorrow that may God continue to answer your prayers. And I wanted to use this opportunity to appeal to you all that please, each and every time when you are calling on God, do remember to pray for me. Do remember to pray for our journey. Do remember to pray for our success. You know, there's a lot of things in the pipeline for us that we can succeed from. There's a lot of opportunities that I've got right at my hand right back now that I can give out to you. You know, some people have already been witnessing that. They've been taking that on board. There's still so much things coming. I mean, the pipeline that I've got that I'm setting up for you at the end of the day, I am expecting nothing less than a cycle of complete successful people around me, you know, and that's what we're going to do. That's what we're going to achieve. There's no doubt about that because we are on the path already. So I'm just going to delve into the charts, all right? And we can continue. So if you are new, I want you to pop into the chat room where you're calling from today, your trading experience. I've got about 22 people in the house. Let me know your trading experience. I'm expecting some newbies to join this training. And what I wanted to do from now on is to make sure that at least the first 15 or 20 minutes is concentrated on the newbies so that they don't feel left out. So if you're new or if you've got a couple of months of experience, don't hesitate to pop it into the chat room. It will give me the opportunity to be able to know how to structure this training and then to be able to help you going forward. Because what I don't want you to do is I don't want you to get trapped into the bad habits. You know, I'm doing some trading psychology right up for you guys. I think we are on volume 8. I don't want you to get trapped into the bad habit, because the thing about trading is trading can really be simple. You can close your eyes and trade. But there's one thing that you need more than anything else, and I'm going to write it down here for you so that you can see. Right, so the first thing that you need, that I always teach my students, that I always teach all my followers, is proper money and risk management. Forget about the charts. If you don't have this, you will, first of all, get yourself into bad habits, all right? Those bad habits will be very costly. Those bad habits might take years to unlearn. I'm telling you from a deep experience level here. If you do not understand proper money and risk management, don't delve into this, all right? Don't delve into this at all if you do not understand that. Okay, so going forward, the first thing first, I've got 21 people here right now, yeah, this Saturday. How many people inside here understand proper money and risk management? If you don't, that is the first thing you need to know. You see, with me, I like to give it to you based on experience, okay? It's not a 1 year experience, it's not a 2 years experience, it's not a 3 years, it's not a 4 years, it's not a 5 years. I've shown you a couple of proofs to let you know that I've been in this game for however how long, but that is not the the that is not the reason why I want you around me. The reason why I want you around me is so that you can learn those things that makes people become a failure, so that you can learn those things that will get people to drop out from this, so that you can learn those things that will stick you into this and make you a success. You know what I mean? And that's the reason why I can bring down trading floor experience down to you on the days whereby trading are not yet even on computers and things like that. I can bring down online experience down to you. My approach to trading is completely different from just the technicals alone to just the fundamentals alone. We actually look in depth into the deep underlying orders, because you have to understand what you're trading, that this is all about me being a buyer and you being a seller. And then obviously I've got some purchasing power and you've got some purchasing power. Whatever I want to buy, in as much as I see got that purchasing power, I will continue to buy it from you who want to sell to me, you know? So if I continue to buy from you who want to sell to me, which means any price that you are calling, I'm so rich to the point whereby I can achieve that price. I can definitely pay for it, right? But when it gets to a point whereby I can't pay for those prices anymore, just because probably I don't have enough funds, you can't call higher prices anymore, right? So let's say, for example, let's look at this. Can you give me a chart for us to look into? Can someone just give me a chart for us to look into? Whatever you've been looking into this week, first come, first serve basis. Just give me a chart that you've been looking into, and then I'll be able to show you some of these things on the charts, all right? So that it doesn't look like as if he's already prepared. Gold, interesting, gold. Okay, right. So someone is talking about gold. We're going to look into gold. I'm sorry, I may have a messy chart. So the first thing first is you need to have a charting package. If you're a newbie, US 30, we're going to look into that. I'm making some serious money on US 30 lately. The pound, we're going to look into that as well. And but the first thing first is someone said gold. Okay, so we're going to start with gold. Let me see which internet I'm connected to, because I can't believe that things are a little bit slow this morning. But yeah, it can happen. No problems. All right. So, right. So, like I was saying, proper risk management is very important. You need to know that. If you do not understand that, don't brush it aside. You know, because, you know, I'm telling you right now, if you don't, you will end up keep coming back to the drawing board. All right, because you'll be over leveraging. You wouldn't have a clear clue of why the results are not showing. Okay. All right. So say, for example, for the people on the funded account, yeah, I am preparing some slides to show you something at the same time as well. Google document. Because I don't want you to get trapped into just your mental theory alone. All right, so we're looking at proper risk management, and I've asked, I didn't see any response whatsoever. If you do not understand proper risk management, Abraham, probably I want answers to my questions. I want you to even unmute yourself and give me the answer. So if you do not understand proper risk management, don't hesitate to say that I don't understand it. It wouldn't cost you anything to say that. You know what I mean? Just say it, then I can go over it. You know, I've gone over it times and times without number. The more you get to understand that, then you can trade literally with closed eyes. Okay? You can trade literally with closed eyes. All right? All right. So that is proper risk management. Then you need to have your news calendar. Okay? You need to have your news calendar or the economic calendar. I'm struggling with it. Yeah, I like that. So what's wrong with that? Then we go through it. Okay? We go through it. Because that is the only thing that you need to succeed. Okay? That is one thing that I can say to you that help you to conquer emotion if you can follow it. Okay? Then it's not a thing whereby you don't understand proper risk management for the people who do, right? So, but for the people who do understand proper risk management and are finding it difficult to follow through with it, what tends to happen is their emotion. Okay, a lot of people cannot even define what emotion is. Okay, they don't even understand that their emotion is having a great impact in the way that they trade. Okay, they don't, and I'll show you this clearly. All right. So I develop a slide, okay? And after I show you this, I'll now go through proper management for you, all right? So based on this slide that I developed, I'm looking at the funded accounts, and I'm very sure majority of the traders that have taken on that, they don't even look at things as deep as they, all right? But I wanted to help you, and I want to continue to help you going forward so that you can understand what you're getting into, especially when it comes to managing institutional money. You see, like when you have a clear clue of what you are getting into, and you have a roadmap as to how that thing is going to be achieved, then achieving it is just going to be very simple. It's just going to be very simple. All right. So let's say, for example, now, right, if you're trading any account and you have, say, for example, the funded account, you are taking the smallest lot size. If you're using MetaTrader, that smallest lot size will be 0.01, okay? And that 0.01 will mean that is a 10-cent dollar value, okay? If you have a minimum pips target, all right, which is 4 pips, let's say, for example, to achieve, okay? And then you have to achieve that 4 pips target. Exactly. Well, Hubert, number one, emotion is running you, whether you like it or not. You have to learn how to conquer that. And we're going to go through how to conquer that as well. All right. Because one thing is this, majority of people think they are exception to this. Majority of people think they are in control of the market. Hell no. You can't control this thing right here. It's not for you to control. What you can do is you can either get ahead of the market and see what is likely going to happen in the nearest future in some zones, all right? And see what's likely going to happen in the nearest future in some zones, and then take advantage of that by placing either a contrary order in that particular zone, okay? The next thing is, let's hold on one second. Let's put a face to this. Give me a second, please. Right. Where is my? Right. Okay. Hope I don't look so rough today. I know it's standing. Yeah. Where's my little face? Right. Okay, ladies and gentlemen, this is what I'm trying to say to you. You see, like, I've been disciplined in a way whereby you can't control your discipline, right? It's not a difficult thing to do. What is difficult is you telling yourself that you're going to accept your journey going forward. And this is the acceptance that I'm about to show to you. And I want you to go through this briefly with me. All right, so if you're trading a 10 cents, which is 0.01, okay, and you have a minimum pip of, say, about 4 pips target to attain, all right, on the funded account, you are expected to have a minimum of about 40 positions, minimum, which means you can have more than that, all right? The reason why I use this small size is so that you can understand that if you can control your risk, what you're going to be able to make with that 4 pips target is just $16 on the whole of the minimum of 40 positions, all right? If you have a total expected target to be $580, all right? If you're trading a very small size and you are controlling your small size, in a sense, what you'll be attaining with that will be very small as well, which is $16, and you're still going to a $580 for a 30K account, all right? Which means you have to take these 40 trades to achieve this $16, 36 times and a quarter, all right, times, all right? So if you're going to be taking 40 trades in 36 times and a quarter, that means you're going to be taking a total of 1,450 positions, all right? And then when you attain 4 pips targets, then you can attain that maximum target of 580. So what is the essence of this? What is the essence of this slide? The essence of it is, now you look at it and you say to yourself, if I'm trading a very small risk or a very small lot size, what I can then get after 40 trades is $16. All right, $16 if all of them goes to target, and that's $16 out of my 7,500 accounts which I need to succeed. What I will then do is I will be able to have 1,450 positions, which means 1,450 trades to attain that. All right. All right. So in this case now, if the maximum pip loss that you're going to be attaining is 2 pips, say for example, let's just break it down to something sensible, and you're going to take that 40 positions, right? If all those 40 positions is going into loss, you will only lose $8, all right? The total maximum that you are expected to lose is just $300. So if you lose $8, having a funded account, then the total maximum that you're supposed to lose is $300. You are still within range with this $8. All you have to do is go back into the market because you still have the money to do that. But in a day, you're not supposed to lose more than $111.75, okay? Which means for you to attain this $300 loss, you would have traded 40 positions, 40 different trades, 37 times. God forbid bad thing, all right? After trading 40 times, 37 times, then the total positions that you will be taking to attain this maximum expected loss will be 1,500 positions. All right, within that 1,500 positions, all of them will never be lost, even if you are closing your eyes to trade. All right. But what would then tend to happen is this: if you are looking at the daily loss which you're supposed to encounter, you would have been able to take 558 trades before you even attain $111, and you can close your eyes and trade that. All right, so if we now want to bring it into a much more better perspective, say for people who want to trade a lot size that's a little bit higher, all right, if you are trading 0.03 lot size, that will be 30 cents per pip movement, all right? If your maximum pip that you want to attain is about 20 pips, say for example, after 40 trades, what you will be getting is $240, all right? After 40 trades, which means you are almost halfway closer to your $580 target, all right? So which means you will just take about 96 trades, all right, for you to attain the $580. All right, so when you now know that you only need 96 trades, okay, in 3 days, I can do more than 96 trades. In 3 days, I can do 2 trades, just clicking buy and sell, you know? And when you now know that that's all you need, then your mind will be at rest. You know where you're going to get to attain your target or your success. But if you don't have a clear definition of the targets that you need to attain, and you don't have a clear definition of the kind of success that you wanted to see, then it will be difficult for you to plan your journey going forward. So if I know that I need 96 positions, and all those 96 positions, if they hit 20 pips targets, then obviously I can then reach my target and then get a much more funds in my account, then I'm more than happy to just wait for that 96 position. That's all I'm going to be targeting. I'm not going to be behaving randomly or be losing patience or just trading anything anyhow, you know. So I can close my eyes and take any trade. I can do all sorts of different kind of funny strategies, and I literally do that. I just take all sorts of different kind of strategies, and I make sure that I lower the my position size, and your account will continue to be alive more than anything else. All right, so let's look at an example of a detailed statement. Let's look at an example of a detailed statement. So trading anything anyhow, but having a sense of risk management behind it will now give you the opportunity to trade anyhow, but you will still be keeping your account alive more than anything else. Wait me a second. Let's look at this example. I'm just putting things into a live practice, into a live perspective, so that you guys can understand that the journey is all about, you can trade anything anyhow, but you need to have a sensible risk management approach behind it. Once you do, then it will be nice. All right. So when you look at this, these are the position sizes, nothing too much, 0.03, 0.05, maximum will be 0.1, all right? And that will be $1 a pip, but look at the smallest position size, okay? And then I will show you some of the strategies that I take that's producing profitability. I caught the New Zealand US dollar on just a funny account, just practicalizing. All right, so the total trades, when did that start? That was on the 17th. Okay, sorry, that was on the 15th. All right, 15th to 17th. Maintaining your lot size will let you stay in the game, whether you like it or not. And that's the first thing that you need to do. All right, if you look at this graph, this is how the account began. At first, loss. All right. And the loss is a sensible loss. It's not just anyhow loss. All right. The loss did not even attain $50. All right. So if you look further down, you will see that, and this is just not even taking my own personal strategy, because I'm looking at this in a way whereby, what if anyone just decide to use any strategy? All right. So you can see that at a particular point in time, the total trade is 57 trade. All right. And out of that 57 trades, the maximum drawdown is about $48. That's maximum, all right? The profit is 133, while the loss is 118. This is not following any specific strategy, just following any mass strategy, all right? But you are putting into consideration your position size, you are putting into consideration your proper risk management, which I'm going to go into. All right. So the account was closed with a profit of about $15. It's not much, but you are alive, right? If you are alive, you know, and you can take another trade coming into the new. Meanwhile, I've got my personal account as well, which I trade my personal money, which I trade, and the result is quite different. Definitely quite different, more positive than this. But for this one, just taking any strategy, anybody can succeed. The only thing that will stop you from succeeding is if you do not understand this. Proper money and risk management, it's quite important. The other thing that I'm going to tell you today is news calendar. It's very important as well. You need to have that, which is Forex Factory or any other news station that we use. And I'll go through that proper risk management for you. Then you need to understand session, all right? You need to understand session. You need to know that when a new session is coming up, right? If you are a day trader, then obviously what you want to do is you want to see how best you can close your position. All right. If you can't close your position, then what you want to do again is you want to see how best you can put a stop in place. Okay. Because for the US starts, a lot of people were selling before the American session opened. By the time the American session is going to open, I know it's a Friday, it's a mad day. That's what Friday always does. By the time the American session opened, everything got reversed. Okay. When everything got reversed now, then people who are stuck or married to one particular position, they didn't get to take off their profits. And I make sure that I won on that particular Friday. Let's look at history. Say for example, and I want people to pay attention to those warnings when I'm saying it, because it might be difficult to get everybody on board at a particular point in time. But yeah, obviously the warning is there, and it's just a warning for you to know how to make good use of it. I want to go to another chat group. All right, so let me do this. All right, so this is what I'm gonna do. Let me see this one. All right, so that you can understand how the warning works, and then you can make good use of it. All right. Okay, so I'm gonna do this. I want to show you the sample of the warning. Right. Retracement back to steady. So it's not gonna be this group, it's gonna be this one. I'm just gonna scroll back to show you the warning so that you can see what I'm talking about. Because once you can understand these things and you understand the essence of timing, US session. This is just before the US session yesterday. So this is yesterday. Right, so probably it's on the other group. I'll find it, don't worry. Because you need to understand when a new session is opening, there's no need for you to be gambling or thinking things are going to go in the same direction. That is new money coming into the market. That is new intention coming into the market. And that's the reason why I'm there, to be able to say it to you and let you understand that, listen, when this is happening, when the time is getting to about 1:30, aside placing the warning around 1 o'clock, if I'm online and I'm trading, obviously I will want to place the warning so that you can take advantage of it. So outside placing the warning around 1 o'clock, because I remember quite vividly that that's what I did, and I want you to pay attention to it. Once you know your session timing, then it's not a problem. You can make good use of it. You can adjust that. You know, this thing is loading up, but obviously once a new session is beginning, you want to adjust your position. You want to possibly have a stop loss in profit in place, not that the whole position is going to reverse and you're going to be wondering what happened. All right. I'm looking for that. It hasn't come up just because the chart is loading, but yeah, that is very important going forward. All right. So for the newbies, I'm going to do a quick session for the newbies, for the people who are just joining us new. All right. The first thing that you need to understand, like I said, is proper risk management. If you do not understand risk management, exactly, yeah, Edward is saying that. All right, because you cannot have a firm belief that your life will just continue to be going in one particular direction. Bear me a second. I'm just looking for a means to be able to have my laptop closer to me. Okay. Yeah, that happens a lot on Friday. So you can make money going down, you can make money coming up, but just because you are fixated in one particular direction, That's the reason why things can just turn around like that. All right. So what we're going to do, first of all, for proper risk management, I want to concentrate the next 15 minutes for newbies. I want you to go to babypips.com. All right. And I'll run you through how to do this. Okay. That is the first thing first. Okay. Once you do it the first time, the second time, the third time, then you will get used to it. If you want to be in this business for a long time, okay, you are not supposed to risk more than 2 to 3% of your account size. So on babypips.com, you're going to go to tools. Okay. I do this all the time. Okay. The reason why I do this all the time is because I know that you can be a victim of circumstances. And then you go to position size calculator. All right. And I'll copy the link and put it in there. If you are not following this, it will be hard for you to see that consistent profit. All right. This is what we do in the institution. This is how you manage large amounts of money. Even if you need to edge your position, this is how to do it. So once you have these sites, which I've popped into the room, all you need is account currency. Know your account currency, right? If it is in dollar, then it's all good. Then what you're going to do is, say, for example, my account currency is 7,500, okay, based on this account. All right. All right. So the account currency is going to be 7,515. You cannot be a victim of circumstances. All right. So if I say to you that the maximum expected risk that you're supposed to take on this account, let's say about 3%, okay? So if I say 3%, and then you want to consider what would be your sensible stop loss. What is a stop loss? Stop loss is that account protection that you place on the chart to make sure that if you are trading or making an investment decision, you have a place where you protect your capital, all right? You have a place where you protect your capital. You just don't leave your accounts open for the brokers to take your money. No, that's been weak-minded. You cannot afford to be a weak-minded person, all right? You are making an investment decision. You are going to the market to spend some money, to buy some things, and whatever that you are buying, you know that you want to sell it back to make some profit, okay? All right, so that's all you're doing. You're going to the market to buy something, all right? And whatever that you are buying, you want to make sure that you are able to sell it back. But if you buy so many crap that people are not going to buy back from you, right? Compared to if you buy so many good things and buy less of a crap, which means even when the good thing sells, the crap one that didn't sell, you will still be able to make money off the good ones. All right. And that is a balance. You cannot just think when you go into any trade, it's going to be profitable. Think about all trade before you even go into it it's likely going to go into loss. All right. So once you have that farm mentality behind you, the moment the trade is going into loss, you won't even feel bad because you've put a structured, proper risk management behind it. You know, because what I want to do going forward, is to help some people. Yes. Right. And the kind of people that I wanted to help are people who I definitely know that might be finding it difficult to even raise cash to get a funded account. All right. Then I'll be able to do what? If you can follow what I'm teaching, I'll even give you that account. I will pay what I need to pay for it. I'll get you to be trading it, you know, but you need to demonstrate to me that you can follow proper risk management. That's the only time that I can commit a $10,000 on you to say that, yeah, carry on using that. Then when you make your money and you need to get an account for yourself, then it's all good. You know, but if you cannot follow things professionally in a due diligence manner, there's no need for you to do this. Just because I give assignments to people and people don't follow it, sometimes they do, doesn't mean that I should stop believing in you. But I'll continue to tell you what you need to do right. So 3%, all right? And I'm going to be one of the only few people that teach you this just because I want you to consistently see that profit. All right, so let's say the maximum stop loss that you'll be thinking of will be, can you give me any maximum stop loss that you've ever used in your trading? All right, so I'll start from 15 pips. Yeah, I'll start from 15 pips and I'll consider the currency pair to be Euro US dollar. Then we take it to 30, then we take it to 40 and 50. All right. So what that is saying to me is, if I'm risking the entire 3% of my account, I'll be risking $225 if I take this trade, right? Euro US dollar, if I'm buying or I'm selling Euro US dollar, and I'm going to be having 15 pips stop loss. All right. I'll show you where that stop loss needs to be quickly going forward. Then we gold. All right. So this is a charting for the newbies. Right. Someone is getting onto my head right now. All right, so for the newbies, the first thing I want you to understand is proper risk management. So go and study the proper risk management. What that is doing for you is this is showing you that at a 3% of your account, the maximum that you're going to lose if you're following proper risk management is going to be $225 should in case this trade go into a loss. All right. The maximum position size that you're going to have is 1.5 standard lots. Okay. So if this trade goes into a loss just because of 15 pips, you're going to be losing $225. If it goes into profit of 15 pips, you will definitely be making $225. And it can go into profit of more than 15 pips or 30 pips as well, you will make about $550. If it goes into profit of about 45 pips, you're going to make $780 or thereabout. That's the kind of money that you're going to be making on that. All right, so where do we find that? How do we get that done? Let's look into this now. So for the newbies, please don't worry about my charts. I will get you there. You need a charting package. God, look at that madness right there. I'm going to delete all that anyway. Sorry. Okay, I think this is much more better. All right, so what are we actually doing? We are looking at a foreign exchange market, and this is a currency that is called the euro, all right? The exchange rate of euro against the US dollar represented on a chart, okay? So this is what is showing us that this is the way, the newbies, can you see how price is going down, okay? So it's telling us that if you need a euro against the dollar now, the euro value is literally going down. This is what this chart is showing us from here, that the value to exchange euro to dollar is going down. So if you have euro and you want to exchange it to dollar, you will need more euros to change into dollars than more than you can consider the dollar, which means the dollar has more better value or is strengthening more than euro. This is what this chart is showing us from 2018 March. Right? If you look down, right? So what we have on this side is the prices, and at the bottom is the years and the time and the days, each and every day as the exchange rate is going up or down. That's what we are seeing. And this is what we profit of. If the exchange rate is going up the way that is going up like this, and we are buying, literally, we're going to be making money, okay? If the exchange rate is going down as it is going down like this, and we are selling, literally, we're going to be making money, all right? But if the exchange rate is going down and we choose to now be going against it by buying, then we're going to be losing money, all right? So you have to follow what this is doing, not what you are thinking, and I'll show you how to be able to follow it at the same time as well. So let's go back to proper risk management. So what I'm trying to show you is, if we are looking for that 15 pips, look at where the days end, okay? This is where the day ends right now on Friday, all right? And we are looking for 15 pips in the market, all right? This is a daily chart as well. All you have to do is you can come here and take a measuring tools, all right? And take a measuring tools and bring that measuring tools down like this. You can see some values on the side, 10.9, all right? If I bring it down a little bit more, that's 15. That's exactly 15 pips. If you look to the right-hand side, it gives me a particular value, 1.1145, all right? So what I'm going to do is I'm going to put an horizontal line on that, 1.1145. All right, so we have a couple of tools that we use. Please don't run away saying so much things, but I'll be breaking it down for you. So 1.1145, which means that will be our 15 pips measure of stop loss from where the price is currently. And you can use the calculator to calculate that as well. Let's say, for example, calculator. All right, so on this side, you will see where the current price is, which is 1.1158. Okay, 1.1158. Okay, and then you want to take just 15 pips away from that. Then that would be 0.0015. Okay, that represents our 15 pips, and that would be 1.1143. Almost what I got here, 1.1145 is almost the same. All right, that means that is where your stop loss is on this daily chart. And if you put your stop loss below where price is, which means you don't want price to get down to that low. The moment price gets down to that low and hits your stop loss, that means you've lost $225. Okay. All right. So what is your mentality behind this now? If $225 is too much for you, okay, if that is too much for you with a 15 pip stop loss, what you have to do is you have to reduce your risk percentage to say, for example, let's reduce it to 2%. Okay. So if I reduce this to 2%, that will now be giving us 2% of the whole account size at 15 pips at the same time. You can see that your risk is now $150. All right. Which means if you're taking a 15 pip stop loss, the amount of money that you're going to be losing at 2% is 15 pip, is $150. If you now say to yourself that, no, I can't afford to lose $150, on the structured accounts, you can only lose $111. Take your stop risk percentage to 1%. What you are after is this position size, okay? You want your position size to be commensurating to the amount of risk that you're going to be taking, because if your position size is a lot more higher than the risk that you're going to be taking, which is the 15 pips risk, or 15 points risk on the chart, then what you end up finding is you are not in control of your trading. This is the only thing that you can control in your trading, the amounts that you're going to lose. If you give that up to the brokers, then at the end of the day, forget about it. That is you killing yourself. That is you saying, this is my account. I'm more than happy. You can take away the money, right? Because we are in the business of risk and reward, all right? But what we do with business of risk and reward is we try to take high probability trades. All right. The few trades that I showed you earlier, I didn't take much of any high probability trades. I was just clicking on the random, looking at my charts. And at the end of the day, 57 trades, we still have profits just because the risk is structured. What I want to show you on that is this again. Let me go back to it quickly. If you have a structured risk, you will be happy throughout your life in this business. All right, look at this. The maximum loss, you will see it here. So consecutive loss trade. The maximum loss is what? $10. That's the maximum one that occur. All right. If you look up here and you see $4, $11, $15, $6.99, $3.22, $3.6 minus. All these are loss trades. The profit trades are there. 5. The loss trades are there. Look at the loss trade. The maximum one is about $10. All right. And why is that a $10 trade even? Just because I took a position 0.05, which is still a sensible position. All right. And it lost $10. They see further gains 6, 8. Losses of small gains of higher, losses of small gains of higher, you know, and that is just what you expected. You don't expect life to be perfect. There's no holy grail. There's no any strategy that you can encounter, right? In this world, over my last 13 years, we look for holy grail till Jesus Christ comes. There's nothing like that, all right? Because we don't believe before that trades are just based on others. And we will go into that. All right. So if we're taking a 1%, okay, and we do calculation now, you can see that your risk has gone down to $75. So that is the amount that you're going to lose on a 15 pips account size, on a 15 pips account protection, which we're going to go into. And then obviously the position size is what is key, which is 50,000, 0.5. All right. So even on this account, none of it has gone to 0.5. The maximum that you've seen is 0.1. The main end of the game is for you to be able to come back to the market tomorrow and trade. All right. So what I can do again is now I'm looking at this and saying to myself, I don't want to lose $75 of my money, but I still want to capitalize on the market. That's what I like to do. So I want to reduce my risk to 0.1% now, right? And then I click calculate. Now $7.52. Okay. I have 7,500. Now it's $7.52. I can afford to do that. That's not a problem. It's all good. Which means if I take any position of 0.05 lots, right, which is more or less like the positions that you are seeing at 0.05, okay, if I'm only risking 0.1% of my account size, all right, my loss that I'll be encountering will be $7.52. Now you can see the reason why the losses on this account is not that high, just because proper risk management is followed. That's all you need. And I'll continue to help you teaching this going forward. So if I increase this now to 30 pips, okay, and I click calculate on this particular currency, the standard lot size will be low. It's rather better for me to take a standard lot size, which is low, than for me to be going for the higher one, anticipating that when I win or when I go into profitability, then obviously I'm going to make more money, if you get where I'm coming from. So you don't want to risk that. You don't want to risk your life in trading to a point whereby you lose your shirts and you turn into a madman. You see, majority of the people that have gone on this call, probably some people are still in their 20s. Probably some people are in their 30s. Even if I've got someone that's 50s on this call right now, yeah, if you manage to ascertain yourself to a point whereby you learn this risk management that I'm giving to you, the way that I'm giving it to you, to be deadly honest with you, the next 30 years of your life, if you are 50, you will trade your life into profitable success. Talk less of if you are in your 20s. So what are you rushing for? You're thinking you're going to die tomorrow, so you want to enjoy your life today, right? Don't worry, guys. God will give you longevity of life, all right? But learn it with peace of mind, okay? Because if you can't do it with peace of mind, then you are not trading. You are gambling, you know? And that is the right word for it, because I don't want you to be a gambler. That's the reason why I'm bringing institutional experience into this, for you to know that the first thing that you need to understand is proper risk management and money management, you know? And this is the only tool that you need. Have your account size balance over there. The lower your risk percentage, the better, you know? I can even take this down lower again and say to myself that, okay, now I only want to risk 0.05 for my accounts, okay? So that, look at that, 0.01. Now let's have a look at this live example. All right. So we have a trade of about $11, right? The trade of $11 is 0.07, okay? That is money right there. The trade of about $15 is 0.07 at the same time as well. That's in positive. Look at this trade. The trade of $8 profit, it's what? 0.02. So can you see 0.02 trades, yeah, making $8, and then look at the trade of 0.07, which is higher than 0.02, which means the loss that I might encounter on this can equally be the same as the loss that I may encounter on these 0.02 trades, right? But with the 0.02 trades, I have more peace of mind on my position sizing. Even with the 0.07, I still have peace of mind on my position sizing. So the size that you take does not determine your profits. What determines your profits is you making sure that you follow the proper risk management, okay? Because when you follow the proper risk management, you will definitely encounter success going forward. All right, so that is the risk management tools, a 30 pip stop loss, I've gone over this on so many videos, you know, and I always like to go over it because when you are new, right, and you don't know where to begin from, okay, this is where to begin from, proper risk management, okay, right. So what is Forex itself? Right, so Forex is called foreign exchange, all right? And what is foreign exchange? This is you taking money from South Africa and then you need to go to London. Obviously, you're going to change the South African rand into the London sterling, all right? While you're doing that transaction, while you are changing your South African rands into London sterling, you are paying at a particular rate, all right? There's an exchange rate between the two countries. And what happens to this exchange rate is it's a floating exchange rate. It kind of moves, all right? I'll show you an example over here right now. And you'll be able to see how the exchange rate is moving up and down, all right? Let's delve into some of this. All right, so if you're new, just for the newbies, I have over here some particular exchange rates that are moving currently, okay? And I'll be able to show you how they are moving. So I'll go to a minute chart. It doesn't really matter. But when you look at this chart, can you see that movement? Can you see this movement? All right. So this movement going down means we have some buyers in the market, all right, that is selling to traders who need the orders, all right? So when you see it going down, it's actually the sellers, or it's actually the buyers' orders that they are selling to people who actually, sorry, let me bring it back again. So when you see the charts going down, right, it means a selling process is going into place. Before a selling process can go into place, definitely there has to be someone somewhere that is selling, all right? There's someone somewhere that you are actually buying from that is selling to you, okay? I don't know if you understand my point. So when you see the charts going down like this, when you see price going down, that means some people are selling, all right? And obviously, whoever is going to be selling, they are not just selling, they are selling to people who are buying from them. I don't want you to get it complicated at the same time. I just want to bring a very easy explanation into it, that when you see the price going down like this, you can see how the price went down in our face. Right? That's a selling process. There's no way that I can sell something from you if you are not actually buying it from me. All right? And there's no way that you can buy something from me if I'm not selling it to you. All right? So it's a two process that's going on each and every time that you see the price moving. So when you see the price moving down, that means people are actually selling to people buying from them. And you will see the charts in a red mode or in a red particular candlestick down. All right, so when you see all these bars, these are the alphabets of trading. These are what is speaking the language that is going on in the market for us. Remember that we are not in that bank or on the table seeing this particular process, all right? But we can have access to it on the charts and we can see it actually moving. So when you see price going down like that, it actually means some selling process is going in place, all right? And what you want to do is, if you want to do this now, you now have to start looking at, all right, is it good for me to be a seller in this case? Or is it good for me to be a buyer in this case? That is where your strategy comes into play, all right? So you can actually be seeing some selling, and that selling will actually be good for you to buy it at a particular level. You can see that right over here, this level, look at this level here. Each and every time that they sell, it stops at this level. Each and every time that they sell, it stops at this level. Each and every time that they sell, it comes to this level and stop. What is going on there? And when it stops there, what do you see? You actually see them buying it back up, all right? So that is visual. Can everybody see that? Can everybody see what I've just explained on this chart? All right, so this is what is called the exchange rate. right? On this particular one, this is Litecoin being exchanged for United States dollar, all right? On the other ones that we're talking about, that would have been euro being exchanged for the United States dollar. So this is a cryptocurrency market. This is a market that opens 247, 24 hours every single day. And that's why I love crypto. You know, I can wake up on a Saturday morning and still make money if I want to make money. I can wake up on a Sunday morning and still make money if I want to make money. And I can teach you all the strategies in which you'll be able to employ to make this happen to you, you know. But my own main aim is I want to build our team to a point whereby nobody will be able to say trading is gambling anymore, because it's not gambling, because you need to have the proper process into it. I need to give you the right education for you to be able to arm yourself and have a bit of patience with yourself. Don't worry about the millions. It's in the pipeline. The millions are going to come. Just trust the process. Just trust me on this. Because how to create that million, it's easy that you can never imagine. But if you cannot develop yourself and have discipline, now that they are now selling below here now, this is now giving you a good opportunity to say that, wow, the level before that they are holding is now being broken. Is it going to be broken fully? That doesn't mean that when you see this going up and down like this, you should now jump in, all right? No, you wait for it to actually finish and close, all right? Each and every candle or every bar that you are seeing here is a 1 minute candle, all right? And this is for the newbies, because the older traders that with me, they already understand this process, all right? This is how price moves. So if we are selling here now, say for example, I decide to do a sell, sorry, I want to sell at market. Let's say new orders, and I click sell here now. So what would then tend to happen is you will see my orders in the market, all right? So I've literally do buying and selling. I've literally clicked sell just because I'm looking at a level that's broken, all right? All right, so if this trade is gonna go into profitability, I have to protect it, okay? All right, I have to protect it. And when you look at this protection of mine that I move up, that's a stop loss. I just want to show you the value of that stop loss. I want you to see that's $48, right? That's $48, sorry, 48 cents. I love money too much. 48 cents, okay? All right. So now when you look at my accounts, what I place is a trade of 0.01 Litecoin US dollar, right? This is the price that I place it. It's $6 to 1 Litecoin, all right? And these are my profit and loss that is occurring in the market, okay? So if I want to make money from this now, I need to have a target in place, all right? This does not mean that this is how you will trade, but I'm just explaining the simple process that's involved in it. Right, so when you look at my target now, if I click on it, can you see that means I'm going to make 66 cents if the price gets down there, all right, with just a small size. So we are playing, right? And while we are playing, we are looking at opportunity to make money, okay? We haven't even gone deep into anything, but this is a market that's open right now. This is a market that we are looking into, the Litecoin versus United States dollar. And if this is going to go into profitability, I will make sure that I watch it. Right, now I put a line over here, right? And that line is being broken as well. And I'm watching my profits. Now it's going down. It's already negative at first.
That's that sound.
Can we have, I don't really need it anyway. Please bear with me a second. Right. So this is all you need to do in trading. Each and every time when you go into a position, as simple as it looks, you have to have your stop in place, you have to have your orders in place, and you have to have your target profits in place. Once you can do it like this, then you are laughing. If you don't have all this in place, then you are not trading. If you don't follow the proper risk management, then you are not trading. So this is a live trading opportunity example. And this is what you want to do, all right? This is what you want to do. This is how you want to do it going forward, right? Whether it's profitability or it's loss, don't worry, it's not a problem. We're just showing an example of how to do it. All right. Okay. So going forward, is the proper risk management tool. Do you understand how to use it? So if I take my risk down to 0.05%, my loss will be $3.76. Then what I wanted to be sure about is my position size, which will always be 0.01. Okay, and I know that I can have my stop loss at what? At 30 pips. Okay, I wouldn't lose more than $3.76 on this position at 30 pips, and that is quite comforting for me. Okay, so that when I go into the new week trading now, just because I know that I've made $15 and I want to save that $15, I know that that $15, if I lose it like almost 5 times, taking 0.01 standard lots, all the profits that I've gained on that account will be lost. All right. So trading any strategies, now I know that, okay, I want to go into the market next week. I'm going to be protecting my $15 and my positions is not going to be more than 0.01. All right. And it's going to be at 30 pips loss, and whatever profits that I gain, either 30 pips positive profit or 60 pips positive profit or 90 pips positive profit, then I'm more than happy to do that. All right. So there's one particular trade that I want to show you going forward. Then I'll look into those charts for us as well. So let's assume, where is our charts? All right. So this has turned around. Obviously, it has taken us out of position. I'm not surprised whatsoever. You can see the trade is no more there. But if you look at the account size, you can see that the negativity of 48 cents has been achieved. All right, which is quite good for me. But if this now is about, say, $480, how would you feel? Obviously, you're going to feel bad. If this is $4,800, how would you feel? Because the same exercise I do over here can make some people to lose $480. All right? Then they will call it a gamble. The same exercise I do over here, now I can take another trade and say to myself that, wow, this is now going up. This is an opportunity for me to buy, right? It has broken every single thing, and I'm going to continue to buy this, and I'll look for it to go all the way up. So I'm not attached to any position. I'm not going to be running myself mad just because price is going anyway. And I put my stop over here now, all right? And just because I've broken that particular trend line, I can look for target profits above me, above myself as well, all right? So I want you to have it at the back of your mind that this is just a training, all right? This is not an actual trading strategy, but I need to demonstrate this for the newbies to understand that that's all you need to do. So you've placed a trade. Don't worry about it. If you have a strategy that you are now using, you place that trade, don't worry about it. Don't sit down with it, because what would tend to happen is this. Look at this. Already, I know that if I put my stop over here, all right, if price goes back down there, the loss that I'm going to encounter is $1.87, okay? If I put my target profit over here, the profit that I'm going to encounter is $1.58, and I can even move it up a bit more. Say, for example, if this is really going to go, and see, have a profit of what? Of about $3.59. So we leave that trade on. We look at it. We just don't worry about it, you know? So I know that if this turn around and go down, I'm only going to be losing $1 something. It's not a bad opportunity for me. If I'm going to be able to make $3 something after it eventually materializes, it's a good opportunity for me. All right. So that is being said going forward. What I want to also do now is to find out if you've understand the full details about the position size calculator, so that when I'm asking you tomorrow, you'll be able to demonstrate it. You'll be able to use it to help yourself going forward. All right. If you are not using this, emotion will be taking over the way that you trade. What is emotion? Emotion is you thinking, okay, right, I can take 5 lot size. The moment that thought come into your mind, you have to think of, okay, taking a 5 lot size is not a problem, but how much is my account? Is my account, let's assume my account is 100,000, okay? And I'm risking 0.05, all right? The maximum that I can take is not even up to 5 lots on a 0.05%, almost 0.05% on this account. I'm only going to be taking 0.16. All right, so let's put this on a full throttle of maximum that needs to be taken, which is 3%, okay? So on that $100,000 account, if I'm taking 10 standard lots, right, that will be a $3,000 risk if I'm at 30 pips stop loss, all right? If I'm at 30 pips target, just say, for example, right over here now, look at this particular order, a buy order, right? Look at my mouse, all right? That shows about 359 pips targets, okay? At the bottom over here, however, it shows about 187 pips targets, okay? So let's convert that. This is about 35 pips, say for example, and this is about 18 pips. Say for example, you can see it, minus 187, okay? And that will give us $1.87 based on this position size. If I increase this position size, however, right, that will give me opportunity to make more money, all right? But at the same time, it's giving me opportunity to do what? To lose more money. So I'll rather approach trading in a way whereby the money that I'm going to lose, I cannot forget that that is in the process, all right? While at the same time, I'm trying to make money at the same time. You can't forget that it's a business of risk and reward. You cannot be thinking about the reward alone, all right? The moment you're thinking about the reward alone, that is your emotion. And trading hasn't got anything to do with your emotion because you're already planning on how you're going to spend that $3,000. You're already planning on how you're going to spend that $30,000. So you can be in the group and be seeing also different kind of results, 1,000, 2,000, 6,000, also different kind of results from people. But are you at that stage yet? Can you handle the mental tenacity to be able to put that on the line and then it goes into losses? Don't forget, there's so many things that can affect the way that we do business, all right? We have news can affect it, all right? We have session changing times can affect it, all right? We have political instabilities can happen at any time. A coup can happen, a war can happen, can break out from nowhere. All these things can affect the way that we trade. So if we are in the market at the wrong position, at the wrong time, and we never know that that's the wrong position, that's the wrong time, then that particular loss can take place, all right? If I lower this to 1.5% now, which is half of what I'm supposed to take standardly, then my position size will now be 5 standard lots. And at 5 standard lots, that means I'm going to be losing 1,500 of a $100,000 account. To some people, that is not much. They're okay with it. But if I struggle to build this $100,000 account, right, then most probably I'm going to be saying to myself, I don't want to take so much of that risk. Although if I take much risk, obviously I'm going to make more money. All right, so if I lose $500 out of $100,000 account, it still makes sense. But this is where your strategy will now come into play, all right? So I'm going to be moving into the strategy session. I believe that you've had a detailed, proper understanding of proper money management, and I expect you to be able to use it going forward, all right? Don't ignore it because you are not yet there, okay? You are not yet there. I can assure you, you are not yet there. And if you don't want to take 5 years, 10 years, 15 years to unlearn a wrong method of trading, all right? You have to start to listen and to yield and let the small cents be your friend. Suddenly it will grow into the big dollars, all right? That's my message for you, and I believe it's an important message. Don't ignore it, all right? Thank you. All right, so that's the proper way to approach trading for all the newbies. I didn't even expect that I'm going to concentrate so much effort onto this, but it's quite important for people not to see trading as a gambling-oriented profession, It's not one of the easiest profession. It's not one of the glamorous profession whereby you just come in and scoop your profit and go, all right? But it's something that you can definitely do, but you have to put sense into it. You have to make sure that your emotion of the amount of money that you want to make is not what is riding you. Don't worry, the money will come, okay? Don't worry, the money will come. All right. So, yeah. So back into the days business. So some people want to look at gold. Let me see the first chart that is posted. So for all the newbies, just follow us on the journey. You'll be seeing the way that is the analysis is going to be going through. So you need to have a charting package, all right? And then you can get your charting package. These are the tools that you will need. All right. Let me quickly write the tools here. Thanks for showing it. You're welcome, Patrick. So first thing first is you need the money management tools, all right? That is the only way. Money management tools. There are also different kind of money management tools. Even your calculator can be a money management tool, all right? And then you need, I've always show it. I'll put some contact information on my YouTube video so that you can use it. Then you need a charting package. Before you even start to look into the chart at all, or understand proper charting package, which can be, we have MetaTrader, all right? We have Trading View, which is this particular one. I love Trading View because it's got so many functionality. I can use all charting package. You have C-Trader, you have Ninja Trader. Some of them are not free. You have TradeStation. But all of them I can use. You have multi-charts. Yeah, so MetaTrader 4 and 5 can be part of it. Ninja Trader, we have CQJ, Commodity Quotes Graphics. That is #1 charting package. You have also different kind of etc. All right. You would definitely need that as part of your tool. Get the free one, which is the MetaTrader, the Trading View as well. You can use it for free. The C-Trader, you can use it for free. The particular broker, you can use this broker to start with. Let's assume IC Markets. I'll give you. This is where you're gonna get the. This is where you're gonna get your charting package for MetaTrader, Trading View. This is a reputable broker that I know that anytime that I withdraw my money or that I ask for withdrawal, I can always get my withdrawal. Let me look for the link. All right. So it's quite important that you have that as well. Let me, while that is popping up. So these are your important tools. There's no one that wants to come into the field of trading that wouldn't need tools. You know, it's like a doctor going to surgery. If you don't have your tools, you don't have your stethoscope, how would you measure the patient status? All right. So bear me a second. I'm just going to give you the link to the IC market in case you want to join and start using the free, what's it called? The free trading. So that would be http://www.icmarkets.com. And I like them because the leverage is sensible as well. But you have to be careful. We've done a couple of news trading, TAMP 22384. All right. So you can get your charting package from that. And then the education, obviously, you know where to get your education. If you want to go and pay for it as well, to be deadly honest with you, majority of those people that will pay serious money to trade on that, they won't give you what I'm giving you. You know, they wouldn't. You will pay. I mean, my own trading education, I don't want to tell you how much I pay for it before I even pay and this and that. I don't want anybody to be feeling like, wow, this, that's, no, that's not the case. But the reason why I can provide this to you for free is because I know that which trade is best for new trading. I don't understand that question answer if you rephrase it. Right. The reason why I can provide this for free for you, right, is because that is my own pledge of giving back to the world every single thing that I've learned over my last 13 years. Right. So leverage is not an issue. Your position size is what is the issue. If you have the highest leverage of 1 to 5,000, you can use that to your advantage if you can manage the position size. All right. So leverage is more or less like the bank is giving you more money. Okay, that's what that is. But if you have more money and you don't know how to manage more money, right, then obviously what will tend to happen is you will lose it. So what that means is this: you only deposit $100. If the leverage is, let's look at it like this. So the only money that you have is $100. Okay, at a leverage of 1 to 1,000, say for example, the broker is exposing you to extra $1,000 your dollar, which means the broker is actually giving you ineffectively on your $100 will now equal to 100,000. All right, so the broker is your friend. Okay, the broker is your friend. Well, when it comes to slippage, we're going to look into that. There are so many brokers, but all of them will promise one thing or the other, but there's always a way to go in a much more secure manner above that. All right, so you are getting that if it is 1 to 500, just times that by your $100, so that would be 50 and your 2 zeros, so you are getting extra 50,000. All right, it's more or less like a credit for you to access the market. All right, but if you now know how to make use of your lot sizes, you will be able to capitalize on leverage. Leverage will be a disadvantage for the brokers. All right, but just because they know that you don't know how to capitalize on your lot sizes, then it will be a disadvantage to you. All right, so it's all about finding a way to make something advantageous towards your size. All right, so that is that on leverage. All right, so going forward, guys, let's look at this particular chart on gold. That is the first chart that was sent. All right, so now for the newbies, we can trade anything. If you are underneath me, to be deadly honest with you, I will make you trade something like beef, shish kebab, shawarma, cotton, soybeans, anything whatsoever. Right. So, I mean, if you want to trade in this, which broker? Right. So, you will have what is called a true ECN brokers, right? All of them claim to be true ECN, right? But what we will tend to do is we will continue to strive to use our 4-hour charts to trade, all right? And then we will continue to make sure that we use a stop loss that is decent, all right? So that slippage cannot be cannot be disadvantageous to us, all right? All right, so those are the important tools for now. The next things that I want to give you is the contact details so that you can have that before we continue. So out of the contact details, let's quickly look at this. And please, listen, education not just for you alone. You know, you have friends that you want to help, get them in here. You know, I'm more than willing to show you how to do this the right way and at the same time back you with funding as well. If you want to follow me on Instagram, go ahead and do. For all the people that has sent me, to be deadly honest with you, I've been receiving contact details. I've been receiving some very positive testimonials from people. You know, I want to say thank you so much for believing in me, for taking the education to the next stage. One gentleman literally made some decent money using the new strategy. And I told him, withdraw your money, spend some on your family. If he's in here, I will say, I hope he do that, you know. So those are some of the contact information. If you want to follow me on Instagram, you can follow me. You can see how we do things live on, you can access more training from here. And these are value training right here. To be honest with you, it's multi-million pound worth of trading that you are accessing over here, to be honest with you. And seriously, you can go and pay for training. It's not a problem, but I can assure you that you won't get quality, you won't get time, you won't get as much as possible that I'm going to give you over here, because I am doing this wholeheartedly. You know, I can make money from the market. So if I can teach you how to do the same, and I know that it doesn't take one day to be able to make money out of the market. So why charge? Why not just do what I do best, you know? And then if you are able to do the same, then I'm more than happy. Then we can embark on so many projects. I've seen the life of people in the world dissipating. I really want to reach out to the world. I really want to help so many people. But you know, you cannot continue to just take a man to the river. You have to be able to do what? You have to be able to show a man how to fish, all right? So this is our gold chart, and what a surprise chart that we have, all right? But don't be surprised. This is what price does, okay? So when you're looking at this, guys, you are looking at the current price of gold market, all right? So what that means is we are looking at the underlying price of gold market. And the first thing that I like to do is I like to look at, we have what is called a weekly chart, all right? So we look at time frames, okay? We look at how long this has been trading. For this particular instrument, they've got a data on it from 1997 based on this particular broker, IDC. If we look at another broker, let me quickly bring you up to speed onto this so that you can see what data does for you, and you can see how best you can. Everything about trading is how you structure your mind, all right? How you can easily adjust your thoughts. 1 minute you are a buyer, the next minute you are changing from a buyer to a seller. How can you quickly adjust that quickly and then make a reason? All right, so you can see this is our trade, right? So initially we were trading down on a 1 minute chart. Now you can see that while doing this, we've made a little bit of a profit on our position, and that's 70 something cents. All right, so this profit now, we can close it or allow it to go all the way up to that level. All right, so let's close it for the sake of saying we do a trading session and we make profits back. All right, so we lose 40 something cents, and now we've made 70 something cent back. That is the business. That is how it works, you know. But if you are afraid of the loss, you can't see the profit. Okay, if you are afraid of the loss, you can't see the profit. So looking at this quickly, gold, I want to show you some few things. So we are looking at the time. That's 1998. That's the last one that we go over there. Let's look at TVC. So TVC has got data from 1998 as well. Let's look at, I need more data because gold has been trading before that. Comex. Let me look at forex.com. Maybe they can do better. So forex.com has got a little bit of data till 1997. Gold. And let's look at JFX. I know they can have some data that's longer than that. So these are all charting packages, okay? So why do I need historical data? All right, so from 1998 as well, JFX has got. All right, so why do I need historical data? That's not because I want to, that I can make money from it, but it's because it will show me how does this market actually trade, okay? It's because it will show me how does this market actually trade. I have some. So this is the gold chart. I'm just, all right, great. So this is not such a bad one. So I can clean up this chart. All right, so this is trading view chart that I sent to you over here. If you don't have trading view and you are new, you need to actually, it's a web chart, all right, and it's so robust, okay? So you need to actually have a charting package to be able to be part of this business. And this charting package can literally, and when you have your charting package, what you will tend to see is you won't see all this line on it, okay? All this line wouldn't be on it. This is what you will see. You have a naked chart like this, okay? All right. So when it comes to trading, you can apply also different kind of mental calculation to it. You can apply also different kind of technicalities to it, all right? But one thing I want you to understand is this, right? Which is the most sensible things which you're going to be learning from me going forward is to understand what is actually behind the move, okay? So behind this move up, what is there is a lot of buying orders that push price all the way up, all right? Behind this move down, it's a lot of selling orders that push price all the way down. So if you now want to be putting calculation into this just to have a little bit of a strategy behind it, well, you have to still understand that these are orders, all right? These are buy orders, these are sell orders. These are buy orders, and these buy orders, that does not mean that there's no sell orders in it, all right? Each and every opportunity that you see going up here just means that the buyers are more strong than the sellers. There are sellers in all this move, all right? It's just that the buyers are more strong than the sellers. Over here, the sellers are more strong than the buyers, all right? Over here, the buyers are more strong than the sellers. And currently, we are seeing the sellers, all right? And one thing I want you to pay attention to is this. When I start to look at my chart and I'm seeing this, okay? What I'm trying to see is this. Look at all these last few months. 1, 2, 3, 4 months, yeah? Can you see the strength behind the move, the way that it moves all the way up? Seriously, right? Look at this last 1, 2, 3, 4 months, okay? Look at all this move. Everything is still within the last 1 month, okay? But just slightly going into the 2 months now, and 4 months of a move, still embedded in a 1 month of a move. It's telling me a different story entirely, okay? That if this is a serious, significant move, okay, it shouldn't have taken us 4 months to correct all this move. So I'm looking at this as actual correction from now, all right, of this entire move, all right? So when we have a serious move, right, it's the trend direction. When we have the move coming down, all right, we call it the retracement of that trend, all right? Some people can call it correction of this trend. So why does that actually happen? So in the marketplace, okay, just because these are holders, you have to have it at the back of your mind that the banks, who are the market participants, who are the people that we play with. We are playing with big institutional banks. We are playing with central banks. We are playing with speculators, people who have huge amounts of money, right? They only recently opened this opportunity to the retail investors around the early 1990s, okay? If you do not have certain kind of money, and that's where the issue of leverage comes in. That's the reason why, because they've made so much money now, they can leverage you up and give you leverage come in and take a little bit of $100 from you and give you up what you actually need to trade this market, all right? And that is what leverage is doing. All right, so going back into this move down, right? The amount of orders that I'm seeing that is pushing this price down compared to the amount of orders that I'm seeing pushing this price up, I can think that is not as much, right? Because when price goes up and it goes up on volume at the same time, you tend to realize that, 1 second. Right. So a little bit of complaint right here. Right. Okay. Can you all hear me though? All right, great. Thanks. So you want to understand, hi Chima, what's going on? Any question? Oh, you're just telling me that you can hear me. Great. All right. So you want to understand what is behind the underlying move. All right. So that's for the fact that we are trading on a chart. All right. Some people are actually trading the physical product. Some people are actually buying gold. All right. So we are trading at the back. I think I've done that. Yeah, I think I've done that. Let's double check. Can't find that anymore. Probably. Right. Okay. So going forward, we are looking at this and looking at the orders, right? And we are looking at the way the orders are being represented. If there is some serious buyers that come into the market and push this price up, all right, that doesn't mean that those buyers have gone, okay? But what would tend to happen is they need to balance their orders, all right? So they could have possibly buy excessive amount of gold. Say, for example, you were only given, say, for example, you know that you can have access to, currently, I know that I can have access to $1.2 million, okay? All right. So with that $1.2 million, I know that I have access to, if I go into the market and I say to myself that, okay, I'm going to spend the whole of this $1.2 million, okay? But spending the whole of this $1.2 million will mean that I won't have access to any more cash to do any other thing in my portfolio, all right? So what would then tend to happen is if I even invested the whole of the $1.2 million, I'll be looking at the time frame that's involving me trying to recuperate this back, all right? So say, for example, I've invested the $1.2 million, but I still need cash. Obviously, what I'm going to do is, because I know that this is looking positive and it's the buyers that is in control and I'm buying some gold, I may want some of my money back, okay? And want to invest that into another thing. So say, for example, I now need about another $600 back, all right? $600,000 back, which means some of my position, I have to sell it and make that $600,000. But just because I've been buying from a long time, I would have had some profit. So taking $600,000 out of this wouldn't be an issue. I would be taking that out in all this move that we are seeing, all right? So when you see the decent, strong move, that is called the real trend, okay? When you see the pullback that's occurring from that, and you can see that the pullback is not as strong as the way this move up, okay? It's taking longer time for that pullback to occur. Meanwhile, only take a whole month for this to occur. Even let's say 2 months worth of a move, and we've had 1, 2, 3, 4 months doing a slow move, all right? So that is showing us that this is a corrective phase of the chart until we see this continue to break down and continue to go down and take out this particular low area, right? Look at this eye right there, right? And take out this particular low area. That is when this become the new trend, all right? So the new trend or the real trend, this is the real trending up, all right? So this is the correction of this particular trend just because people are taking profit, just because people have bought so much gold and they think to themselves that they need to liquidate some. So the correction of every single thing that they've done in a greedy manner is what we are seeing there. But this correction is what turns into a trend as well, all right? So don't get it twisted. So you can start to see a correction, and that correction will turn into a trend. So this can turn into a downtrend when it take out this low, when price come all the way down and take out this particular low, all right? That becomes a new trend, all right? So for example, right about now, you are looking at this as correction. But one thing I want you to understand when it comes to the way to think is that same correction that can become a new trend, all right? So, but currently, the emphasis that we're going to be placing on it is just going to be a correction, all right? So once you have a monthly chart like that and you are looking at it, what you want to be seeing, how do we measure whether the price is strong or the price is weak? Look at this. You know you have a high, you have a low, all right? And it's quite simple. If price comes down below this low of last month, is that strong or weak? Answers, please. If we are trading down below the low, are we strong or weak? Just before we start to employ any technical thinking into this, you have to be able to see where the real strength is. So if we trade below this low, are we strong or weak? So some people are saying strong, okay? Two people said strong. So what do you mean strong? You can give me a much more elaborate definition into your strong. Semi-strong, right? Okay. All right. So let me now, when I mean weakness, right, and strength. Okay. Weakness is when you are losing energy. Let's start from sensible little sense. And strength is when you are gaining energy. Okay. So when you are gaining energy, you are up. When you are losing energy, you are down. Okay. So if I'm asking you whether we are strong, all right, or whether we are weak, let's now consider what price is telling us so that maybe that will now make it sensible for us. So I'm going to use a tool called magnet to make sure that my price will be exactly at where I want it. Okay. All right. So let's do this. What price is that? Can you see that price? So we have a price of 1302. Okay. I like to put a little bit of sense into things to make it easier. So 1302.49. Great. So I'm now saying when we trade and we come down below this particular 1302, are we strong or weak? A lot of people said we are strong. All right. So let's look at this price where it traded to. All right. This traded to 1280.91. Okay. So when we put a bit of perspective into it like that, then we will all be on the same page. So when you're looking at 1302.49 and 1280.91, which one is more? That wouldn't be difficult to answer. Which one is more? Right. So when we now trade down below 1302.49 to 1280.91, are we strong or weak? Is that understandable? Right. Great. So this is how you look at strength and weakness. Exactly. All right. So sometimes it requires a little bit of teaching to just make life. All right. So on this particular month now, right? So we've traded below this low again to this level. What is the number over there? 1266.35. All right. And look at what gold is doing. 1266.35. Okay. So now we are just watching based on pure orders before we even apply technical indicators, so that when you're doing your analysis, you have a clear perspective of what is going on. All right, so at 12.635, is the gold market strong or weak at that low? Compared to last month, are we strong or weak? Weak. So very weak. You can see how the price is coming down. This lost almost about $20. That lost almost about $20 as well. All right. So let's now look at the next month, okay? So that you can see how things are changing. And then we got this particular low on this month now, okay? What is that low that we have? 1266.35. Sorry, let me do this. Bear with me a second. Connection. What is the low of this? The low of last month is 1266.35. The low of this month is 1266.34. Okay. Probably it's going to be making more sense now. 34. All right. So looking at that last 4 months low, are we strong or weak? The last two. I need to see the answers that's going to make me happy now, so that the weakness is slowing down. Okay, how well is it slowing down? It's at par. Okay, that's a good one. Where is Ajiri and Ajiri Anthony from? Nigeria. Interesting. Well, what part of Nigeria, please? I got quite no much of a difference. Oh, in Lagos. Interesting. Wow. Right. So no much of a difference. Okay. That is us just investigating the low. So if there's no much of a difference, what is that telling us compared to the way that we are seeing things coming down before? What is that telling us? Right. A reversal is likely. Okay. It shows the correction is almost over. Okay. All right. So everybody is contributing, and it shows the correction is it's about to be strong. Okay. Sellers are getting weaker. Okay. All right. So we've got all sorts of different kind of opinions, and it's preparing to be bullish. Well, that doesn't mean that it is bullish, but all we know that we can see investigating the price like this, and this is not just me saying that, yeah, look at the cross on the stochastic and this and that. We have not used any tool. This is just exactly market is stable. All right. So when you are having a balanced market like this, okay, it means that market is looking for a new information. Market has taken on board all the information that's available, and market is looking for a new information. And the way the market is going to look for that new information, it's either market will come down again to come and see if there are more sellers over here. But remember, market has come down 1 point, okay, below the last one to see whether there are more sellers over here. But what did the market make? The market met buyers, right, to push price up. Okay. So you've seen what this gold market is doing. I do not just have to explain it with my own mouth, but we are monitoring it, because what happens is this: once the price starts to move, all our mental thought process, we start running mad, okay? So we won't be able to put a process behind it. But now you have a process at the back of your mind and say to yourself that, wow, this is actually about to turn bullish. Some people says, the sellers are slowing down. So why would you be a seller in this market? Can you hear me now? And we've lost some recording as well. It should be recording. All right, so you can hear me. So at this point in time, I'll let us take a 5 minutes break, okay? Because we have a long way to go, all right? And I want to expose your eyes to beyond what you've already known, and then start to build that trading mentality into you and let you understand that everything is all about pure orders, all right? So that when you start to employ the tools, when you start to employ Fibonacci, you are not just employing Fibonacci, but you are reading the markets with a clear understanding, okay? So I'm going to let us take a 5-minute break, exactly 10 minutes past the hour. I'm going to come back, all right? And then we're going to start delving into this more. Let me resume recording. All right, so recording is resumed. I'll be playing some Napoleon Hills. It's important that you up. So wait a second. Need to put this on the charger.
Put yourself into a better circumstance. Two, it will place back of you that great natural law of increasing returns through which the service you render will bring back greater than average compensations. And three,
Sorry, I've been talking to myself. I realized that. Right, can you all see my screen and can you hear me? Great. Okay. So at least one person can hear me. Right, so please, this is the most important point where I expect you to pay attention. You see, I've said some few things just before now. Great. The most important thing for you not to have is for you not to understand how you get yourself involved in the market. It's got to do with what we call market structure. Okay, there are also different ways to teach market structure, but the understanding of it has got to depend on each and every individuals. When you get to certain level in your trading, you'll be able to understand more. I will show you this, say briefly. All right, so you see, we took profit on that. It retraces back to that level. A good place to take another entry and push it back up. All right, so this is what I wanted to say to you. Let's look at this. Session indicators. All right. Okay. Yeah, we'll get there. Don't worry. It won't be complicated. All right. So when you are, this is the same gold chart, but on a different time frame. Okay. On a completely different time frame. But what I wanted to show you is pretty simple at the same time as well. All right. So if we are following this chart, over the last 4 months, we are in May now, right? We are in May. So January, February, March, April. So from February, okay. So let's look at an important high in February. So I can see that high that we have in February. Just follow me, okay? So this is a trend line. I'm going to look at this. Let's just use the trend line to follow the market. All right. So what is this market doing with this trend line? Can you see what it's doing? So at a particular point in time, the trend line got broken. So what is this market doing down there? Audio out again. So, can you hear me though? Can you hear me? Oh, so downtrend, I cannot. All right. So at a particular point in time, that downtrend got broken. Yeah. And then follow it again with me, please. What is this market doing? Up. So over here, you start to go up, but remember, uptrend. All right. So we have a high here. Let's just put an horizontal line on that high. Okay. And that high, let's do it like this. Let's make it thick. Okay. And we've seen a low here. Let's just put an horizontal line on this low. Let's make it thick. So we are going up now, and suddenly we came down. Where did we come down to? Where did we come back? Where did we come down to? The horizontal line that we put on this low. Okay. All right. Can you see that at all? I just want to show you a process. All right. So these two horizontal line, I decide to put it in the market, and it's going to be our reference point. Okay. We will call it a reference point. Okay. So now we come back down to our reference point. Okay. What then tends to happen? On that reference point, price start to pick up back. Okay. All right. And then what did we have? we now see price is going down. All right, but price is not just going down. Price gets to our reference point and break it with, at first it didn't touch it, but when it break it with ease. Okay, and when it break it with ease, you can see the strength of the break right there. That's our reference point that we so much love and trust and believe in has been broken. Okay, so once that area is broken now of our reference point, what we are looking for is straightforward. After a break, is we are looking for opportunity to retest that area because it's our reference point. Do you know the reason why we choose it as a reference point? Because at that particular month, that's the highest point and the lowest point on the chart. So that highest point and lowest point on the chart is broken. So what we are looking for is price not to be able to go back above it and continue to go down. So did we get that? We went back again to test. So we continue to go down. Okay. So we are looking at this and we are monitoring the way that we go down. And then what did we have? We have a break of this again, all right, going up, but still below our reference point. And suddenly we see that we cross our reference point up, but not without a struggle. Even all around there, the first test, the second test, we see that we still cross it back down. All right. So these are all the challenges that we face in trading. How do we know the exact trade location? How do we know the exact place where we're going to be taking our trades? You know, but we've have a particular area that we are looking at, and we are using that area as a reference point. All right. So what reference point means is when we are below it, all we want to be doing is to be a seller. All right. So I don't mean that just because we are below it over here, start to sell. All right. What you want to be looking for is every retracement back up that will now give you the opportunity to look for sell. So when I said when we are below a trend, a particular reference point, all right, just because we've traded below it, we break it concisively. We break it with much conviction. What you want to be looking for is a possibility of a pullback up to resell. All right. So there are also different things that you will now apply to that pullback that will make it to start to become meaningful. Okay. So one of them can be, say, for example, I can see that some of the people here are selfish. They don't want to invite any other person in, which is not a problem. Get your knowledge. Then you can do this. All right. Let me just put this on top of it. And then we're going to do this. Okay. Right. So I put a 36 EMA on top of this. Okay. I just want to show you another thing entirely. But one thing I realized that me putting that 36 EMA, I can see that price can go above 36 EMA and come back below it, go above it, come back below it, go above it, come back below it. All right. So if that is not a sensible EMA for me to put, I can adjust my EMA for price to be exactly on the EMA. That will now be the EMA that go disrespecting for that point in time. So what I wanted to do is I want my EMA to be the EMA that will be bouncing price away from it. All right. So look at this 50 EMA now. So when price goes back to it, it bounces away from it, goes back slightly to it, bounce away from it. So I can still adjust my EMA again and say to myself that I actually want 60. I want gold to be respecting my EMA so that it can be a solid trading decision for me. So anytime we touch the EMA, we went down. We touch that EMA, it goes down. We touch that EMA, it goes down. So for this particular scenario, the gold market is actually respecting my 60 EMA based on the first touch, which we can see over here. I'm going to change this to be yellow. Oh, sorry, it's actually interfering. I'll change this to be red. All right, so we know that in that area, we touch the 60 EMA, we bounce back down. All right, So now I'm teaching you how to structure using your own mentality, not just what anybody say that this is what works. Now, if someone gives you something that works, it might just be working for that particular moment. All right. My standard EMA is 1236 200 EMA. Okay. But if I see that the market is not respecting it that much, I can look for a particular moving average that the market is respecting. All right. And then start tweaking your trading strategy. Okay. So one, respect; second, respect; third, respect; fourth, respect. Price is still coming down. So when we break it now, I'll be thinking, okay, all right. So that respect is telling me something else. Okay. All right. That respect is telling me something else. All right. So now again, we have that move above it. So I can be looking at and see again, 60 again, we respected it, we push back down. So when we break it again, I'll be thinking to myself, okay, and we are respecting it, bouncing away from it. Can you see that? Is that clear at all? Do you learn something new? Is that clear how to structure an EMA according to price, not just what someone gives you alone? Okay, so you need to start taking your trading to a different level. Is that clear at all, or are we lost? Because what is a moving average? All right, so let's look at a dictionary quickly. Okay, I don't want me to be the only one saying this. Moving average. All right. So one of them says a succession of averages derived from successive segments, typically of a constant size and overlapping of a series of values. All right, so in statistics, a moving average is a calculation to analyze data points by creating a series of averages of different subsets of the full data set. It is also called a moving mean or rolling mean, and it's a type of finite impulse response filter. Variation includes. So let's look at the Investopedia one, then I'll go back. A moving average is a widely used indicator in technical that helps smooth out price action by filtering out the noise from random short-term price fluctuation. It's a trend following or lagging indicator based because it's based on price. All right. So I believe, let me see. Which EME is this place? Again, please go over it again. Please, can you explain again? So if I don't prompt you or wake you up, you won't understand what I'm saying. All right. So what I'm saying to you is this: somebody can be giving you a particular strategy, okay? And that strategy might only be working for one thing, okay? And it can be an EMA strategy. How do you tweak your EMA? At first, the normal standard EMA that I use is 36 EMA for my retracement level. All right. The reason why I bring this up is because we are looking at the way the gold market is behaving. All right. Not because I want to delve away from it, but we are saying to ourselves that we have a particular reference point here. Okay. I know that people can be lost. Do you know where we get this reference point? That's the reason why I always cross check with you to see whether you are following or not. Do you know how we manage to get this horizontal line? That is key for me. Yes. All right. Okay, so if you remember how we get that horizontal line, fair enough. So what I'm now trying to say to you is this: when we break that particular horizontal line, that's our reference point, okay? Once a particular reference point is broken, you don't expect price to go back up immediately above it, especially when it is broken in this kind of a move. What is the name of a move like this? What is the name of this move like this? Can I get somebody that can give me an answer? Let me see how well you are learning. When you see a push down like this, what do we call this move? A perpendicular move down like that. What is that? Impulse. Okay. All right. So somebody says impulsive move. All right. So, but when you actually see a move, strong breakout, somebody call it a strong breakout. All right. All right. impulsive move. All right, so someone call it an impulsive move down. All right. Well, all of you are right, but what you can see when you see a perpendicular move down, all right, because you can see a move up like this at the same time, this move is an impulsive move. Okay, so we break the trend line, we start to go up, right? We start to go up. So if I ask you what is the impulsive direction, and we are correcting, but we keep going up, we are correcting, but this particular move down, this is called momentum. All right, this is, we break that particular reference point with serious momentum, especially when it is like one like this, when it is one like that. All right, that is momentum right there. All right, so when you have a momentum in the market like that, that perpendicular move down, momentum precedes price. What that means is if the momentum is going down, then you are expecting lower prices. Can you see? So it started from here, that moved down, okay, and then you are expecting lower prices. So we end up getting a lower price anyway, okay, after that momentum. So once we break a reference point, the only thing that you want to be is you want to be a seller if we break that reference point down. So I'm now saying for you to become a seller now you want to look for the right place for you to enter the market, okay? So when you are looking for the right place for you to enter the market to become a seller, then you want to start gauging where will be the right place to enter the market. And that's the reason why I employ this EMA of 36 moving average for me to look for an area of retracement, which means when price comes down, then I'm looking for price to retrace, yeah, so that it can continue to follow this momentum move down. Momentum, anytime you see momentum, just be looking for further price decline. Does that mean that it will always happen? Majority of the time, you have to remember that we are basing this on probability and percentages. It doesn't mean that 100% of the time that will always happen, but momentum always precedes new prices, okay? So the reason why I'm now bringing this up is once we've broken that area, if we are not part of the break, which majority of the time we might not always be part of the break, we now be looking for a way to become a seller, all right? That doesn't mean that after this happen, just jumping straight forward and selling. This is the time that you employ maximum patience, all right? So this move occurred just in London session, okay? And you did not see another move that will now prompt you to be a good seller until after the whole of London session finishes, the whole of American session finishes, the whole of Asian session finishes, and a new London session comes into play. All right. So the sellers that sell this down, they occur in the London session. Okay. We meanwhile, the sellers that are correcting this move, they occur in American and Asian session. When the London session trader wake up again, they be like, oh wow, we push this down. Look at what you've done. Look at the best you can do. The best you can do is you can't even take it up. All right. We are the one who started sell off. Right? The ball is in our court, we will sell some more. All right, so they continue to sell at their session. Meanwhile, American session, we did not start the selling. Asian session, we did not start the selling, cannot bring about a continuation. The continuation continues in the London session, okay? For this particular first break, right? And then the retest and then continue move down. All right, so what I'm now trying to say to you is if you are looking for a proper retracement level, not just because of someone give you a strategy. You have to have a mind of your own, all right? You have to be able to take responsibility on your own. All right, so we're looking at this 36 EMA, but what I can find is this. Please pay attention because this is the question that you ask, all right? What I can find is this. Am I going to be able to trust this 36 EMA? Because when we break down below the 36 EMA, I can see that price come back above it, all right? But what I don't want to do is when this price comes back above it, I just don't want to jump and become a buyer over here just because we break one EMA, all right? So I have to see the way price is actually working. Is it working with 36 EMA or is it working with another EMA? Which means all these averages, when we calculate it together, which particular average works best to hold price. So 36 EMA is not able to hold price easily. Price is still breaking above 36 EMA, which means something more or better than 36 EMA is holding price. So you will start tweaking. You change this to maybe 50 first of all, and you look at it. All right, so price came down, and then at 50 EMA, we bounce back up, but we break above 50 EMA. All right, so if I'm saying that my strategy is anytime the EMA breaks, I'm going to buy. Then when we buy over here now, price breaks down back below it again. All right, so I will encounter a loss on that particular buy. All right, and then I will have to change my position and start to sell again. Even over here, price cross it again. Am I just going to jump in and buy? Okay, so if I buy, I would have encountered loss, and then price comes to start to come down and start to break down, which means if price break down back below the EMA, simple strategy, I want to close my position and start to sell. All right. But I don't like all these fake outs, all right? Fake outs above it, fake out above it. I want something much more sensible. So I wanted to change my EMA to see whether I can grab something much more sensible to 60 now, okay? All right, so this is just a strategy. So you break down, you come back to test the 60, all right? Price move down. So which means we never break this above the way that we have it on 50. You come down, you come back to test the 60, 1 or 2 candles after price breaks down. Test it again in 1 or 2 candles, price breakdown. Test it again in 1 candle, price breakdown. Test it again, right? But we didn't even go above it, price continued to break down, all right? So I've seen that the first test, we break down quite fully well. We move severely down about 1,100 and something pip. The second test, we break down again, right? So about another 1,500 pips. The third test, we have first test here, we have second test, third test, fourth test, even we break down. The fifth test, we break down again about 800 and something pips until we now cross it. And then we are looking at this area, it's like also different kind of indecision. We break it back up again, we start playing that game, but we see that we start to respect it. So tweaking your EMAs can provide a valuable direction for you when you are trading. If this is a little bit advanced, don't worry, we will get there. So let's just concentrate on our reference point before we digress so much. So we break this going up, all right? And then we start to break this going back down again. All right, so we are looking at this now on the downward trend. But what we are paying attention to is our reference points. All right, so we break down, then look at all this madness that's happening around our reference point. But the moment we break down seriously below that reference point again, another opportunity for us to take a trade. Okay, so when you have a reference point like that, you are expecting also of different kind of reaction to be taking place in that reference point. So around your reference points, you want to be careful because of choppy move. All right, so from this low again, after we break down, price start to move back up. All right, price start to move back up, and then what did we have again? Now look how well we move back up. When we get here, we couldn't hold it, and then now we broke back down below that reference point again. All right, so now that we are below the reference point, okay, what are we looking for? We are looking for price to either to continue down. We have a momentum breakdown, isn't it? This looks near means a momentum breakdown. All right, we have a momentum move up, okay, we have a momentum breakdown. So now that we have a momentum breakdown, we are looking at our price to continue to go down a little bit. All right, so when price is going down, just because of us employing this trend line and using and following things, right? When price is going down, we are still looking for another reference point down, all right? So what will be our new reference points down now? Where is our new reference points down going to be? Where is our new reference point down going to be? So we are in the month of April. This reference is for February that we've chosen. Now we are in the month of April, the lowest low, okay? Exactly. Thanks. All right. So that will be your reference point. Why am I showing you this? Why am I showing you this? It's so that you can then know where you want to be approaching your trading. You need to have a reference point in the market. So everything over here, all this madness, you don't want to deal with it because it's going to be choppy around it. When price comes down back here again, you want to be looking into it. When price come back up here again, all right, you want to be a buyer, but you want to be a buyer when you see that retracement down. All right, so let's look at this. When price comes up, all right, you want to be a buyer just because we've traded above it. But the moment price comes down below it again, you are thinking to yourself, hey, now is the time that I want to be a seller, you know. All right, price do another thing, go up. You are looking for that particular move in this area that will turn this area into a support zone. And you have to wait for it, because if you don't wait for it, you won't be able to capitalize on this move. Okay, you will be looking at this, jumping in, and to be honest with you, you can be jumping in knowing well where your reference point is, so that you know that when you jump in to buy, just because we are bouncing here, you have a small stop just below the reference point. There's nothing wrong in that. If you cannot accept loss as part of your trading strategy, okay, then you won't be able to make profit. So what reference point does for you is it gives you a very small risk, okay, such that you know that when we break it down, now I'm not going to be a buyer of this anymore. I want to take a small loss. All right. So it might take so many times of you taking a small loss, but the actual time when you're going to take that big gain, we cover all the small losses. That's what reference points does for you. All right. So look at the kind of losses that you can be encountering when price comes down here. All right. So you have about 182 pips, and then you have to the upside 800 and something pips. All right. So what am I teaching over here is this: anytime price is going to your reference point for the first time, look how we are approaching this zone now for the first time. You want to be a buyer because you're expecting it to be a support and it's going to bounce from it. Okay, so going back to that reference point, you'll be looking at here that price is going to bounce away from it the first time, and it surely bounce away from it, okay, before you end up the second time. It's not going to be a good time much more than anything else. So you have to be checking frequency of time. Look at when we break down below it again. The first time when we get to there, we rejected it, isn't it? All right. So subsequent second time is a different story entirely, you know. So, but once you can see that we are having significant move above that reference point, this is just the first eye. This is a new eye. This is a third eye. Everything is showing you clearly that, okay, we are progressing higher. It's a time for you to start looking at the upside of the trade when you see any sell-off. All right. So when we're seeing sell-off coming down to this area now, just before we break, okay, a lot of people will be preparing to be a buyer. All right, because this is the other time that we are seeing this move again after a couple of days. All right, a lot of people will be preparing to be a buyer. If they buy this particular price here, I'll show you the only reason why you're not supposed to be a buyer as well. If you're buying this particular price here, then if price breaks, then you have a very small stop just because you have a reference point, and it's a big time reference point. Okay, so reference point is very important. The only reason why you won't be a buyer over here is, look at this. What is this? I, right? What is this? What kind of eye is this? So the market will be telling you a story. Compared to this high, this is a lower high, okay? And gold does this a lot and lure people in. Compared to this high, this is a lower high. So you have to be understanding your market. Then you have a break of this particular trend line, say for example, and then you make a new high. Compared to this high, this is a lower high, okay? So you don't actually want to be buying when you are seeing series of lower highs. This will help you in your trading decision. Please, the reference point is taken on any time frames, or it must be from higher time frames. So we will go into that as well, okay? I'm just using this as an example. I will show you where your reference points are in a minute. There's a reason why we come here, all right? So when you're seeing higher highs, sorry, when you're seeing lower highs, lower highs, break down lower highs, you don't want to be buying this zone, because you can see that the pressure is to the downside. Not just the pressure, each and every time that we attempt to auction higher to take a new high level, right? What we tend to find is there's no more orders that can push price up. So if there's no more buy orders that can push price up, what you're going to be seeing is price will be going down. So we try again to push price higher. There's no enough buy orders to push price up. So if that is not available, it's just signaling to the sellers that it's the time for us to operate. We try to push back up. There's no enough price that can push price up. So if that is not available, it's signaling to sellers to come and take over. So the sellers will keep pushing the price down, and they will even want to attempt to push it down below here, or possibly break down here as well. This is the current situation that we are seeing in the market. All right. So that is for gold. But before we go away from it, now let's go back to where we are over here. Sorry, I'm taking you through the journey. All right. But don't forget that this is those entire journey of up and down that we are seeing is still in a big correction phase. Okay. So what I've done for you over here is for you to see where your reference points are and how to get them on the daily. So if you look at here, 1302.49, okay, come to this particular chart now. So I think for one particular reason, we've deleted something around there. Let me look for it. No, we haven't. All right, so we have 1346 over there. Okay, that's a particular high. And then in this zone, we have 1281 and we have 1266. All right, so 1281 and 1266. Remember our 1266 right there. I remember our 1280, which is almost 1281 right there as well. Can you see that? All right. So where did all those points surface on this particular small charts, 30-minute charts that we were working with? Where do they surface? They actually surface from our monthly highs and lows. All right. So that's the reason why we use our monthly highs and lows as a reference point. Not just a reference point, but an important point on the chart to make an informed decision. All right, so the simple rule behind it is once we're going below one particular low, which is where we started from before we digress, okay, that is showing us weakness is continuing. All right, weakness is continuing. Weakness over here now looks like as if it's balancing. All right, so we can see on a higher time frame that weakness is balancing. But what we don't want to do, the sense that we want to have behind this is today is still the 18th of the month. All right, so this particular monthly candle has been closed as it's this week close at the end of the month. Okay, that's the reason why I'm saying, yeah, towards the middle of the month we are seeing balancing coming into play. All right, and the moment you start to see balancing coming into play, your reference points now will now becoming much more meaningful, which means what you are looking for is possibility of price. If this is going to continue to be a trendy move, you want to break this 1266 zone. All right, we've turned it into a support twice, last month and this month. All right, so the moment we are breaking 1266.35 down, that is the point whereby you want to be a strong seller. And you're not just going to be a strong seller if you're not in the market from here to take this down, right? If you see the break of 1266.35 or 1266.34 down, then you are saying to yourself, I'm going to be looking into my smaller time frame, okay? And I'm going to be looking for this opportunity. Remember, the first breakdown, okay, you are looking for a retracement back up towards it, and then you want to take this opportunity back down. That is just a secret sauce right there. There's no need to crack your brain or worry, because now you have your reference point. Now you know what can possibly happen at that reference point, and then now you're going to be dealing with that. So that's one possibility, okay? Have that at the back of your mind that we can actually see the break of this zone, all right? And then we can see a retracement back up, okay? And now this is a high probability trade for you, all right, to take it down. So once you're seeing that break, you are switching straight forward to your smaller time frame to look for that retracement, okay? And that retracement is an opportunity for you to take it down. But if you then see a move like this, that breakdown, and then you start seeing a move back up, okay, back into this 1266, your bias is changing because you are now watching a smaller time frame. You will see a move that we want to come and use it as a support, all right, and then start to take it back up. Are you there with me? Are we lost or are we still on track? Are we lost or are we still on track? All right, so Leah is there constantly. Thank you for being very interactive. All right, on track at the same time. All right, so now you know your reference point that you're looking for in the gold to the downside, okay? To the upside now, whether I'm there or not, let me delete all this before we now delve into gold deep down and look into further technical analysis into it, okay? And have a clean chart at least, okay? What I'm gonna do is I'm gonna make this much more smaller. I want to see a clean chart and give you a proper sense behind gold so that you can know all your reference points and where we're gonna be playing this and going forward into the future. Right, so this is smaller, all right? So we know all our numbers. This is where we're going to be finding all our entries and exits based on this monthly chart. 1266, 1266, 1280, that particular low, and all this low, right? Because market is showing weakness and pressing down low. So we'll be very careful going forward. All right, so all that lows, those are lows right there, okay? And then what is important again are the highs, all right? But one thing I realize is before we get to the highs, we have to take off these lows, okay? So based on the structure of this particular market right about now, that things are pressing down. One thing I realize is a lot of people will be buying this low of 1235. That's what we have. The moment we went to go and test it at 1234, what we then see is price comes back up. So let's investigate that a little bit, right? Let's quickly investigate the last time we come to this low and see how the market actually reacts on a smaller time frame. All right, so this is what I'm going to do. Let me go back to monthly and have a horizontal line, sorry, a vertical line behind stuff. All right. Let me quickly show you this so that we can have a clear view of what we can. So you come to this tool, you pick your vertical horizontal line right there, right? We want to investigate this area on a smaller time frame. So 5-minute chart, or let's say 30-minute chart, sorry. So what I want to show you how to use your multiple time frame, okay? So we are looking at weakness on the gold chart, right? Just with what we've done. This is the low that we are talking about, all right? And this is now how to use the alphabets of the charts to capitalize on the market, right? So the first time we got to that particular low, what kind of candle is this that actually touched that low? Can you see this candle? And what is the meaning of this candle? So I want you to be speaking my language now, which is a language of understanding. All right. So what kind of candle is this? And what is this candle telling us? Because when you know what this candle is telling us and you have the right definition for it, you will believe in it. You will wait for it. All right. So what kind of candle is this? strong armor. All right. So somebody says strong armor. All right. So why is it important? And I'll give you the sensible clue behind it. All right. It's a reversal candle. Okay. All right. So those are the definitions that you actually have based on the textbook. It means buyers are ready to come into the market. Okay. All right. But the actual thing that's happening is this. You see this large influx of sell orders. Okay. They are caused by sellers pushing the price down to a particular zone. Okay. Right. So at this particular zone now, right, they met aggressive buyers. Okay. And how are you gonna know? So you can call this candle armor or whatever, but these are actually the presence of aggressive buyers in the market. And what they tend to do is they will create a tail. All right. What is a tail? A tail is this long wick that you can see. All right. And then over the last period of 1, 2, 3, 4, 30 minutes ago, no other price trades within the region of that trades. It's just the tail alone, all right? It goes deep down below this low, all right? So 30 minutes, no other price was able to investigate this level, all right? And then the aggressive buyers were hiding down here, which is slightly below this level, okay? Which means they know about this level, but they are hiding slightly below this level, and that's where they capture all these sellers, and they have huge forces behind them. They have huge amounts of money to be able to buy anything that you're selling, and you will find it difficult to return price back there, down there, all right? So this is an aggressive, responsive buyer responding to lower prices, okay? The way the price is falling down, these are responsive, aggressive buyers responding to lower prices, all right? So they took away every single impulsive selling opportunity, right? They capture it and they push the price back up. All right. So when the sellers come in, immediately, again, to be like, man, that can be possible. Okay. That can be possible. All right. We're going to show you who's got a strength over here. They push it back up again. They show the sellers that there's more money in this market for us to buy every single thing. We're actually tired of your crap. We are taking this up, and there's nothing to stop us from doing it. So understanding this, all right, and the other parameters that comes with it, which is other candles beside this, they were not able to investigate lower as much as this investigates, and then pushes price back up. You can see the last area where this particular candle investigated was just right here. Let me make that black. All right. And then I guess was just right there. All right. So knowing this low and price going down below this low again, and the moment you are seeing price coming back above this particular low is what we call crack. Yeah, we crack this particular support and snap back above it technically. But what happened is we have aggressive buyers that are more than happy to go below this low and look for opportunities. And they push price back up, and then the sellers come back in again to continue to do their thing. And then the sellers find support back where they last acted. Okay. So over here, a lot of profit taking, a lot of stop will be triggered. All right. So all are above over here. There are so many stops that will be over here. Once you trigger those stops, right, that is an opportunity for more buying, strong buying that comes into place. Trigger those stops. It's not just more buying. The stops are triggered with a buy orders. Remember, when you are selling, okay, for you to have a stop in place, your stop is going to be a buy order. All right. So the aggressive buyers buying, the stops that are triggered all above here at the same time is a buy order with the aggressive buyers buying in the market, help to push this price back up. All right. All right. So when the price got pushed back up, then we have what we called a balancing out again, whereby the sellers want to see whether they can still try their last push. So they push down over here, buyers come in, they continue to push down, but they couldn't go below this level of where the aggressive buyers are holding, talk less of coming down here. All right, so that's one point. The next point is this. Look at the second time that we are coming back down there. So it shows us that these same buyers that are in the market over here, right, they remain consistent with their pricing and they are here at the same time again. All right. So what they want to do is now they want to take away all the stops that's above here, so that if they are able to take away that stop, you can see the influx of buyers coming in. So they didn't get it at first, but they continue to maintain. And then the second time when we saw a push back down into their region, they just take away the price and keep pushing it up. All right. So when you see a push up like this with a gap, that's showing you that there's a huge excessive buying orders in the market. All right. So that gap there, right, if it fills, it's just showing you that, okay, that excessive buyers in the market are corrected. That's the reason why you see it's going through tough time before it can push back up again. If we do not close this gap, then you see serious move up compared to the move that comes down and close the gap. All right. So each and every low is important for you. But you have your big reference low down there, all right, which you're going to be making reference point to. But look at this low over here as well. What you are looking for in a low is to see whether you can get continuation, all right, or no follow through. So this is a low for me right here. I think I was buying the gold somewhere around this low as well. So what I saw is I saw a move back down to this area of low, which is going to be a tiny reference point for me. So after that move, I'm expecting there to be follow through because we've closed the gap already. So I expect that what we should see is further selling pressure should come into place. Then I see that, wow, okay, we are not actually seeing the selling pressure. The next candle that we see after the first break is forming a doji. The next candle that we're seeing after that, a gravestone doji, is another candle that's pushing back in. If this is going to give us a follow through, it should be a strong follow through, and you can start to buy back when you now snap back above this particular low. So probably you are lucky you've taken some profits in some region. If you haven't, price come back to retest, and this is now where it becomes a good feel for you. That retest again that fails, and but acknowledge this low, is that push that goes higher. So all right, so all this haven't been said, all right? Let's go back into our monthly chart and show you what I wanted to show you and how to read the market and reading it sensibly, so that by the time you are employing other tools like Fibonacci, it will be making sense. So our conclusion already on the monthly is we know that we are looking at possibility of what? Let me delete this. All right, so we know our reference points on this monthly chart. We see that the price is currently balancing, and the balance now, what we don't want to see is if this is going to go down, we don't want to see price coming back above 1280.91. All right, if this is going to go back, we don't want to see price coming back above 1280.91, because the moment price come above 1280.91, now we are looking to be a buyer, which means we'll be looking for an opportunity like this on the smaller time frame. All right. So all your reference points will be doing for you, will be guiding you. We'll be looking for an opportunity like this, break above it now, retest possibly. And then this will give us a frame of mind into what we are looking for in our chart. So we are looking for this opportunity. We break back above 1280. We're looking for a possible retest and then to take price back up. But if we break back above 1280, right? And then we look at the first 30 minutes, the second 30 minutes, and we are breaking down back down, all right? That is a good opportunity for us, whether we get a retest or not, all right? These are all possibilities in the marketplace for us to continue to take things down, all right? So you can have a move back up, right? That will give you a continuation to the upside, and you can have a move back up that will give you a continuation back to the downside. When you have a crack and snap back up, all those are possible in a chart. So you just have to watch out for it. If it's not going in one particular direction that you want, it's definitely looking for a possibility of going in the other direction. All right. So having this knowledge, having this thoughts behind your thought process, and knowing fully well that we are in a weakness, although that weakness now is turning into a balancing out. Okay. Now you want to monitor for continuation. All right. You want to monitor for continuation. You want to monitor for price continue to go back up. All right. But before we can see that, we have a reference point of 12.8091. Before we can see that, remember quite fully well over here, we have this reference point 12.81 at the same time before we can see that move back up. All right. So you're not just going to go into the market on Monday thinking fully well that, yeah, Bola has given us the source, but this source right here, look at where it is on the smaller time frame. This source really needs to go back up and establish a sensible break and retest before you take it back up. This source really needs to do this, come back up here, all right? Give us this, okay? And you see it in the marketplace so many times before we can see that up move, all right? And the same thing applies over here. Let me show you briefly. I've shown you a while ago, but I'll show you again. When we were looking at that. So when I mean a retest, it does not actually mean that it might come back to that zone. It might not come back to that zone, and it might all right, I think this is a particular one that I'm talking about. Right. So we break up, we saw the retest push back up, try to come down below it. All these are retests, crack that particular low, it can be cracked. So don't be adamant on it has to stay on top of it. Just watch what other candlestick. All right, so let's investigate this quickly so that you can have a brief sense behind it. So price has broken up, okay? This are area of let's assume this are area of resistance that's broken. Price has broken up, all right? We saw a retest of that zone. What are we going to be looking for? Remember, momentum does what? What does momentum do? Are we there? What is this move right there? Let me see who is following. If someone, thank you. Oh, wow. God bless you. God bless you, Ade Eric. Who is that? Where are you from? It's are the kind of people that makes me just want to do this, right? Momentum, right? This is your momentum, your 90-degree perpendicular move. Sometimes on a chart, if I'm just less busy and I don't really want to stress myself, I'll just be looking for momentum, right? Because I know that I'm definitely looking for higher prices, okay? So momentum, I've seen that, oh, I'll be like, okay, I'm looking for more precise preceding prices. Look at this. Momentum, okay? You'll be looking for further prices. If you don't get it, this is the time whereby you will now be using your momentum high and low to enter trades. I'll teach you that style as well, all right? All right, so look at this momentum now, okay? Momentum over here. I'll go back to that momentum as well to show you what I need to show you. This is the high of this push-up, and this is the low of this push-up, all right? So what you don't want to see is you don't want to see price coming down inside the momentum, because the moment price starts to come down inside the momentum, right, is showing you that we are declining. All right, so there is two sides to every story. Momentum, we saw that huge momentum precede prices. Okay, we got that. Our stop will be the high of the momentum. All right, so we don't want to see price coming back down inside the momentum, right? We want price to continue to go up. So price starts to come back in We are now looking at this momentum high. Can you see the way price is using the momentum high zone, all right, on this particular disturbance candle that stops the whole of the momentum, and price is using it to be what? Look at the way price turned that into a beautiful resistance. Breakdown, resistance, breakdown, resistance. See how price is showing you that, no, I'm not happy to go above that high anymore. So all those momentum was now what? Reversed all the way back down. But usually momentum always precedes higher prices. You see the higher prices, right? All right. But where did it stop again? Can you see our reference point right there? Can you see that that's where it stops? So this is the reason why you need to have reference point in the market. This is the reason why you need to know where to get your reference point. Look at here now. The reference point was broken sincerely well. All right. So now we are looking for price to come back up to this reference point and do this. This is where the orders is going to be aiming now to come back up to and do this and go back down. All right. Or price is going to go back above it, back into our where is this? Do you remember this place? This is the place of our momentum high and low. All right. Price can come back here, see what it's doing up there, the way that it's playing this momentum high and low. Don't think price has forgotten. It didn't. All right. So can be doing its madness and can be coming back down to it again. All right. If it's going to go up. Now, price has formed a reasonable level for it to be doing all the kind of playground that it's going to be playing. All right. So these are the kind of things that you'll be looking for in the marketplace, especially when you see momentum. And this is how to trade momentum. You can trade momentum in a crack and snap method. You can trade momentum for follow through. Okay. And this is the kind of things that we are seeing in gold. Look at that momentum. But just before we get delved into that, so the first break of our zone, all right, what are we expecting? Retest back into that zone, price to push up higher. Retest again, push up higher. Coming back now, look at our zone right here. Look at what price is now doing to that zone. So if you have this, yeah, coupled with other things that we're going to be teaching, you can actually see clearly what price is respecting and why price is respecting that particular area. That, right, okay, I have my monthly highs and low over there. Okay, now I can see candlestick patterns of rejection in those monthly highs and low area. You remember, can you see this clearly? Can you see this blue line? You and I know where we get our 121891, all right? And that is where we are bouncing off, all right? Doji, these are bounce, all right? These are areas where we are seeing that price gets back to that area. What we are expecting is a break or bounces. So when you're seeing those bounces, you don't have to worry, and look at how low the risk is at the same time as well. Just because we break up above it and we're coming back to it, look at how low the risk is. The risk is actually very low to all these bounces, all right? About 38 pips, 40 pips worth of risk, and then you can have all this level of, sorry, 1 second. So from this zone, from where we have our standard, what's it called? Our standard, how do I put it? Our reference point. So from our reference points down, that's about 150 pips or 15 pips, 150 points, or let's say about 20, you know, which is sensible. Those are the kind of risk points that you want to be getting around your reference point. 16 pips or 165 points, and then you are making 700 and something points. You extend it, you know, this keeps you in the market and takes you to about 2,249 points. This reference zone keeps you in the market. Once you are above it, then you want to be a buyer. Once you are below it, you are looking for sell opportunity. So now we are below it, okay? We are looking for price to, and this is the first time that we break it. We break it with what? Remember, what is this? What is that again? That perpendicular move, what is it called? And you can see quality in them more than the others. What is it called? Are we there? Or we are sleeping? We gone? Momentum. Great. So you see momentum, it precedes what? So you are looking, what are you looking for now again? At least, what are you looking for with this momentum in gold? Which direction are you looking for? Down. All right. So, and when you are looking for your downward trend direction, what do you want to do? Now you are looking for retracement. All right. So let's assume I bring up this particular. So we respect the 36 over here. We respect the 36 over here. There's possibility that we might respect it when price is coming back down here. So look at where our 36 is. Look at what we have in our 36. We have the 1280 zone in our 36. All right. Right there. Price may get down there. All right. The other place that price may get down to is this, our black trend line. Or sorry, our black horizontal what? This is an horizontal support that is broken, that's now turning into resistance. All right. Remember where we got that. Price bounces a couple of times around there. Look at these data points right here. So we have one data point right there. We have another one right there. 3 times. What of it bounce? Okay. Look at all those data points. That is where price is currently. So we might see possibility of price going back to this 36 EMA and bounce back down. All right. We might be looking at our full volatility EMA, and that may hold the price in conjunction with all these data points right there. All right. And price continue to push back down. Okay. All right. So we have all these possibilities in place. So overall, we don't want to see price above this level, talk less of going above this level. So we know where our risk point is. So where our risk point is, we be maximum inside there, because the moment we break above here, now if we break above here bullishly, okay, the first thing that we want to do is we're not just going to buy as well. Remember what I told you. Look at this eye, look at this lower eye, look at this lower eye. All right. These are safe points in the markets whereby you want to put your trend lines on. Okay. So the price itself is showing you how it wants you to play the structure. Okay. And then the next thing is you want to look into this inner trend line at the same time. Okay. And the price is telling you, remember, we are balancing out. Okay. So to balance and change direction is going to involve a lot of efforts. Look at this zone over here. So the ultimate move up will be when we actually break above all this zone to the upside. All right. So we have a lot of balancing to do, which is what we are doing right now. We might see price come all the way back down there, all right, to this particular level, and then it will be easier for it to break this trend line and continue to shoot up. All right. When it shoots up, it's shooting up to this level, right, where we can encounter another sell-off slightly a little bit and use all the zone around there to do what? To find support. So we can see possibility of this. I'm coming. Let's look for this. Come on. Let me delete some. So we can see price moving down like that to that area before it starts to break up above there. Well, let's investigate this now. All right. Look at what I like the most. And this is the reason why I love doing my charting. I love doing my, so I'm going to delete this, but pay attention to it. I want to show you something that is beautiful on this chart. Okay. So for some of you that has followed my technical analysis classes, your analysis should be 90% more of the time. So momentum precedes that. Can you see this move down? Okay. So we can have what we called an A to B, B to C. A to B equals to C to D right here. So look at this move down. This is the move that we have. This is your impulsive move down. Okay. Then we have this particular move now, which is the correction. Okay. And then we have another impulsive move down. Okay. So normally when you have a pattern like this, it's more or less called the A to B equals C to D pattern. All right. It's an equal measure move that you are looking for. So what I'll then do is, give me a second. I want to see whether this move that we have here, I'm going to clone it. Okay. So have exactly the same move and see whether we are getting the same move on this level here. Okay. So if we are getting the same move on that level, that is an equal measure move from here to here. And then we saw this move down is almost equal at the same time. Okay. So that's looking like an equal measure move to me. Now look at what I'm going to do. So if this is an equal measure move, normally what tends to happen is I want to know where this is going to be my A to B, okay? And this is going to be from my B to C now, okay? And then this is now going to be my C to D. So say for example, this particular move, you can see how this is going to be the A area. Now we are delving a little bit into technical analysis. I've taught this is in our YouTube channel. All right. See, so that when I continue to move back on now, so we have A to B, B to C type of a move over there. But how do we measure this? Now we will use our measuring tool called Fibonacci tools. All right. So if I put my Fibonacci on top of here from that A to B level, okay. Normally what I'm looking for is ideally I'll be looking for 38.6% retracement minimal. 38.2%, sorry, retracement minimal. So we have this move here. I can see that we try to push into the 38.2% zone, but we didn't actually get there. But what I would then do is I want to measure that particular small move that we have as well, which is going to be the B to C move. All right. Don't mind my Fibonacci tool. It must be very complicated than yours. All right. So what we are looking for is this B. You can see where my 1 is, right, at the low of the B, and then my 0 is going to be exactly at the high of the B. All right. So we are looking for minimum of 1.618 to 2.618. Where did we stop? Can you see where we stop? Where did we stop? So for our A to B pattern, A to B equals C to D. All right, so we'll be looking for B to C at between 38.2 to 78.6. Ideally, 61.8 to 78.6. Okay, so now we're going to be looking at C to, we want B to C to give the extension at 127.2% to 161.8% to 2.618, sorry, to 26.1.8%. Right? So when it comes to using your Fibonacci, all these are important ratios that you can be looking for. Let me 78.6. All right. So now that we are getting to 2.618%, the gold is telling us a new story that, well, the end of the A to B equals to C to D pattern is in play, all right? And usually at this D, what you will tend to find is under the 2.618%, you can find a small risk point, okay? You can find a small risk point, and you now know your risk point to be this particular low over here, all right? Because what this tends to give you is it will now give you an opportunity to play the move back up. All right. So we are actually approaching an area whereby we may see a move back up. All right. And we are approaching an area whereby, look at all these supports. The moment we crack back above all these supports, all right, that is the beginning of a continuation to the upside. All right. So price has already broken it, but look at what we are having. So I'm going to remove this, or before I remove it, on that last leg, do you see this move down? Can you see the move down? Can you see the retracement of that particular move down? What do you have here? So this is a, what kind of candle is that? Am I the only one here? Are you tired? You want to get some tea? You want to get some sleep? Wake up, guys. Amma. All right. So you got an AMA. What did I tell you about this particular AMA? Especially when you don't have any other candles that trades into where it is trading. What did I tell you about that AMA? Look at the last low right here, right? Look at how they probe down below that low, okay? And they are hiding underneath that low. Each and every time you want to be that person that is hiding underneath the known low, all right? That's where you want to be hiding, especially when you now know that you have your 2.618 to aid your buying sensation, okay? All right, so they are there hiding below. So the ability to see, you can see when I'm talking about field of vision, the ability for you to see things earlier. Come on, leave me alone now. I need the ability to see things earlier. It's a great advantage for us because we can see and we can apply sense into what we are seeing. All right. So we remember that they are balancing out. We know that price can come down to this low, okay? But just because they are balancing out and we now have a pattern that is confirming A to B equals C to D, all right? We know that this can be our risk points right here, okay? So there's nothing that's stopping us from being a buyer and then put our risk just below here. It shouldn't be more than here, all right? So that you know straightforward, if price break down below here, you are saying to yourself that, okay, I'm wrong, I'm more than happy to be a seller, all right? Because you have every single thing that's going to help you to make sure that this area is protected. And if it's broken, then you are now looking for opportunity, you know. But if you're not in the market to be able to see all this opportunity, you won't be able to take them. Okay, so now we have a low risk point just right below here at what is that particular low? 1274.89. All right, so stop loss equals 1284 dot, let's say 50. Okay, and then now we can say to ourselves that we can buy points anywhere now when the market opens. You can even try it on your demo account, while I'm going to be trying it on a live account, just because, let me show you the reason why I'm going to be working this on a live account. So we have this impulsive move down. We have that particular support. We have the aggressive bias hiding underneath our support, making what? 2. We have the 2.618. Okay. We have the move up. All right. Remember, the trend is still down, so it's going to take things to shrug a little bit before things can happen. All right. But we managed to push up above all these highs. All right. Which means there will be stops above here that will be tripping for us to get further push. All right. So look at what we've done. When we move down, we literally bounce back up. We find aggressive buyers coming in. We looking for the sellers to push price back down. They fail to push price back down. The buyers take advantage and trip all the stops above here. Even if price is coming back down to all this level, we know where our aggressive buyer is, because we can find a second support level closer to here. So we don't want our stop to be exactly on this low. Okay. 1 second, please. We don't want our stop to be exactly on this low. We want our stop to have a little bit of room. All right. So have a little bit of room, which is going to be probably below here. $1274.92. You can put it at 50 or so, just like, or even 40. All right. So that if price is coming back down, and if you don't want to trade it for now, even if price is coming back down, you are just watching for this low now to see whether they will be able to bounce off this low, which should be what they should be doing. And then obviously, if they are able to bounce off this low, then price will continue to go higher. You have every single thing to aid this trade to at least push back up above here and push back up to that level. All right. Buy points at any time, at anywhere now when the markets open, as close as possible. If we retrace back to 261.8%, all right, and then obviously, which is around there, even 126.74, all right, and then obviously target profit will be minimum 1280.91. Okay, and then you have another target profit up above TP1, and by that time we are even expecting price to have broken this trend line upside. All right, but the pressure is to the downside. Don't forget, just because we are balancing up, we are expecting possibility of what? Bullishness returning back into the gold. Does that bring a clarity into what gold is doing currently? PP2 is equal to 1283.09. All right. And if we don't get that move, the next move that we can get, let me. Right. So if we don't get that move, say for example, the inevitable happen and we break down, we're still looking for 1266.34 area. All right. We're still looking for 1266.34 area. All right. So having said that, what I now want us to look into is, do we have any other thing that will aid our buying decision? Okay. So we've looked into a couple of possibilities. Do we have any other thing that will aid our buying decision? So when we are looking at the charts now, we are looking at we've seen the monthly. Okay, we are looking at this chart now, and I'm going to be looking for possibility of, if I'm looking for bullishness in the market, right, I'll be looking for possibility of a M-shaped harmonic pattern. All right, so I can be looking at that particular location where I see something like a M. I don't like this. I don't like this. I'll be looking at that. Give me a second. Don't want this to keep staying in drawing mode. I'll delete that. I want to bring this down to here, okay? And I want to see the possibility of what do I have here, which is the B point, which is 44, okay? So the only thing that I might be looking for over here will be what? A shark pattern or a cipher pattern. All right, but in this case now, just because we've gone a little bit above 1.618 from a shark pattern, then obviously this is not a valid shark for me. All right, that will now be me looking for possibility of adjusting my position. Let me do this first of all. Well, so the first target profit is here. Sorry, 1280. You have it here as well. 1280, 91. It doesn't have to be exactly on that point, because you should remember that there will be so many reactions on that point. All right, so you can bring it down a little bit just for you to get it. Momentum, precede price, come back up here. So I'm looking for other things to aid my thoughts. And I have 28, so that's not deep enough for me as well. So I'm not going to take this one. I can look into this again. Yeah. Let me look into this like this. 1 second. Now the 82, if this is a shark, it's 8.6. Well, according to the ratio, it is not a shark. All right. According to the ratio, which is the one above here, it is not a shark pattern. We need a maximum of 1.618. If this were to be here, now, then this would have been a sensible, valid shark to me. But for now, it's not a shark pattern. What I'll be looking for is, I will go now into, say, for example, let me look for 15 minutes time frame to see if I can find something smaller that can aid my sense of humor. So these are the distinct points on the chart. The retracement point. There's nothing on 15 minutes. Let's go for 4 hour first of all. Okay. So on this particular 4 hour, what has been happening is this. 56, and we are looking for 78.6. Wow. So this particular fall is actually triggered by one harmonic pattern, and that harmonic pattern, it's a what? It's a bat. Sorry, it's not a bat pattern. What is it? It is a bat pattern. Don't get confused, because I'm expecting you to say something contrary. All right, so this particular move down was triggered by this harmonic. Right, at that particular zone, all right, and then that sell-off occurred on the, and I like the 4 hour candle showing us doji as well. Okay, so if we get harmonic to cause the sell, obviously we are looking for possible harmonic that can cause the buy. All right, in this case, let me just hide this if there's any at all. So what I'm going to do is I'm going to look backward a little bit to see what we've been getting. I'll be monitoring all the areas of support and resistance. And if there's one thing that I can see right here, it's this. 94. And that is a, that would have extended to 1.618, which is further down. Right. So this is not part of our cup of tea for this bearish crab. Price hasn't get there at all. All right, but there's a bearish crab formation on this particular pattern that can come all the way down to here if we break this particular levels that we are looking at on the 4 hour chart. All right, so there's no harmonic. Another thing that I can look for is what is my wave count actually saying. All right, so now I haven't looked at one opportunity. I want to look at other opportunity for gold, and this is how I do my own deep down analysis for any price movement to keep me on the right track. All right, so looking at this now, you can agree with me that we have a move down like this. All right, so just before we do that, I want to clear this chart a bit. Yes, please come in. You want to button it? Yeah. There you go, darling. Thank you. Sorry about that, ladies and gentlemen. I've just got this little cutie that will take you some time. Take our time, rather. All right. You don't have a choice. Okay. So we are looking at this trend line down. Okay. We have to readjust our trend line. Last week, it was like this. Okay. And then just because we had this break, a lot of people continue to anticipate price on the upside. I, including one of them, I actually bought gold. Yeah, I make money on it. And then obviously the last position, I encounter a small loss on the last position. Let me show you briefly. So loss is part of the business. You can't, right. Okay. If you look at this accounts, that was the last loss that I encountered on gold, about 1288 pound. But when I bought it, look at the date. On the 16th, I bought some position of gold, okay, and I make some profit. I take out some of my profits, you know what I mean? I take out some of my profits and leave a last position on, all right? And that last position that I left on out of all those positions actually was about 0.1, and that literally encountered the loss, but I've actually making profits on, and you can see that it's not a word of a lie that price is going down yet, but I found a very good location that I can say that price is going to turn. I decided to buy, right, on the 16th, the 16th, the 17th. I decided to buy, and then obviously making some decent profit right there, you know. Just doing what we do best. All right. So when we actually break this, I am one person that's looking at a break of a trend line, and I'm saying to myself, right, this is an opportunity to look for retracement down. All right. And I've been looking for a retracement down. I know that I'm looking for price to bounce around this trend line to go up. All right. But the good thing about gold is gold always tests your mental tenacity. Okay. Especially if dollar is now doing its own madness. The reason why we saw this sell-off is because dollar is doing this particular madness that we are seeing here. Let me show you dollar. All right, so I've got a dollar chart, and I was watching this chart closely. Okay. And let me go to the 4 hour to briefly show you. So I was looking at this area, this particular sell-off. So price starts to get to this area, and I'm seeing this weakness coming into dollar, right? But I know fully well that just because we bounce off around this red band, that we are back in a uptrend. But yeah, we are hitting an area of enough decent resistance. As you can see, resistance, support right here, resistance, resistance. I'm expecting a sell-off in the dollar. It didn't happen quite strongly. All right. So if we have a sell-off in that in the dollar chart, obviously I'll be expecting gold price to rise. All right. But what then tends to happen is the sell-off occur for a brief moment. I manage to capitalize on that advantage that I have, make some decent little bit of profit, and then things turn around. It's some of my one of my stop loss because I've taken profits, you know. Looking at this already, I know that we are in an uptrend, although I want to capitalize on the short-term move down, okay, because I know I'm in a good location of resistance. Price has literally bounced up from there a couple of times. We failed there. So I want to capitalize on that move down because I've not been part of the move up anyway. So I know that if the dollar is coming down in this case, then that will be helping my gold around there. And it's such a tiny move. Okay, that move up, and then yeah, make some decent profits on top of that move. But what I want to show you is this. Please be careful when trading at the same time. You see, we've broken the trend line, all right? Sometimes when we break the trend line for gold, it will come down back inside the trend line and then start to see the buying process coming into play, all right? So that's started to happen on this 4 hour chart, all right? But I'm looking at the particular zone as well. Let me show you what I was looking at because I need you to be able to see this. and know how to capitalize on it. And I'll show you. All right, so this is my gold chart, and these are important points on the chart. So this is the move down on this 4-hour chart. All right, so we hit a particular area. We hit the weekly. I don't know if you can see this clearly. All this little blue area, this is weekly and monthly pivot zone. All right, so when price gets to this area, I expect reaction. Okay, and these are the reason why I decide to buy some gold. All right, so I decided to buy some gold. I'm expecting that we're gonna get a bounce over here. We got that bounce. I was only playing between this low, all right, to this high. In fact, I wasn't playing more than 32 pips. I know it's going to move fast, and I'm going to be able to get out of that 32 pips, and that was what I was playing. I make some decent profit. When it starts to turn back down, I've closed majority of my position, and then I wasn't there when it's actually turning back down, so I couldn't take this sell. I would have been happy to take that sell. Please, is it only me? My system keeps freezing. Oh, sorry, Ade, I don't know. I will teach you, I will show you these indicators. I will teach you how to use it. It's actually an automated indicators as well. It gives you an alert. I will teach you and show you how to use it. I will even give it to you if you show enough dedication. You know, you can have this on. Let me show you. It's just a lazy way of trading for me. Let me show you this. So we have cryptocurrencies trading right now, right? So I'll put this onto here. You actually get alerts when we, let's see Litecoin. All right, so this is still struggling. We've taken our profit, and you see the reason why I took profit on there, just because I know that we are approaching this particular trend line. I can feel the struggle coming, and that's the reason why you don't play when it comes to trading. You are just active and alive. You know, I will try my best. I know the kids are going to be going on holidays very soon, so I will have time. We will do some live trading together. You will see how I do it. You'll be able to copy the same thing, make some profit alongside with me. And obviously, thank you. Right. Yeah. So we will look into, we will be happy to know how to use it, not to have it. Having it is the least of the problem. But dedicating time to be able to teach you how to use it is what is important for me. We will actually be able to see some live trading opportunities coming up with it. Let me put it on a couple of chat for us. If the live trading opportunity comes, I will jump back into it and show you what I'll be looking at and how to use it. Yeah, so let's put dash on this. So, because a weekend we can actually be trading cryptocurrency while we are doing our session, and then you can have a bit of confidence and sense behind doing some of these things. It's not magic. That's one thing I like about it. Once you know it, you'll be the one waking me up every day and be like, Bola, what are we doing today? Are we not just gonna try and make some money? You know? And that's what we do. Look at how this one fall drastically. I want to look for opportunities in this and show you how to be able to capitalize. Wow, that move back up higher. Card is really, so Neo. Yeah, I want to do some session on cryptocurrency for us. Can take advantage of anything. Right, so look at that. It says EMA cross trend going down on XMR Monero US dollar. All right, so this is what we have. All right, so this is a trade right here. it's giving me all the indication. I'm looking at my band. We are below the red, right? So that is a sell for me. The RSI is pointing down. The only thing that hasn't confirmed on this now for me to jump into this is I want to see the MACD on the negative territory. Okay, I want to see the MACD down. As soon as the MACD starts to cross down, then this right here, this is a false confirmation for me. Okay, the RSI has to be above first of all and start to trend below that 75 right there. Okay, the second confirmation for me is not so much of a confirmation, is I want to see my MACD in the negative territory. We see a little bit in the positive territory. The third confirmation for me is you see all these bands, they are actually showing me trend direction. Okay, they are showing me the trend direction. When the green is above the red, then I know that I'm a buyer. All right, when the green is below the red and the red is above, I know that I'm a seller. So everything is lining up rightly in terms of trend for me to be a seller here. Okay, and then obviously this is the kind of trade that I can decide to take following these alerts that I just got, right? Trend line has even broken. The only thing that's not confirmed for me yet is the MACD needs to be in the negative territory. Then I'll be able to take this trade down from wherever it is to somewhere around 28 points at least. All right. So that's what we'll be watching for on this one. And then we can take advantage of this particular trade in this training session going forward. And then you can get a broker that will teach that. Yeah, I'll give you, don't worry. I'll give you. All right, so don't worry about that little bit of distraction. I just want to show you where I take advantage of the gold just because of the weekly pivot points. All right, so now you can see my MACD right there. All right, so if I decide to sell something, let's assume I want to sell about that much, sell in the market. All right, I'm going to put my stop loss just right at $8. All right, and then my target profit, I want it just right there. Okay, we watch this for continuation. I've placed a trade. Let me go through the conditions for you again. So I want my RSI to cross the 0.75 while it is oversold. All right, it's actually called Laguardia. It's a modified RSI, right? That's smoothing things up. Then I want my MACD to be in the negative territory, okay? And then I want price to actually be, if it's a sell, I want the red to be above the green. That are showing me that is the sellers, you know, the people that controls the red, the sellers, the red move down is the one that needs to be above. It's showing me that they are the one that are strong, and then I want to be a seller. So now I have new USD. Let me check new. So new is telling me that trend is going down, so I should be looking to be a seller at the same time. So you can see that the sellers are the one dominating with my red. All right. So I can see at the same time I've got the MACD was low as well. All right. And then I can see I have my RSI as cross from top to down, go back there, cross down again. All right. But the issue now is the first level of my targets needs to be at this support, which is just at 2 pips alone. All right. My risk, however, will not be, I don't want to put it down here. It's going to be above the second eye, which is somewhere around there. All right. So if I even have all this here, I can extend my risk to be about 38. Okay. And then my targets will be about 21. All right. And obviously, just because we have had support here, look at this. I'll just add some normal things that I've known in trading for some time. You can see this support. All right. And price is actually running away from that support. Look at that support right there. Okay. And each and every time that we get into that support, that's actually when price push back up again. All right, so with that little support now, I might not take this trade. If I'm going to take this trade, I want to take it under this support, and I'm going to be targeting somewhere down here. All right, so I can put a pending order down here. Just say pending order, sell stop. Okay, just down there. All right, after the support is broken. All right, and then I want to monitor this for continuation as well to see if price is going to go down. All right, so let's leave that aside. Let's leave that aside. So back into our gold, the moment you see, look at this trend line. So following this previous trend line, we got the trend line broken, and then we are expecting that price is going to retrace back to that trend line and continue to go back up. All right. But for gold, you can see things going deeper a little bit. But in this case, when it went deeper, it actually shows us that now is the time that I want to go down. And I'm going to show you that. All right. So if you're part of this, once we break this, all right, and we close it, all right, that's an issue right there, because we break and close into this particular trend line back. That is a negative things to do. And when we have this particular rejection trying to move back up, right, this rejection is the rejection that call for this sell opportunity that we're actually seeing in gold right now. All right, so what I now want to show you is now is the time to readjust. All right, so the amount of things I've teach you already today, yeah, on reference points, how many of it have you put into practicality? What I wanted to do going forward is I want to teach you quite a lot of thing going forward. Please bear with me. Let the children go on holiday. I'll be able to dedicate a lot of time to that. Plus, I've got an important project coming up as well, which I want you to benefit from. You know, I'm actually designing something magnificent that you will be one of the first few people that will benefit from it. And hopefully when it gets launched, you will be part of it. We are going to explore this and take this to a different level beyond what you can imagine. It's already in the pipeline. Yeah, just give me some time to be able to get all these things sorted and ready for you. You know, if you want to take advantage of the funding account as well, that is there. I will dedicate time to, I want to teach you everything one by one, you know. Hold on a second. Let me give you this text so that you can understand. If you don't learn everything one by one, you will be lost. Okay, so listen to this and listen to this carefully, okay, so that you can understand the kind of profession that you are. All right, so if I put out an advertisement, yeah, how would you respond to this advertisement that I read? Wanted, people willing to undergo specialized training in how to succeed. This program will require rigorous intellectual schooling, intensive introspection geared towards identifying invisible blocks to success that are trapped within you. And then a long behavior modification process. This is where your emotion will be your worst enemy. All right. A long behavior modification process necessary to overcome these inner obstacles. At the same time, you will undergo a daily on-the-job training program. Requirements for this training program are as follows: intellectual ability, a meaningful amount of capital, and the willingness to immerse your entire self-esteem into the program. It is anticipated that you will lose most, if not all, of your capital and will be forced to rationalize the whole experience to maintain your self-esteem. Although it takes a minimum of 2 years to reach a moderate level of success, soon after this initial training program, the majority of you will drop out because it is too hard, takes too much time, requires too much flexibility. It's not well defined, and there are not enough concrete rules. Of the few that remain, less than 10% of you will enjoy the feeling of exhilaration that goes with completing what you set out to accomplish. Like the artist who only gets better, your newly acquired skills and experience will be just the start of a process that can continue for a lifetime. You will be equipped to succeed at your profession. You will be an entrepreneur. All right. So if I write that kind of advert out, that this is what you will go through, the kind of torture you will go through when it comes to trading and this and that. And that's the honest truth. But how many people will actually want to say that they want to experience that? The imaginary advertisement could apply to virtually any serious professional venture. It is not meant to convince you not to trade. Rather, it is meant to dispel the glamorous illusions that surround the field of trading. You have already experienced the difficulty of learning the vast amount of theories that makes up market understanding. Developing self-understanding is just as difficult, perhaps more so, for self-understanding cannot be learned from a derivative source. Okay? So how to understand yourself, I can only help and guide you, but you cannot learn that from me, because some of the things that you are going through in life, you are the one going through it. All right, listen to this. Most traders, like drunken drivers, should be taken off the streets. They are trading under the influence of the many advertisements that blanket the pages of trading magazines and newspapers or internet with claims and near promises of quick, easy success. Each month, a new guru is starting a breakthrough system that turns a computer into a black box gold mine. Enter the orders and scoop out your profits. This glittery art spark interest and induce sales, but they are misleading, you know? And that's the reason why there's nothing for me to sell to you. I don't want to sell anything to you whatsoever. I just want to give you the real dedication that you need for you to be able to succeed in this, more than anything else, and arm you with so much tools. You need funded account. It makes sense for you to take that funding account. People like Hubert, you wouldn't lose all your money because you will be trading according to the rules. But if it's your money, you will want to bastardize it, you know? So trading according to the rules, trading according to money management rules really goes a long way, you know? But we will learn everything one by one. Let's quickly finalize gold and see what we are having on this chart, and move on to the other chart, and move on to the other chart, and then see how best we can succeed going forward. All right. So now that we have this, I'm looking at another trend line all the way up. All right, just connecting all our lows on this particular strategy, just connecting the lows. Okay. So having seen that, what you are looking at is we are actually nearing an ending of this apex of this triangle formation, because that's where we are in. We are actually forming a triangle. All right. And in forming this triangle, what you can see is we've touched the top of the triangle. Let me teach you this on this 4-hour chart and show you what we'll be looking for. So we have a data point here that touches the top of the triangle. We have another data point here, which is the second data point. All right. I can have another inner trend line right here that goes like this. Can you see that inner trend line? All right. So that inner trend line from there to there, touching that point, is actually where we are currently stopping. Okay. So the rule of a triangle is we want to see a breakout at 75% of this triangle. All right. At least 75% of the beginning, from the beginning of the triangle to the end of the triangle, we're looking for a breakout. So how do we measure that? If I took a GAN box, all right, and I put it inside there from the beginning to the apex where this triangle ends. Can you see my apex somewhere this crosses? Okay. So we are expecting a breakout when price travels all the way from the beginning of this triangle to the end of that triangle at 75% zone. Okay. So we are near to get there. We're just about getting there. So by the time we get to this area on this chart now, right? Is this something new for you? We'll be looking for possibility of a breakout either to the upside or a breakout either to the downside. All right. And we've marked our reference points over here now, right? And then this our reference point is showing us that we can break down below, all right, or we can break down above. But we are going to be looking to do that at this particular 75% level of the marked apex, which is still a good thing because you can still have all your anticipation of the move, right? That can break, have a short period of time for things to go up and for things to go down before we actually see the break. All right, so what we're now going to be looking for is this, for that break to occur. So now you can have a clear vision behind things and say to yourself that, wow, okay, I've been looking into this gold and I'm expecting a break, but look at what I'm getting. I'm not actually feeling this anymore. Each and every time that I look into this, it's more or less like I'm not getting the desired result that I want. All right, there's a reason for that. So we can look into this and look into this particular high zone, okay, and look into this particular low zone, which is almost the same. All right, and then we touch that, okay, and all now we see haven't break down. All right, we are sitting here. This is a good bounce level for us. Remember all our analysis that when we get back down here, we are looking to go back up based on the A to B, B to C pattern that we see. So we get here again. This is another place for us to bounce. We might bounce to go back up. Okay, we might bounce to go back up, and then or we can come back here and then either break back down. All right, but what I want to do is I want to move things in a little bit for us. So, sorry, we might be seeing another bounce there. That is what triangle does, okay? And then we might be approaching this, our 75% level right here, okay? It can be a sharp move, or we can bounce from there and come back down here, okay? So all these are data points are important for us, okay? All these are data points. So this level here is important, okay? The next level that's important is this low, okay? So when we start to go back up and we start to take out this particular monthly reference point and we start to continue to shoot up, then we are looking for possibility of that break coming into being very soon to the upside. We might get here and bounce back down and continue to go down like that. Anything can happen, all right? So just take note of that. We are approaching that level of breakout, and then obviously we might be seeing that breakout after 75%. Yeah, I can send the chart. I can definitely send the chart. All right. So we are just about to get to that level where we might see the breakout occurring. All right. So the breakout can occur, and the breakout can choose not to occur and fizzle out. But by the time we are approaching this 75% level of the apex, all right, of the apex, then we might be looking for that breakout. Okay. and the breakout is near term rubber now, is getting closer. If we use this particular apex, which is this cross here, it might be anytime soon. All right, so this might actually be the last buy that will push the price up that we are seeing on the binding geometry of the AB equals to CD that we've done on gold. All right, so noting all these points is important because we can be expecting that breakout to the downside. Let's watch out for it, or to the upside. All right, so if we're going to see it to the downside, what else do we need to watch out for? So which means we have to see the break of all these jointed level. All right, we have to see the break of price breaking this like this. Okay, we have to break all this level here. Let me show you. All right, break all that level to the downside. All right, once we break all that level to the downside, we can see a retracement, and this is the beginning of a huge sell-off in gold. All right, and then at the same time, we can see the bounce which we are encountering right about now for price to go up. All right, and then we might be looking for a breakout of this triangle again the second time, and then things can start to go to the upside. All right, but this is where we're going to be looking for reaction, serious reaction right now on gold, and then that's what I'm going to be looking for going forward on gold. On all these particular data points, this low zone needs to be taken off. The 1266 area needs to be taken off for us to continue to go down. We are not interested in whether the value goes up or down. That's not what. That's not our job as a trader. Our job as a trader, thank you, darling, is to take advantage, all right, of anything that price does. Okay, because number one, you are not the one in control of price. So if you're given the chance to take advantage of whatever the price does, just take advantage of what price does. If it goes up, follow it up. Just know your points whereby you can stop. If it goes down, follow it down. Just know the points whereby you can stop. So for triangles, the points where we can stop are the edges of that triangle, somewhere around there, somewhere around there, somewhere below it. Those are the places where we can stop. I want to make this smaller. So those are the places where we can stop. All these edges on the edge of the triangle are the places where we can stop. All right. So if we stop there, that's the places whereby you're going to be looking to take profit. In a triangle, a triangle is a consolidation pattern, and this is a longer time consolidation that we are seeing in gold. And in a triangle, just because we are basing out at this low, you remember that we are balancing out, okay? Just because we are balancing out, then we can see possibility for things to change direction from our monthly observation to the upside. So yeah, I've sent the chart to you on gold. It's an extensive analysis, and then thank you for still staying by my side. I'm sorry I just had to take your time like this, but if you are enjoying it, I mean, why not? It's just gonna lead us to freedom sooner or later. All right, so I haven't looked at gold like that. The other things that I want us to look.
I was just put it, and I wasn't even resting on it. It was just, I was just sitting and it was just resting. I wasn't even pressing on it. That must have leaked or something. Yeah.
All right. Sorry about that. Someone just came into the chat room. So, having done all this, the next thing I want you to do is, oh, wow. Thank you so much, Ola. You're welcome. You're welcome. All right. So, having done all this, the next thing I want you to do, is don't leave it like this. Now put my brother's strategy on top of it as well. Okay. And then obviously what we're looking for is how to make good use of our Fibonacci tools, okay? And then Yomi teach a very good Fibonacci class on how to make good use of your Fibonacci zones, okay? And then obviously you can make good use of that. Going forward, I'm sorry the chat look a little bit messy. If you want, now that you've got a picture, thank you so much, Anu. I'm glad that you are here. I'm glad that you are benefiting. I'm glad that you will have gone left, right, and center. One of the very few traders. I'm not just an educator. My 13 years experience spells a very long boundary into letting me to understand how to look at people, how to teach traders. Just because I'm a trader, I'm not an educator. I actually trade, and I trade live as well. I make money, you know what I mean? And at the same time, having a positive mental attitude wouldn't make me be losing money, because I will do my best to open your eyes to what you need to know. And then obviously we can capitalize on the market and make the best out of this. You know, this to me is a baby game now after 13 years. To you, I know it might be a big deal, but yeah, there's so many things that we can derive from this, and I'm more than happy to be able to show you. All right, so going forward, what I want you to take note is this. At this particular stage in time, all right, if you're looking at Fibonacci, which is, have you ever used the Fibonacci tool before? So if I put my Fibonacci and I employ it from the low to the current high that we're seeing, okay, we have some important zone on the Fibonacci that we look at starting from, and those are the zones that define our harmonic pattern trading as well. You can see I've done a video on harmonic pattern. I've done actually videos on harmonic pattern. Let's go to YouTube and show you. I need you to take your time to watch that if you have time. And one thing is this, don't joke with it, you know what I mean? All right, so this is my YouTube channel. These are the videos that we've done, and when I my training is not my training is mentoring. It's not training, if you get where I'm coming from. All right, so I don't do 30-minute session or 1.5 hour session. No, I want to spend time with you. I want to get to understand you, you know. I do sessions whereby, no problems. I do sessions whereby people, we will sit down, we will talk. So this is on back pattern for harmonic. This is a training on technical analysis. This is the AB equals to CD training on Gartley pattern. And we go in depth. You can see on some training, we spend 4 hours. On some 2.5 hours. On a day, we spend 5 hours. The day that I'm doing all this for the newbies, we spend 5 hours. On some days, you will see the killer here, 4 hours. It's nothing to me. If you can have this mental tenacity to be able to follow teachings like this, then it might be difficult for you to succeed overall, because there's a lot that you need to learn. You know, I've got training that I've done that we've spent 7 hours before, you know, and it's not. All right, so I think, let's look at this. So 3 hours, 4 hours, 5 hours. So I'm beyond the movie. You can't watch me as a movie. Look at that, 7 hours on this particular training session where I was teaching Elliott waves, and we delve into life in a much more different manner. So when you look at all these hours that I put into making sure that I can communicate with you, into making sure that you can get an understanding, I don't get tired. So it will be hard for anyone to come and match up to me and be like, yeah, all right, so what? No, you can't. You can't, because it does not start today. I don't get bored of what I do. I actually got passion for what I do. You know what I mean? And until you can have that kind of a passion, it will be hard for that success to flip in. All right. So looking at this particular opportunity and giving it's all right, and so no problem. Thank you. Right. So looking at this particular opportunity, the Fibonacci, we haven't even teach Ichimoku. There's still Ichimoku. I haven't teach you anything at all. You know, I can look at this 1 second just before we go into that. Let me see whether I can get something sensible that I can show you briefly on gold. Let's see if I can turn it on. And these are the kind of things that you learn from me going forward. But you are not yet there. That's the reason why this is complete advance. All right. And this is market profile. All right. So I can look at gold and say to myself that this is what I use to find values in the market. All right. So I'm looking at gold from all this session. I can see we are not doing any much of anything. We are balancing right out here. So we break out of that balancing zone. We come back into another balancing zone. So basically, I know that this chart can be testing the low and be reversing straight back through the low. There's no any sensible trend in this already. Mere looking at this, I can see that for a fact. You know, I know some areas whereby, like all these areas, once I see this on the charts, I know that when price is coming back to that area, I can take advantage of it. I know price is going to move up for some period of time. Even if it's that short period of time, I can take advantage of that short period of move, because I know that clearly that's what's going to happen, and still be able to make money without even making money from all this move, you know? So there's also different kind of ways to trade, and we can do so many things with trading. So I'm looking at all this congestion zone. I know fully well that, okay, now we break a little bit below all this congestion zone. If I'm not going to say because I've seen this sell-off, if price starts to move back up, look at here, look at there, and that's where we are. If price starts to move back up from here, I'm going to close my eyes and just be buying. And a lot of people will be closing their eyes and just be looking for sell opportunities. All right, that's market profile, but that's not what we are here to do. Let's do a little bit of Fibonacci on this move down. All right, so from the low to the high of the move, now we are bouncing off our what particular zone. So there's what we call the golden proportion number. That's 61.8. I've done a lot of class on what constitute fibs. Fibs actually started from this. Let me show you this. All right, so if I put down a straight line like that, okay, and I say to you, cut this straight line into two, all right, you might find it difficult to actually even get it right at the center, okay? So wherever you cut, say for example, you take that now, wherever you've taken, all right, let's put the measuring tools on this, say for example, from here to here. I even try to, that's about 33, sorry, that's about 85 bars. So 85 divided by 2, that would be about 42 and a half, all right? So it's giving me about 41, which means I didn't even get this right equal half, all right? But that particular move right there, if we take it again, this is a little bit mathematical, all right? And we divide this into 2 as well as at the same time, and we start putting the ratios on top of one another, this 42 bars over 85, say for example, 42 divided by 85, say for example, we gain almost 50% Fibonacci ratio right there, yeah, at 0.49. If I divide these two as well and put it and divide it on top of one another, just division of a straight line alone, that's the beginning of what constitutes a fib. Then we have division of zeros as well. All right, so in mathematics, we believe that everything originated from zero, right? We believe that everything originated from zero, and we believe that, okay, if everything originated from zero, we do not actually have the letter called, the number called 1, if we cannot divide 0 into what? Into what? What do you have to divide 0 into? If you now cut this 0 into equal half, then you have one separate and one separate. So it's more or less like you now have a smaller 0, like this, although there will be a diameter there, but if everything fall back, then you have that. And that is the beginning of number. So now we have one, both of them look like one another, and then that is the beginning of how we combine numbers, all right? So all these are in sacred geometry. You have to have a little bit of mathematical sense behind this for you to understand. And then we have things like square root of what is actually a square root. And these are how Fibonacci numbers come into being, all right? So when you look at this, if this is 1, 1, 1, 1, right? If you do Pythagoras theorem, I don't know if you know anything about Pythagoras theorem, right? And you actually divide this into 2, then you have square root of 2, all right? But out of this is how life starts to form. This square root of 2 is now the beginning of another. Let me show you. Let's see whether we can bring it out. I hope I can turn it around. So flip, I can't turn it around. All right, but what I can do, okay, because they're not joined together. So what tends to happen is this: when you divide a square into 2 like this, right? The middle bit of it, just like the way we divide this into 2, that gives us the diameter. The middle bit of it gives us the square root of 2. Square root of 2. If I have another box, that this square root is not going to be the length. You start to have a bigger box. I mean, sacred geometry, I don't want to teach that today because we're not going to be dealing with it. We just want to look into Fibonacci. Let's just do Fibonacci because I'm going to take you to another world entirely, and your mouth will be wide open, and you will start to realize that the whole of your body has got to do with Fibonacci. You'll be able to measure. If you measure your length from the head to toe, right? And now you measure your head from the head to your navel, which is your abdomen, you will be gravitating towards the 61.8%. Some people, depends on their height, they will be around 50%, right? If a new child is born today, the length of the head to the abdomen and the length of the abdomen to the leg will be equal 50-50%, so that the child can distribute food fairly. But the moment you start to grow, you'll be gravitating towards the 61.8%, whereby your leg to your abdomen will be around 61.8% of your entire body. All right. Don't let us delve into that today, please, for God's sake. But let's concentrate on this area of, we say the 61.8% is what we refer to as the golden proportion, because it occurs in every single thing that we do in life. The golden proportion, mathematically, it occurs in every single thing that we do in life. So this 61.8, Yomi will refer to it as, he referred to everything as golden zone, based on his training technique. All right, 61.8 is the golden proportion. For advanced traders, the 78.6 is what we call the sweet spot. All right, So why do we call it the sweet spot? It means that if you've got a move that went all the way up like that, all right, and then price didn't stop at 23% off, price didn't stop at 38% off, price didn't stop at 50% off, wow, which means all this discount that you are getting in the prices for price to continue to go up, it's not happening. Price did not stop at golden proportion, all right? The first move at 23.6, right? If price stops here and starts to go back up, right? That is where we are. And you can see that price wanted to do that. Price literally wanted to stop here. Look at what I was showing you a while ago about the tail. Okay, so we have a tail right here now, yeah? All right? So these are the kind of trades that can happen on that A to B equals to C to D. So with this tail, price, the buyers, they were hiding below this last low. So as soon as they see opportunity below the last low and price start to come back above that last low, they capitalize on it and start to push price up. But where they failed is they couldn't take out this excessive high, all right? So they can't take out this high. And once this aggressive push up comes in, the main aim of this move is to find some new orders that's going to push price back up. So we are actually, once they capitalize on this, they are looking for more support of buy orders that's going to actually push this price up, okay? All right, so the buy orders came in on the second candle. On the third candle, it came in as well. But unfortunately, look at our reference point right here, right? That is where we are stopping. They know about this reference point. The triangular trend line is there as well. We stopped. We couldn't push back above it and things start to look down. All right, so we try it again the second time just because the buyers have capitalized on the move, okay? They will always try to push back up. So before they lose focus, it will be at least after the second time they try to push things up. So they try to push it up again the second time to continue their journey, the failure occur. All right, so once that failure occur on the second attempt like that, it's a warning. All right, because what does this failure tell you? This is a high right there, this is a lower high right there, okay? So the third attempt now is for the what? The novice, trying it, okay? So we professionals, we experienced traders, we have our reference points, which we are watching right there. We saw this aggressiveness coming into play. We actually want to move well above here, all right? So we are not getting that move well above there. We are simmering down and be like, no, this can't be real. Now we are creating a lower high. Even if we take our trade from here, probably we can encounter a little bit of loss or break even when we see this move that fails to make a new high. Because what kind of candlestick, what kind of language is this candle speaking to you? And why would you listen to this candle? Can somebody tell me? So we have this aggressiveness on 23.6, all right, which is a very shallow retracement, which is a good 23% off of the whole move. And we have the bullishness following it. Then we have this particular candle. What kind of candle is this? And what is this candle telling us? The red candle. Anybody? Oh, please don't be mean to her. All right, sorry about that. All right, so what kind of bearish engulfing? All right, so you got a bearish engulfing. Where have you got that bearish engulfing? I've given you the clue. Look at your reference monthly charts there, right? You got that bearish engulfing and you are buying just because at the back of this momentum move, you decide to buy, all right? Which is not such a bad thing because you are expecting higher prices, right? But you realize that we have a big resistance around there, which is this monthly reference point. We need to go above it. So the moment we start to buy here, right, there's nothing wrong in following this move and buying this, right, for example, but we failed. There's no follow through. This is actually an auction failure right here. This is an auction to go higher, but we actually failed to go higher. All right, look at the third time now that we tried, okay? Now, that third time is met by serious bearish engulfing candle. And if you put your stop right below here, this is an this is a place whereby you're going to be looking to change direction. So you always put your stop where you want to change direction, okay? You always put your stop somewhere where you would like to change direction, so that it's not going to be a thing whereby when you are now stop out, you will now miss this opportunity if you are there. Are you with me? That's the reason why I'm showing you all these points on the charts. That's the reason why I'm breaking it down for you, so that you can have a clear and understanding that, okay, all right, so I follow these aggressive buyers. They fail to continue to take price up. Probably I've come out on this one just because I've seen this and I know what's ahead. All right, now that we break this low, this is an opportunity for this huge move, which is even more than that going on that we've seen. And then you take advantage of that, take advantage of that. Are you there with me? So even if you miss this particular move, the moment you saw this impulsive move, this is the time whereby you are now doing your chart pattern. All right, it takes a couple of 4 hours, 1, 2, 3, 4, 5, over 24 hours before we can now see this move. Out of this particular move, some of us make profits buying, okay, but we are only buying a flag. All right, so this particular bearish flag comes in, and then you want to sell it just below here as well. So don't get confused when you are seeing opportunity just because you've seen this impulsive move down now, yeah, which is more or less like a momentum. Momentum precedes lower prices. Can you see how your momentum comes into play and precedes lower prices? All right, so now we are in a zone whereby we did not see 23% holding. We did not see 38.2% holding. In fact, we break the 38.2%. And then what happened? We went to go and retest it. All right. And then we saw the sell-off into below even the golden proportion number, which is 61.8. Now we are sitting at the sweet spot. All right. So which means everybody that have bought this from this particular low, thinking they are the one who is going to eat the jackpot, we now have the opportunity to buy it 78% much more cheaper. Can you see the reason why it's a sweet, sweet spot? Because instead of you to pay exorbitant price for it, now you are getting it in a much more cheaper form. Okay? All right. So bear with me a second, please. All right. Please bear with me a second. You want to take a break? Or you are okay? Ladies and gentlemen, do you want to take a break? Okay. Leah said break, please. Ajiri said yes, please. All right. So we take a 10 minutes break. Okay. We take a 10 minutes break. If you need to drink some water, hydrate yourself. Okay. Try and hydrate yourself, and then we continue. All right. In the meantime, I'll just start blazing Napoleon Hill. We take a break. Okay?
That's how you may take possession of this key. In order. that you may condition your mind to embrace and use applied faith, you must understand that there are two ways in which you can use faith. You can put it into reverse gear and use it in a negative way by allowing your mind to dwell upon the circumstances and the things you do not want, such as poverty, ill health, failure, defeat. And this is precisely what the majority of people do, which explains why the majority of people go through life in misery and want. Or you can take possession of your mind and direct it to think of the 6 riches which came over with you in that sealed envelope. And you will attract these riches to bless and serve you all through your life. Isn't it a strange fact that most people make a negative application of their great power of faith by thinking about and believing in poverty, ill health, fear, failure, and defeat, when it would be so easy for them just to change their thinking over to the circumstances and things they desire? Now let me give you a description of the one thing which represents the main difference between a successful person and a failure. Please listen carefully and think for yourself as I speak, because failure to recognize the truth I am about to give you is the starting point of most failures. Successful people in all occupations, all professions, and all callings have one trait which distinguishes them from the failures. It is their capacity for belief. The failures see the hole in the donut, but do not see the donut around the hole. The successes see the hole also, but they see the donut around the hole. Thomas A. Edison believed that he could perfect an incandescent electric lamp, and despite the fact that he failed over 10,000 times before he was crowned with success, he made his belief uncover the secret for which he was searching. I'm happy to be with you for our 5th visit, and our subject is a pleasing personality. Your personality determines whether people are attracted to you or shy away from you. It is the show window in which you display your character to the world, and it is the one thing which distinguishes you from all other human beings. It is your trademark by which people recognize you, and it is the thing which determines your success or failure in selling yourself through life. Therefore, you should see your personality just as others see it, so you may improve it where it needs improvement. Your personality consists of more than 30 different factors, traits, and characteristics. Because of the limit of time I can devote to this visit with you, I can mention only the more important of your traits of personality. But before I begin to describe these traits, I want you to know that every trait which goes into your personality is under your control, and you can improve it so it will be whatever you want it to be. Let us start with the most important trait of your personality, your mental attitude. This is a trait with which you attract people to you and cause them to like you, or repel them and cause them to dislike you. Your mental attitude must be positive if you attract people to you. How do other people know whether your mental attitude is positive or negative, you may ask? Well, the answer is easy. First of all, other people tune in and pick up your mental attitude by telepathy without your saying a word or making a move. But there are other ways they can tell whether your mental attitude is negative or positive. You disclose this information by the tone of your voice, whether it is pleasant or harsh, by the expression on your face, whether it is soft and pleasing or harsh and scowling, by the courtesy and consideration you show other people, or the lack of these. So you see, there is no escape from revealing to others the exact nature of your personality. The next most important trait of your personality consists of your flexibility of your mental attitude or your lack of it. If you have flexibility, you adjust yourself to all the circumstances in your relations with others without losing your composure or allowing yourself to become irritable or angry. Just remember, if you have flexibility of your mental attitude, it will be impossible for anyone to make you angry or to irritate you without your consent or cooperation. Now, this is worth knowing. This brings us to the 6th principle of success, without which the 5 principles I have given you previously would be useless. It is the principle of self-discipline. Self-discipline, as I am presenting it to you here, has reference not only to your mastery of negative habits, which stand in the way of your success, but more particularly to your development and enforcement of the positive habits you will need in order to avail yourself of the 6 assets you brought over with you in that sealed envelope I mentioned in our first visit. Now let me give you a list of the more important things over which you will have to exercise self-discipline before you can embrace and use the great master key to riches. 1, you will have to gain mastery over your tongue by acquiring the habit of thinking first and then speaking after you are sure that what you say will benefit you and not injure others. A loose tongue often is one's greatest liability. 2, you will have to exercise self-discipline in mastering the common tendency to strike back at those at whom you have a cause, real or imaginary, for a grievance. You must remember that everything you do to or for another, you do to or for yourself, because your every thought and every act which benefits or injures another person comes back to you in kind, greatly multiplied. So if you feel that you must slander another person, do not speak it, but write it. Write it in the sands near the water's edge, then move away from it until the tides have flown. 3, you will have to exercise self-discipline over all of your emotions, particularly your emotions of love, hate, fear, and sex. These are the big 4 of your emotions, and they can make you or break you according to the extent of discipline you exercise over them. Well, this brings us to the 7th visit, and I hope to hand you the master key to success before I finish, because my subject will lead you so near to the master key that you will be apt to recognize it. As I have suggested in previous visits, a positive mental attitude can clear away all obstacles which stand between you and your major purpose in life. Because of the importance of the subject of our visit, I shall not only tell you that a positive mental attitude heads the entire list of the 12 great riches of life, but I'm going to give you explicit instructions as to what you must do to keep your mind positive. In all the success books I have written, I have never suggested to my readers what they should do without clearly telling them how to do it. Are you ready? If you are ready, this visit may bring the most important change in your life you have ever experienced. 1, learn to adjust yourself to other people's state of mind and difficulties so as to get along peacefully with them and to refrain from taking notice of trivial circumstances in your relations with other people by refusing to allow them to become controversial incidents. Great people always avoid small incidents of controversy when possible. 2, establish for yourself a definite fixed system of conditioning your mind at the beginning of each day so you will keep it positive under all circumstances. 3, learn the art of selling yourself to other people by indirection, such as asking leading questions which will bring out the sort of reactions from others which you desire. And do not permit yourself to be drawn into argument over unimportant subjects. 4, adopt the habit of having a good-hearted laugh every time you become irritated or angry, and it will help you if you begin each day with 1 minute of hearty laughing. This will change the chemistry of your brain and start you out with a positive mental attitude. However, you had better get out of sight when you take your laughing exercise. 5, start each day with an expression of gratitude for all the adversities, defeats, failures you have experienced in the past, and search for the seed of an equivalent benefit these have yielded you through the passing of.
All right. So, coming back on. Well, let's see. What have we got? So we've got Ade here, Ajiri Anthony, Annie Ere, Anu, Edward, Felicitas, Gladys, M. Wadunga. That's a big name right there. Ansel, Jason, Henry, Kanim, Leah Turayo, Ola, and Raboni Ilupeju. Thank you, ladies and gentlemen, for keeping up with me. All right, so what we're going to do is I've given you in-depth technical analysis, all right? I'm going to do this last part of the technical analysis for you, and then we're going to start looking into other charts. We're not going to spend so much time the way that we spend on gold, but I just want you to see the way that I look at things, and I look at things so in depth. All right, so what is our entry right here? Okay, so everything goes back to Fibonacci. We've come to 61.8. We did not hold 61.8, but where are we actually holding? So when you look at the 4-hour charts, okay, you remember where we got this trend line from, okay? So we look at the 4-hour chart. The last 4-hour gave us what? It gives us this particular doji, okay? Then what I will do again is I'll look at, say for example, another thing. I just look at my 4-hour charts, all right, and see that where are we sitting? We are sitting on major support tree, okay? I want to show you this quickly as well. So I have, let me see, trade, is this trader scores? Okay. All right, so support tree and resistance tree, there's a simple calculation that goes into it, but can you see this? This is resistance tree, okay? This is the trade that I took last week. This third resistance and the sell-off in the pound card, and actually take a profit down there. As soon as price is approaching over here, this is where I took that profit. And then that's on dollar card. Let's see. Let's quickly see. We're not going to use this one. All right, so if you follow me on dollar card, stop loss 34.81. And one thing I want you to pay attention to is this, right? These are trades that has been taken. Can you see? Every one of them has got stop loss, okay? Look at the stop loss section. Don't ever be weak-minded, okay? By giving the broker the opportunity against your life. They don't care. They will take it. Look at what I've done. Control Z. I'm going to undo this quickly. Someone is asking a question. You're welcome. Right. So what I wanted to show you is this. And you see, all the trades. Don't be confused, please, for God's sake. Right? They've got stop loss. The one that hasn't got stop loss, sell limit order on one particular crazy pair, it's a cancelled trade. All right? It's a cancelled trade, no stop loss. This one is a cancelled trade, you know, probably it's a trade that I wanted to do a buy limit, and it's a sell limit that I do, and I realized, oh, okay, it's a wrong one. I quickly cancel it. All the ones, they are cancelled trade, but every other trades, okay, that is the only way that I can take control of all these negativities that can be just clicking around, playing around without using any sensible strategy. You can have how many trades? 57 trades in total, right? Short position 1, 36. Long position 1, 21. Profit trades, 27. Loss trades, 30. All right. So there's even 30 more trades that is at loss. Yeah. And still that still comes into profitability. Just clicking around. So the amount of losses that you encounter does not matter when you can take control of your lot sizes. All right. So you can even if you can win 20% of the time, you will be a profitable trader if you can manage proper risk management. and it's easy to do that. Just know that you are not going to be increasing your lot size because you want billions of pounds in one single trade. All right. What I wanted to show you is support tree, a very big number. Support tree is, all right, and that's the area whereby after the third support, price want to reverse or want to change position. So we've got support tree. That's where we are finding. So what tends to happen is before we can encounter third support, the pivot point is the center playing field. Okay. So the center playing field is what is going to divide the buyers to the upside and divide the sellers to the downside. All right. So look at the buyers to the upside. They encounter their own situation on the third resistance. And at that third resistance, price start to drift all the way back down, right, to the second resistance, to the first resistance, to the weekly resistance zone, to the daily resistance zone, where we break and we retest it and continue to fail all the way back down to monthly, weekly. But around the monthly and weekly, you can expect this kind of reaction. Break the weekly, now price starts to go down, support one, support two, now weekly support, and then the third support is where it's more or less like for a day. Once you've hit the third resistance or once you've hit the third support, then things can start to look to turn around. That means you've over drive the particular instrument to the maximum which you're supposed to get. So once third resistance is broken and there's no support for it, then that is the beginning of serious weakness, recession, and all sorts of different kind of things. Things are completely beyond control. So traders are going to be monitoring all these zones carefully. All right, they will be monitoring. Please, at those level, the one you drew, or they automatically came with the indicators. I think I've got the indicators on the chat group as well. I'll load it up on there if you need to have it, but I need you to have proper training around that. All right, so when you look at this right now on this hourly chart, it shows us carefully that, okay, the trend to the upside, all right, is still controlled by the what? By the buyers, because the buyers, they are the green ones, and they are above the red, even up to this present moment when we have the breakdown down, all right, until we see the switch in direction whereby the red is actually above the green. Look at it. That's when the real sellers are coming into play. So what we are seeing down here right now is a fake breakout to the downside, all right? And this fake breakout to this downside is still going to see a move back up, all right? Look at here. Let me show you an example of what I'm trying to show you. All right, so this is sell-off, and this is seller's control market. When we break up above this particular band of the red, it's actually a fake breakout, okay? So after the fake breakout, we see a move back down, all right? It's still the sellers that are in control, but we have some powerful fake, not fake orders. We have some powerful orders coming into the market, but it hasn't changed the actual direction of everything. No, but that's why we call it a fake breakout. So it makes this eye, look at that, coming back down. Try to make the second eye, which is completely lesser than that one. The third eye cannot even overtake that. If we can possibly overtake all these, then things can start to be changing. So we went back into that full downward trend, and then this is the real move back down. All right, so the real move back down stopped at a previous support, all right? Then we saw another move back up, all right? So all this move back up is a fake breakout, all right? The real move to the upside started when we start to see the green interchanging position from the lower band, all right, into the upper band, which occurs right here. So the real buying strength did not occur until we start to see things changing around. And you can see it earlier as well. So when we dip down inside there, it's only the buyer's market, the buyer's strength is what you're seeing. So you can use this tool to be able to define where the actual power is. All right. So me seeing this one right now, although the orders are sell orders, all right, it's still a fake breakout to the downside. All right. So this fake breakout, we see a push back up, just as we've seen a fake breakout to the upside. All right, from a downward trend, right? See the downward trend right there. And the trend changed when we have what? The green superimposing itself to the downside. Initially, we are in a uptrend, okay? So when we had this breakout, the green change position, and your entry is not going to come until the entry to sell is not going to come until the others have shown that position have changed, until you have this arrow that will start to push things down. All right, so let me now show you this one. So this is a fake breakout to the upside, right? So this fake breakout to the upside will still give us a push back down. All right. All right. So the same thing occurs over here now. So we've got the actual trend is uptrend, but we've got a fake breakout to the downside. All right. So this fake breakout to the downside will still give us a push higher. All right. So that push higher is what we're going to be waiting for to see how best we can get to possibly start to go back up. And that might be the breakout that we are expecting. All right, so I've got all these tools to just have a bit of clarity into the market. So we are in the golden zone. Please, you can't trade the way that I trade for now, but the simple things that I can explain to you will be helping you going forward till you manage to get yourself to that stage. All right, because I will have a couple of confirmations that I need to give. I will have a couple of analysis that I need to give, you know, to the proprietary trading firm to monitor things in a way to make sure that things are going on smoothly the way that it's supposed to be going on, to have that extra bit of perspective, you know, and tallying things together to make sure that my perspective, I can confirm it in all sorts of different kind of strategies going forward. All right, so we are now at 78.6. All right, and that is, excuse me, that is the zone whereby you have the golden proportion is the 61.8, the 78.6 is the sweet spot. You have 78% discount from the actual move, and a lot of people will want to take advantage of that 78%. All right, to push things back up. Remember, we can break out any direction. So this is actually a buy for us right now, okay? But before the buy will occur, we might see a couple of bounces going into place, or we can just see price continue to show up. But yeah, we are in a good zone, okay? Your stop now, however, we now start to look at what is the stop going to be, all right? So just because we have all these monthly points here, I can start to look for my stop. My stop will definitely be at 88.6, okay? At 88.6 or below the 88.6, that's where my stop will be. That's already below the trend line, okay? What I can then do again is I can quickly look for another reference point on my weekly charts and see whether I can have a much more decent stop, all right? So, and the weekly also, just because I have this blue cross, is still confirming to me that it's still the buyers in control. So what I'm seeing right here for my stop levels that the price is likely going to respect going forward. What is this particular low here? That is weekly. I like my weekly to be magenta, all right? And then obviously I want it to be a broken line as well. So that is, remember we did the last 4 weeks the other time. So right now we're doing the 1, 2, 1, 2, 3, 4. So all these areas now are areas that are important to me. I can see we've got some decent support right here. You might not see it in the previous time, but it's broken. All right, so all this low is still good because it's not yet been broken. All right, so I didn't see any important area on this weekly for now. The way that I look for structural points on the chart. So except we have a couple of let's look at this. So we have some supports here. Okay, yeah, it's not a resistance in that particular zone. Sorry. So resistance, 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 break, come back to it, fake here our resistance again, break, using it as support. All these areas there showing that area is relevant. So that's an area of resistance going forward. We have a tiny bit of support around there going forward. All right, so I just have that on my weekly chart. I didn't see anything of interest more than so. If you just have those added area for extra confirmation, and you can see those support area on this black line are just a little bit above this particular monthly reference point. So this is our weekly reference point. We are sitting above it, okay, which is positive for gold going into the new week. We've actually closed above this weekly point right there. So that is positive for gold. Let me do it again so that you can see. So I'll normally consider my last four important weeks. So that one, that is last 4 week low, and we've traded well above into it. Okay. The second 4 week low, the third, everyone is below here, and then this is the fourth 4 week low. But just because the low over here, right, if we trade below it, that will be giving us weakness. All right. If we trade back above it, that will now be strength for us. Okay. So I can see a little bit of strength coming into place. I like this that I saw as well. Let me show you. Let me just hide this drawing. Remember the 36 EMA, I always use it as an area of resistance. Okay, so price has broken, there's a crossover, price retraces back to 36 EMA. Look at Doji, right? Look at all this coming into place. Everything is still balancing up around the 36 EMA, all right, which is showing us strength in a way, and it's an area of retracement for me, all right? So I'm looking for price to go up, retrace back to 36 EMA. Let me look for Ike Nashi candle quickly, see what I've got. All right, and this is positive for me as well. Ike Nashi has shown a serious strong trend, right? The retracement back down. The last week before the last, we've got a bullish candle. This week is actually bullish as well because it ended up green compared to the last 1, 2, 3, right? So I got a couple of positivity coming into gold, all right? And then I can see that there's possibility that this will now start to look higher going into the new week. Every analysis that we've done from monthly to weekly is spelling the same kind of trading condition for us going into the new week. Let's actually look into this. So the 4-hour chart now, like when all the EMAs are closer together, because once you have a breakout to one side, after the closeness of that, after we have this sort of a volatility squeeze, when you have all the EMAs tightening up together, you can be looking for a trading setup based on this alone. It's very profitable once it breaks out, right? Especially on the smaller time frame, there's always continuation. So breakdown, you should be looking for continuation, but you know, gold, it can show you one thing to one side, show you another thing to the other side, and they want to reverse or
right now I'm favoring the reverse side, right? And then I'll be looking for this opportunity going forward. So gold is actually a buy for me right now. All right, stop at 127, sorry, 1270, 66 zone, right? So if you need to take that down, and obviously the buy point is where we are currently, and I'm going to just take that position in my live account right now. So I want to see gold XAU USD. All right. Oh, sorry. Okay. So my buy price or buy limits, I can look at where we are currently and said I want a buy limit just above here. All right. Buy stop just above there. I'm not buying 5,000, but I'll buy, let's say I'll buy 10 ounces of gold. Okay. I want my stop to be just at 88.6 level, which is 1270, 66. Let's have a look at it. 1270, 66 zone. All right, so if I put that, all right, and then my target will be coming all the way up here to 1295.27. For now, which is the band of that triangle, in case we're gonna get there and turn back. 1295.27. All right, so when I have a position in the market like this, what I'll be doing is I can be taking incremental profit along the line, but this is the basis of my position. And yeah, these are the target profit. These are the sizes that I'm taking. You can see that my loss is going to be £64, but I'm targeting double of that of 129. All right, so this is a 2-to-1 risk reward ratio. All right, and then obviously, let me see how best I can take this and double it into the chat room for everybody to see how best you can take advantage of it. I'm gonna take this. So this is a live trade that will trigger when the market opens for me. Okay. Let me see where I've got spot and then go. All right. So what I need you to have are the parameters, and you can see them over here. I'm going to take a picture of that, or let's say I'll snipe it. Please, I need you to understand that this is my own bias. If you're going to be taking a risk, make sure when you are following me, take a much more lesser risk. All right. Depends on your account size. I can withstand what you might not be able to withstand. Don't follow me blindly. All right. All right. So I want to copy this. I want to go into a chat room. It's just my own trade. Continue. Where is us? All right. So got this going forward. To post the entry. Yeah, so this is how you find the entries. That's the reason why I do it this way, so that you can know the entries. Let me So when you look at the side, you can see that this is my target profit up here. Yeah, TP, target profit, the value is there, 1296, 26. You can bring it down a little bit because the actual was 25. All right. 1295, somewhere around there. All right, my entry will be just a little bit above 1278.81. All right, and then my stop loss will be at 88.6, which is right down there. All right, 1278.55. Okay, if I want, I might put that a little bit below, but that's what I'm using for now. And that's my trade on gold for you, and we monitor that going into the future. Okay. Yeah, I believe we've done majority of things on gold. Now let's look into what is the order. There's an US 30, okay, US 30. So US 30, right. So for the US 30, what I want you to pay attention to is this. If we quickly do a monthly chart, so what you can see over here, it's a triple top, all right, on this monthly chart. So you saw a triple top on the monthly chart. The month has yet to close, but we are already in a bearish engulfing mode, engulfing this particular candle. So a triple top is a reversal pattern, okay? It's a reversal pattern that can send price all the way back down. So you need to know when to be ready for this. And obviously that is now. Every opportunity over here now is an opportunity to sell, especially if this month closes negatively. So we've managed to go all the way down to our volatility EMA, which is the 12 EMA, and that's where we encounter the bounce. We trade below it slightly, and then we saw a bounce above it. All right, so what is important to us right now are the reference points. What would be my reference point over here? So that will be that area right there, which is that low. Okay, I will make sure that I put my magnet on so that I can get the right information. 25,931. Okay, in as much as we remain below that, are we strengthening or weakening? So the next one will be 25,218. Okay, 25,218. What is the low of this? Let's see whether we are right on that. 25,218. Okay. All right. So another one is going to be this area. I like to see at least 4 anyway, which is going to be that high. All right. So if we push up above, all right. So we've managed, we didn't, let's say the low of this is 25,231. So we didn't actually hit the 218. We stopped slightly below it. I mean, slightly before it. All right, so we've got that. And then we've got this as well. Another reference point up there. All right, so I'm looking at all that, saying to myself, okay, going into future, what are we having? All right, so the one thing that I can see precisely is this. You're welcome. You're welcome. Don't worry about us. We are okay. If you need to go, please don't hesitate to go. This is just my own trading. I take it as my own analysis as well. At the same time, I'm training you. So if you need to go, it will be recorded. If you can catch up on it, then that's cool. The most important information about the risk management has been passed. The most important information. So the rest are just analysis and going forward. All right, so triple top is a reversal pattern for me. I'm looking for this to continue to go down. That's just my bias for now. That doesn't mean that my bias cannot change. All right. So if the market presents another condition to make sure that there will be change in bias, I'm definitely readjusting my opinion. Okay, so that's how your brain have to work. If you look at this, and I've shared this with you, please, I will appreciate if you are reading them. All right, let me show you this trading psychology element. Right. So you need to, this is a personal characteristics that generally already accompany success in the financial market. Maturity. Okay. You cannot be a baby just because you encounter a loss. Stability. Even if you encounter a loss, you should still be strong and be like, I'll take another position. All right. Look at this account. Say, for example, the first few positions are not positive. They came in negative. I don't know where all this one comes in from, but the first, right, yeah, is that one, $6.50, $4.70 something. They came in negative. Those were the first things that were recorded on that. And you can see that the account started going down like that, first of all, not so much, you know, it's still between $50, all right, and then start to rise and rise above the what's it called, the opening position. And that is sensible for me. If you don't even have a strategy, but because you have its consistent, sensible lot sizes, you can make a lot of difference. So you have to have a strong sense of self-competitiveness. So you are not competing with anybody. I'm not competing with you. You are not competing with me. You are learning and you are competing with yourself. What is self-competitiveness? It's you looking into the mirror and saying to yourself, this demon that is behind me that will make me just take excessive lot size, I want to give myself a command, all right? And I want to see if I'll be able to follow that command. And the command is, I want to make sure that I reduce my lot size to a sensible, proper money management size. That is the only time you start to have peace of mind in trading. I'm giving you the rules. For you to have peace of mind trading and you'll be able to go and sleep, have your lot size reduced, first of all. Because if your lot size is not reduced, you can't even analyze. That's one thing I realized. Because your mind is going to be on top of the loss. So you have to have a strong sense of self-competitiveness. You have to be competing with your old self and bringing out a new self in you. You have to have enough strength to maintain a contrary opinions. That is where I'm going, right? So just because I've looked into things and I said it's going to go down doesn't mean that I wouldn't have another opinion to say that what if it turn around? So I need to know all those areas where it's going to turn around. And that's what we are doing over here. That is the reason why I'm teaching you this, that, okay, look at all this level. Because we are below here now, the moment we start to come back above 25,931, that's the turnaround point for me. That's the time that I want to start to look into things going forward. All right. So even if I'm not employing a Fibonacci strategy or I'm employing the EMA strategy, I now have a reference point that I'm watching on the chart that's going to be lining up with my buying or selling expectation. And I know that with that reference point, the moment things start to turn around in that particular zone, that is when I want to be a buyer. So if price starts to come back up above here now, then I want to start to look into being a buyer. It's more or less like you knowing fully well that when price gets to this particular low, things can turn back up and you can be a buyer, all right? And you want to be a buyer to a certain level around here or not even up to here before things can turn around back again. But right now, just because we are below this month and we are still negative, I want to maintain being a seller, all right? And I've been selling this from the beginning of the this particular move. Excuse me, please. Sorry about that. So I have my weekly charts that I'm going to look into as well. Everything is showing me that the 36 EMA is what is holding price at this particular point in time. We have this triple top around here, all right? So the 36 EMA is holding price at this point in time. If we are, and that is sensible, that is what the 36 EMA will do. It will be a retracement point for you for things to go back up on weekly, all right? So I'm looking at that for weekly for me. This is my weekly reference point. I'll change the color to magenta slightly, all right? And then I'll be looking at this particular level as well. Okay. And then this another point for me on weekly. This particular high and this particular low of the last week. All right, so I want to see us continue to trade down below this, all right, for me to continue to reinforce my negative bias. But one thing I need you to pay attention to is once we have the touch of 36 EMA, we continue, all right, to touch that 36 EMA. Now we are seeing the wick of all this candle in a rejection manner. But despite the fact that we saw the rejection coming in, that still doesn't mean that last week we didn't press down negatively. We were down last week. We went down last week. We formed a new low last week, and that is showing us that are we strengthening or weakening on the US 30? Are we strengthening or weakening on the US 30? Who have I got? Everybody is gone. I'm the only one left myself. Thank you. Oh, someone is alive. Weak. All right. So we are weakening just because we form a new low. Okay. But towards the end of that particular week, we start to trade back above. Thank you. Thank you, everyone. Ajiri, thank you. Felicitas, thank you. All right. So we are weakening just because we make a new low. Okay. But after making that new low, what we tend to see is some profit taking comes into being, some areas of resistance and support comes into being to push price back up. All right. So, but when price is pushed back up, just because we didn't trade back through the open, it's still weak. But yeah, things went a little bit positive before the end of that session last week, which is on Friday, which is yesterday. Okay. So remember, 36 EMA is going to be support. Is this on weekly? That's the same thing as 200 EMA. All right. But the one thing that daily has done for us is we've seen a cross of the 12 below the 36. All right. On this EMA strategy, that cross alone is negative for us. All right. It's showing us that things are looking bearish. We got that to 200-day EMA, and that's where the bull come to defend their position and push price up. But the good thing that you can see, look at this, ladies and gentlemen. How many candles is this? Can you give me the answer? How many candles is this? From this green candle. How many? So we have all this green candle, 1, 2, 3. Okay, 3. Good. All right. How many candle is this? This particular big red candle. How many is that? 0 candle. This particular red candle, how many candle is this? 1. Thank you, Edward. So a 1-day move that is being reversed by a 3-day move. So which direction is impulsive? Which direction is the trending direction? Because it takes just 1 day to make this move, and it takes 3 days to do what? To reverse it. You know? So it is clear that we have a huge sell-off, okay? But the sell-off, it's the 200-day moving average, and that's where the bulls are coming in to defend their position. But they are coming into this bearish candle. Right, the reason why I ignore this is because it's the same color as this one, okay? I'm just talking about this candle and how long it takes. It takes us 3 days to almost perform the same move. Even 4 days, even you can count this to it, we still haven't taken out this high. All right? We see after 4 days, we still haven't taken out this high. So that will now start to be the question that, okay, the buyers are coming in, fair enough. But are they coming in huge strength? Please give me a second, please. Just give me a second. I need to get caught in. Right. So on the US 30, we're seeing the sell-off and we're seeing the strength, and the strength is showing us that it's to the downside. Okay, so what you want to do all the time is, because if you are in line with the trend at a particular point in time, you always realize that you are much more profitable. If you are against the trend, it can take time, but that doesn't mean that we trade both the impulsive and the corrective move. But the impulsive move gives you more money, all right, than the correction. Look at this. If you've been selling this, it would have been about 1,500 pips or more. Yeah, selling that. But when did the actual selling begin? All right. So I start to look into this chart and I start to piece it up together. All right. And what I tend to do is, because it's a massive ocean of the stock market, all right, this is just a range, all right? This is just a range. And what do? In a range, you can have a trend as well. You just need to know the extreme of the range, all right? So the first thing is, you're looking at this eye. Sorry. Let me delete that quickly. So arming yourself with knowing this is the high, all right? This is the high, okay? And look at what we have at those highs. The price, make sure it push itself all the way up to that last zone right there, okay? And then it forms the first double top. We touch it here, we bounce back down. We touch it there, we bounce back down. All right. So the rules for double top is this. So let me hide this one for now. So we have touch at the resistance, bounce back down, touch at the resistance, bounce back down. So the rule for double top is this. So the beginning of that move, okay, to the high, to this level, to that high, that is double top, okay, and price need to come down. In fact, this is our data point right here. We need to break this, okay. Once we break this level, that is a support broken, which we saw over here, all right. That is the beginning of us starting to say to ourselves that the trend is going to be coming down, all right. But before the trend comes down, just because we break an important level, which is over here, always expect that price is going to retrace. That is what you got over here. You break an important level, expect a retracement back up, all right. So we got that retracement, and since that retracement, things start to look all the way back down. All right, so it's all about you knowing your levels. All right, so this is our level right here. Bear me a second. This is our level right here. One moment, please. Okay. So you see this little point right here. That is the point that we need to break. All right. Because that is the structure to push price up. Okay. So once this level is broken, let me bring you up to speed on that. And what I mean by broken is once we trade below it at any point in time, that is in an uptrend, okay? You can see that we are in a uptrend. So in an uptrend, we now approach a particular resistance, all right? So at that resistance, that can be number one area to sell, all right? So, but you missed that, say for example, and then you saw this sell-off and we bounce back to that area, that's another time to take a sell because it's a resistance. Anyway, if price eventually wants to break it, then price would have broken it. All right, but now looking at things structurally and technically, okay? If you're now looking at things structurally and technically, you now want to be knowing some of the data points which are important, which is this area here, okay? What I'm going to do is let me hide it. You see this low right there, yeah? That is the low that's important to us. Once this low is taken out, then the structure is getting weaker, all right? And then things can start to roll down. All right, so that's the reason why this is, let me now show you which candle. Please bear with me a second. So we are talking about this low, then this particular candle was the candle that breaks it. But just because it breaks it into the 36 EMA, we have that retracement back up as well. So we break. The next thing we want to see is this. We are breaking the horizontal support. Do we have any dynamic trend line that can be broken? All right. And those dynamic trend line will now become our what? They will become our another resistance and support zone. All right. So we have one right there. Okay. Which we break and we come back to retest it. So over here, despite the fact that we have this resistance, there are so many other resistance right there. All right. So we have one right there. The next one that we have is going to be this one. Okay. All right. We have another one right there. Okay. So look at the way that we are marking up this chart. So what have we done? So the moment we break this 200 moving average, all the lows that we have here are the ones that we consider. All right. And we consider all those lows to match them up with the couple of other lows that's coming up. Okay. And then what then tends to happen is we actually saw the break of that trend line as well, and things start to go up. All right. So what you want to see is a couple of other things that you can do is you can look into things in a much more detailed manner as well by considering this level and saying to yourself that this is another trend line, right? So when you now get that trend line that's matching up with that your low, which is right here, let me show you. This is what I want to approach. All right, so that particular zone, so we have the trend line, yeah, this particular trend line touching this zone together. And what we don't want to see is we don't want to see the break of this trend line, right? We don't want to see the break of this particular zone, okay? Once we are seeing the break of this trend line and we're seeing the break of this particular zone, it's a time for us to now start to think of, okay, we got a clue right here, and that clue will be, even when you now see the retracement up here, you will be looking for whether that retracement will stop at this particular trend line, or we stop at that particular trend line, right? Sometimes it can stop over there again, sometimes over here again. But in this case, we have that move up, all right? And that move up did not even break above this trend line. It could have, all right? Then we saw that failure not to break above it on this particular move, which is the 6th of May. And that 6th of May move, I believe I made some decent amount of money on it, because I was actually selling this trend line. After I've seen this break, all right, this break and the break of this particular low, all right, when we got this move up, it's an opportunity for me to look into sell, which means break of a resistance, all right, break of a break of a support trend line, break of the actual structural support zone, okay, and we break it down, and then we find a retest of those area, and that retest is what we are selling down right about now, okay? So that is how the sell occur. Structurally, technically, let's look at it on a 4-hour chart for you to see where we are and how we are progressing, so that we can see where we are going as well. All right, so that's our technicalities right there. That is the points right there, okay? And this is the time whereby we have that break, okay? And we break the trend line first over here, all right? We went back to retest it, you can see, and then we saw the break of this particular low level over here. We went back to retest that particular trend line, all right? And then it's a good time to sell. Just because you've got that break, all right, it's now confirming you more sell, all right? The break and failure to be able to trade above that break is what is confirming all the sell for us. So we start to sell going downward, all right? So what I'm going to do is I'm actually going to, so the targets, yeah, for the, this is the reason why I'm doing this. The target for the triple top, sorry, for the double top that we are encountering on this 4-hour chart will be that move to there, all right? If I decided to bring it from the bottom, it will be a move to, yeah, so this is the minimum price objective for the sell that we are expecting based on that double top. So we got that minimum price objective plus more. So that shows us that the sellers are strong and they are pushing the price all the way back down. All right, so having said that and having drawn all this, what are we now following right now? So we have a next trend line that we have to look into, okay? And that next trend line, we do this. All right. So that next trend line, we do this. We connected all those areas, sell off, boom. Touch that area, sell off, boom. Touch that area, sell off, boom. Try and go on. Like I said, we're going to break that area, then another sell off. All right. So now what we don't want to see again, if you can remember, is if this is going to be an area of triple top for us, look at this eye, right? The moment we come into this eye, we are going to be looking for possibility of a rejection, which is going to be coinciding with that 200 EMA, okay? So if we find rejection in that zone, then things can start to go all the way back down. But right now, we've seen a double top test of that trend line, slight little break, but we close back into it. You remember gold, we break the trend line, we close back into it. It's telling us it's an opportunity to sell, right? Just because we failed that trend line, and then this opportunity to sell, we are looking to see how best we can bring it all the way back down there, all right? So we've seen that red letter day. All we are looking for is a possibility of this. Again, okay, so we are looking for price to say that it's coming down to break all the zone. All right, give me a second. It's telling me about that. All right, because it's a Wi-Fi anyway. So break all that zone, and once we break all that zone, the next thing we want to see is, do we have a trend line break as well? So each and every time whereby you break the horizontal, just the way that we break it over here, whereby you break the support zone, okay, and then you break the trend line at the same time as well. So we break this trend line first of all, we break the support first of all, we retrace back to it. That is a huge, huge confirmation for us. So now we have another one over here. So what we are looking for is for price to do this. We're actually looking for this now. Let me a second. We're looking for price to come down and break this, all right, and break this, okay, and then we're looking for price to retrace back up, all right, and continue to push back down to air first and back down to air first. Secondly, okay. So this is our roadmap. We have important work to do. We have to break all this level here. We have to see the retracement back up, okay? And then this is a good area for us to short, because we are not just shorting the support area, we are shorting the trend line zone as well, okay? We are not just shorting the support area, we are shorting the trend line zone as well. So what I want to bring into your perspective is this. Let me take this off, because you know where we got it from, okay? All these trend line, we don't actually need them for now. You don't actually need them for now, all right? But what we need is this particular trend line, this particular eyeball limiter. How to go now? It's fine, no problems. Thank you. Thank you for attending anyway. Thank you for attending. All right, so you can see the strength pushing down. I'm going to hide all this so that we can have a clear chart. All right. So what we want to see is we want to see a break, we want to see a retest, and this is our big, big move down again. All right. So having said that, we can then employ, let's employ another tool. It's always good to measure and know where we are. All right. So what the traders are taking advantage of right about now is they are actually selling these zones. Seriously, look at that. So just because you have this little bit of insights, you know where price is going to stop. Look at your monthly right there, 25,931, your best selling price. Okay. That's where price is getting back to and encountering that sell-off, another test of 25,931 sell-off, and then that is all at where 50% retracement level. Okay, so your stop, just because you have this monthly zone, and this is the way that I teach people for you to have a low risk trade opportunity, is by combining so many things together. All right. And then you're now going to be looking at this, your monthly 25,931. You are looking at 25,971 for the 50% retracement, and you can easily take a trade at the back of this level. All right. You have a low risk entry, and then you can push things all the way back down going forward. All right. So who is that messing up with my charts? You want to take part? You can unmute yourself and let me know what you have to say. All right. So I've got some people that are very bored there, and the best they can do to my chart is to mess it up. Thank you. Okay. All right. So going forward, US30, your low risk setup is over there. I have a position that I took right over there as well. Let's have a look at it. I took a couple of trade positions right over there. All right, you can see the position that I took over there is still on. All right, so you'll be able to see it over here anyway. All right, so 25,901 is the actual entry price, and that position is still at on in profit. So we practice what we actually preach, so that you can be able to trust the process, and it's not just going to be talks alone. And I want to teach you the Renko chart, because that's what I was using at that particular point in time. And it's a smooth chart that just gives you the opportunity to not be seeing the spikes in the market. And yeah, you can make good use of the Renko chart opportunity anyway. So yeah, so I got that position on in the US 30. I'm not just all the EPIP people that have that just begin trading, but yeah, at the back of that level, you can see the opportunity coming into play. And then we want to see the break of this. So this is what I'll be monitoring for going forward. I don't want to see my position going above into this area. All right. At the same time, I want to see price coming down. Take out that one, take out all this one, okay, and then continue to go all the way down. But one thing I want to get your attention into is 50% retracement zone. That's where we are currently. That's where we are encountering some challenges. If we break that and keep going to the upside, we'll be looking for more opportunities around there. All right, to sell this, because the sellers, look at this, who has got the impulsive move? Is it the buyers or the sellers? Who has got the impulsive move, the buyers or the sellers? Right, so the sellers. But there's a reason for us to be cautious, right? Just because we have this low, okay, and then we move back up. Remember what I keep teaching you about higher low, all right? And then we move back up another higher low. Then we move back up, we have a higher low, okay? So the sellers are in control, but the buyers are making a stop right now, okay? Great. But by Friday, they come back in to step in. Hopefully, they can carry on, right? And we need to see the break of this level for the sellers to be strong again, to be able to push things down. If not, I'll be very cautious, all right? Just because I have this higher lows, higher lows, higher lows, I'll be very, very cautious. And I can see that even if I have the possibility of price breaking back up, okay? If price breaks back up, look at what I've done. I've protected my position in this manner. My stop loss, right, is going to say give me £8.66. So if things decide to change around, I'll say be, wow, look at that. Where is that? Are we in the, which country is this? Are you in Ghana, Mr. Kwaku? Right. So we can see push up and anything can happen. I want you to have that dynamic mind and understand that anything can happen. All right. So 50%, that's where we are encountering resistance right now. Oh, interesting. I thought you are back in Ghana. And then I want to see a break of this trend line, a retest if possible, and continuous push down. Okay. So that is that for US 30. We are already in this sell. The stop is very negligible around the zone, okay? And then obviously we are just monitoring for continuation if we get it, but we cannot encounter loss on this trade right about now because already the stop has been moved to break even. So always practice that. Move your stop to profit, you know, while you are still giving your trade runs, you know. So obviously, when you look at this, let's look at it from a smaller time frame point of view. So that's my sell, okay? That's my sell. I'm still positive in the market. That's my stop loss, all right? So I'm protecting this position against all the wide move, okay? And then all the wide move can possibly be a reason for me to do what? To still take more advantage of price movement, okay? To still take advantage of more price movement. I can still take advantage of this price coming all the way down here, you know? And that is key for me. I think, yeah, that's key for me. I can still see price coming all the way back down there because look at this momentum. Momentum precedes extra prices. All right, so if I'm going to do this quickly, let's see what we can have as target. So if this is my A to B, okay, then I can have equal measure move. 1 second, please. So this move down, if I duplicate that, then I want to see a breakout, okay? Let me duplicate this first of all. Right. So I can still see A to B equals to C equals C to D. So what I want to do at the back of that is I want to put my Fibonacci tools on top of this, okay? And then obviously, let me delete that first of all, or flip. Okay, you can see where my 2.618 is, which is where the end of the equal measure move is exactly. All right, so I can be targeting 25,620. Okay, but instead of me looking at that 25,620, I'll be looking at what is there as well. All right, so I know that we have some support over here, so I'm not going to be thinking of just 25,620 alone. I'll be thinking of those supports as well. All right, so if price gets there, it's a good descent move down, and then yeah, it will be a profitable opportunity going forward. So technical analysis into understanding how order works and plays a very great deal on you understanding market structure. Just because we are below here, it's a big structure graph fence for me. If we turn back and we start to go above it, then now you can see the reason why price is stopping where it's stopping, right? You can see how powerful this your monthly reference points works, all right? And you can add other things into it. Okay, so I'll just be cautious because I'm seeing the higher lows. All right, so that's on US 30. Is that clear enough? Is that clear enough? And then you have your target. It's a sell rubber. Now you want to break this. You want to break this if you are not yet in this position, all right? Because probably you can't get this high anymore. But each and every time you come back to this side, you know that you have a low risk setup. I've shown you how to get that low risk opportunity. You can see where we are playing. Even there's a weekly there at 25,971. There's a day, monthly there. All the zone aligned together, all right? Those are areas where you can take advantage of for small risk opportunity. Still make sure that your risk is a little bit big to about 6.18. When the position starts to move, then you can move things down. Then you would have seen that the areas is well respected and then you can start to move things down. Then you can start to have peace of mind in what you do. Any question on the US 30? It's getting clearer. I'm glad. That's what I wanted for you. I want you to see the reason behind those price movements, not just about the indicators alone and running yourself mad on indicators. There's a reason why things happen at the points where it happens. All you need to do is understand how to tally reference points into your trading, and you can trade anything. You understand? You can trade anything. I'm not one of those people that will say to you that I will try it on my demo. I can't afford the risk at the moment. It's getting clearer. No. It's not a problem. Take your time to understand. You know, take your time to understand. Eric, what is that? So take your time to understand. Now, please, you said I've explained it. You still want me to explain it again? I've explained it. Don't worry. We will still get there. Don't worry. All right. So the next one that we've got here is that will be a completely special session that will be taking the live trades based on it, you know, and then further explanation can be going into it. I've explained it like 2-3 times, but you want me to sleep on it and continue to explain it? Don't worry. One day you have one-to-one with me. All right, so there's another chart that someone mentioned. I think we lost that. If you have any other things that you want us to look into, please type it in. I think someone was mentioning someone mentioned pound dollar. All right. So euro dollar, please, can we check out EA? Yeah, we will check it out. All right, so just before we do that, the person that mentioned pound USD, are they still in the room? Are you still in the room if you mentioned pound USD? All right, so if I haven't got any answers to that, right, let's look into one last thing. Yeah, it's fine. I've got you with me. It's not about many, you know. One thing I need you to understand is this. Do you think it's about many? It's about even one person. It's about how I feel. Today I'm feeling good, and the many part of it is I'm even fasting. I can do stretch. It's not a problem. But one thing that you will see is one thing that you appreciate is the clarity that will be coming into play. All right, let's see what that is bouncing off, giving us. NEO, Ripple, BCH. Let's see what Ripple, what? Ripple USD. So this is giving us a sell in Ripple. All right, a short-term sell in Ripple. We've got this trying to go down. The signal is there already. We are waiting for the MACD. Monero is doing its own math thing. Couldn't afford to go all the way down, but yeah, we are tracking it. Ripple USD, BCH USD. So we got a sell here as well. We're just waiting for full confirmation for things to go down on the MACD. BCH Bitcoin. Right. So we're just waiting for the MACD to turn around. It's all calculated automatically in the strategy. All right. It will just do the calculation of the day high and low. All right. And then obviously divided by 3. Yeah, there's a particular calculation for the pivot point, but this is all calculated for me. I don't have to go through the calculation. I just have to trust the process. That's a big sell-off in that. But yeah, it's all been calculated for us going forward. Right. Is there one other thing that I wanted to show you on this? Is we've looked for opportunity for pattern on it on the 1 minute chart. We saw one. We are looking for possibility of this can be a pattern as well. Let's look at this. Because we start with a double top, now we are experiencing another almost double top. All right. What I want to show you is this trend line is still holding, is still valid. We are breaking down at the back of this trend line. So there's no cause for concern. We haven't seen that bullish push. Let me look at what daily gives us, the kind of candle that we have on daily. Oh, I remember what daily gives us now. All right. So we can be looking at this and be seeing, look at what I'm seeing. So I'm going to take the fib off for now. All right, I'll take the fib off for now. I'm seeing this move down and I'm seeing this move up. Okay, I'm seeing this as a flag right now. I'm seeing this as a bearish flag right now. So pattern trading is very important as well. All right. It doesn't mean that. So I'm looking at this as a flag right now, and I'm looking at this as a bearish flag. Okay, whereby the break of this zone downward, retracement back to it is a means for us to take things short. All right. So that is what I'm seeing, and I'm seeing this particular flag is even trying to expand. So we can be looking at this for a short-term trade opportunity when price comes back down to this level. Let's look at it clearly. When price comes back down to this level, to all this area, if we're not going to break this particular trend line, that is the opportunity for us to bounce back up. So all these areas can be a trend, a target profit zone for us. All this area can be a target profit zone for us going forward. All right. I think we got a little bit of an inner one going in like this. So all this needs to be broke all the way down, and then that's when we will see that continuation. But we'll be very cautious because of all this higher lows that we are seeing, because we don't want things to turn around. But obviously, yeah, the strength is looking downward. Just being very cautious right now. For the upside risk, I don't want the upside risk to be more than all these places here, especially this high here. I don't want the upside risk to be more than all. And then I've got another 200-day moving average over there. All right, let's look at the noisy man. BCH, BTC, trend going down. We haven't seen the MACD going down. Dash USD going down, but it's not yet fully confirmed, and I don't like the fact that things are turning up like that. Like I said, I'll send it to you. You can only use it on a PC. I think I have it on the chat group as well, but I'll send it to you. You can only use it on the PC. Yeah. Wait for it in going forward. All right. So US 30 analysis done. We are looking into Euro USD now, right? Somebody mentioned Euro USD. Right, Euro USD is heading into a golden zone. Wow. So we can be looking for opportunities. Plus, we've started to see the bouncing. All right. So what I'm going to do is let's get another Euro USD chart. All right. All my charts is sending alerts on Euro USD right now. Zoom, zoom, zoom. So if we see any buying opportunity coming into here, this is the time that we, wow. I want to look at this Euro USD seriously. There's some money available to be made on it. I just need a clear chart. Sorry, bear me a second. Right. Right. Euro USD. Oh God. Seriously? Love training as a core. I don't even remember when I do all this training. It is based on giving me. Right. Finally we got it. We got more or less like a clean chart. Let's delete all the nonsense. All right, so this is a monthly chart for the Euro USD. The first thing that we want to look into is looking at this chart. We can see that we've got the main trend to the upside on monthly. Okay, right. So what I wanted to do for you right now is I want to break something down. I've been Forex Trader 1 on the Telegram chart. I came across them too. I don't know if they are reliable. Well, to be honest with you, I haven't used them. You know, I got so much group on my Telegram chat, and I'll be 100% honest with you. I haven't used them or used their service whatsoever. Let me be real with you. The only reason why you need to have them or why I have them on my Telegram chat is so that I can monitor the trend of events. You know, you cannot be in one business and you are not watching what other people are doing, you know. So I have so much thing on my Telegram group, so much group on there. I just want to watch what is going on in the business. I want to know precisely which direction things are. I can't trade on isolation, if you get where I'm coming from. I need to know what other people are doing. I need to know what the competitors are doing. They are a source of news for me. They are a source of inspiration for me as well. But I have not used their service before. Just because I can do every single thing that they are doing, I haven't used their service at all. Seriously, I'll be honest with you. If I've used it, I will tell you precisely that I've used it. But yeah, for now, I haven't used it. Yeah, that's just the honest truth. Okay. All right. So going forward, I'm looking into this. You can see precisely that the master trend on this is to the downside. Okay. We have all this congestion zone now that now give us a push above. All right. And then we are finding it difficult to retain. We are finding it difficult to continue to push higher. This is looking more or less like wanting to turn impulsive on us. Okay. But what I tend to do is this. Just because we have this trend, all right, it's a primary trend to me, all right, we have this move down, okay, just because we've now broken below here, if you remember this particular zone, all right, I can be well assured that the trend that's going up has broken, all right? But we are still moving at the back of this serious trend, because we know that this serious trend can still catch fire at any point in time, right? But particularly for now, the trend going up, right, that gives us this side, that comes back to this low, that's supposed to carry on giving us a further upside direction, has been broken and things are looking down. So we cannot afford to forget that, okay? So if we now decide to look at this entire move and put so what we want to be noting down is this trend EURUSD monthly outside down, okay? So if your monthly trend is down, you want to be looking for possibility of being a seller on your other charts as well, all right, so that you can be following that monthly trend direction, okay? So because that's where the force is going to be, all right, considering we've even broken this particular structure right here, okay? So the trend is looking down. We can then look for possibility of whether this trend will continue or whether we're going to be seeing reversal. So if I employ my Fibonacci on top of here for now, okay, what I'm going to do is I want to reverse this, okay? So I'm looking at a particular zone on my charts, all right? And there's a big time frame right now, all right? There's a big monthly time frame. So if we are looking at that sweet spot zone, which is that in combination with the 61.8, okay, we've actually buy at the back of that 61.8 and make some decent profits, as that 61.8 was magical, and I'll show you why it's magical. And obviously, so I've got that particular zone, so I can take off my fib for now so that the chart looks cool. All right, so I'm looking at this zone and saying to myself, this is where I'm expecting possibility of, if possible, a reversal. All right, if there's going to be any at all, although the trend is down, so I shouldn't actually be expecting a reversal. But yeah, reversal can occur, and these are the zones where it can occur: the 61% and the 78.6 sweet spot zone and the 61% golden proportion zone are areas where you can see a reversal. All right, let me see. Yeah, all right, so looking into this going forward, what I would then do again is this. I need a reference point for me to be able to know how to approach this going forward. So my reference point on monthly, as you know, will be that low right there. My monthly color is the cyan color, so that when you're looking at my chart and you're seeing all these tiny lines, you can then understand where it's coming from. Okay. All right. 1239, 1179. And then 1116, big zones. In these zones, we have about how many pips that we can get out of this zone. We have about 125 pips or so, 121 pips or so in those little reference points. So it should, in case things start to turn to the upside, I know how to approach it. Right, so this is this on monthly. I'm looking at this zone where we are in. I know that we are closer to the 60, we are 61.8%. We are still pressing down, right? So what I want to do is I want to look briefly into weekly, all right? So remember, I've said to you that when looking at this chart, the monthly trend to me is down. Couple of reasons for me to confirm that is the blue is even crossing below. Welcome. Is the blue is even crossing below. That's a couple of things to bear in mind. Then I've got this particular one as well. The weekly, the blue has crossed. You can see the move the way that the move is sluggishly with so many reds and so many blues at the same time, it's unclear as much as we have this impulsive move up here. All right. We are seeing all these corrections coming into place. One day of up, the next day of down, one day of up, the next day of down. Overall, the direction has been set. We are in a downward spiral looking trend. Okay, we are in a zone right now. The last part of that zone is right over here. What you can do with that zone is you can look for possibility of support and resistance, just to add something, a little bit of sauce to your other finding techniques. So you're looking at area of support and resistance down there. You have a huge support right there, another huge support right there on monthly. Okay, we look down into this on the weekly and daily. So you have all those zones that you know about technically in all those areas. And then another support right here. All right. So what we are having is prices hitting this particular support and it's looking to see whether it's going to break it or not. All right. So that is key for us to know. The next thing is we've got all our areas intact as well. But one thing I want you to pay attention to is this. When you look at the price, we came down, all right? And then we have these 2 weeks of almost doing nothing, the third week of almost doing nothing. So we've been balancing for a very long period of time, okay? So balancing for a very long period of time can then start to constitute something, because this is a range market to me right here now, all right? And how to approach a range market for the people who are following my teachings is the range market is very easy to trade. You just need to know how to trade it. So we have 1, 2, 3, 4 weeks of range, all right? That 4 weeks of range has been given opportunity from this high, let's assume, to this low of about 122 pips all the time. And the best way to trade a range market is to sell the highs. Once you know where your range begins, sell the highs and buy the lows. So once price is approaching any of these previous weekly high zone, you want to sell that, all right? And once price is approaching the low of this zone, you want to buy it. So we might actually be looking at a buy opportunity in the euro, despite the fact that this candle is red. We might come into the new week and things push down a little bit to this support and start to push back up. Just bear that in mind, all right? We might even see price come down a little bit below here, all right, in this range, and then snap back up. Okay, so that's the kind of things that you can see on a ranging market. You can see an outside day like that. And then the next thing that we might see is we can see a gap down that continues to go down like that. There are so many possibilities on this chart, but before we see that, this support will be broken. So if we saw a gap coming into the open and it went down and it did not reverse back up, doing a crack and snap scenario, such that when price goes down and then it didn't go down for much, you find aggressive buyers and shoot back up, then obviously you might be looking for a sell opportunity coming into this, in this zone, all right? The next thing that I want you to pay attention to is this as well. So we're coming, sitting on a support. Look at it. You can see that we're using it as a big support, and we are looking for possibility of that reversal, all right? But we are not saying that. We are not actually getting the kind of push. Look at the kind of push we got from here that keeps going up, all right? So the first time we approach, 1 candle, 2, 3, 4, 5, 6, all right? It's taking 6 weeks for us to trade around this zone in the past, all right? The last time price gets there. Now it's taking 1, 2, 3, 4 weeks for us that we've been using to trade in that zone. when price gets to that particular zone as well. So that is kind of telling us that's an important zone right there. It's a zone where things can turn around. As things turn around, not yet. We haven't seen that happening, all right? But there's possibility of that going forward because we have not even break this particular area down. And if we're going to break it, obviously we're just going to break it anyway. That shouldn't be a cause of a concern. But for now, just because we are bouncing above it, we can be looking at things to the upside, all right? And we are in a zone whereby reversal can definitely occur as well. So we can be looking at things to the upside. So how do I approach that? I want to see that on my daily chart now. So everything is looking down, okay? So it's good to be on the downward spiral or to be on the seller's mode, all right? But the only cautions is we know that we are selling into a zone whereby we can see a rejection going forward. So we're going to be watching and monitor for that rejection going forward in case it occurs. Excuse me. And if it does occur, you want to see price rejecting using your candlestick signal. So we haven't got anything down there more than so, but we are watching for continuation of price going downward. So the price is negative, it's looking really bearish, and that's what we're going to be looking for going back down like that. What I would then employ you to do is I will employ you to, because we know that we are looking for that 78.6 and 61.8, which is where we are sitting on right now, is we'll be watching this chart carefully, and I'll employ you to watch this chart carefully. There's no need to trade anything on this for now because we are in a zone. But if we keep moving back above here, then it might be a good opportunity for you to start looking to buy. But for now, the selling pressure is significant, it's huge, and I will more than be selling the euro USD at the back of dollar if dollar remains strong, okay? And I will be good with targeting 247 pips or thereabout. I'll be good in targeting 247 pips or thereabout if we get down to that level. But yeah, just because we are sitting on an important support as well, you know, support always turn price and buyers will come in to push the price up. So Euro US dollar is a particular price that you want to watch for, all right? And what you're watching in the Euro US dollar is basically simple. Let's assume we have other things that can make this price go. What I'm seeing right here is this. Let me show you. So I'm looking at this chart. I'm seeing some kind of opportunities like this in terms of patterns. $84. All right, let me check this out quickly. 71. So we use both the highs and the lows. Just because you're joining me for the first time, that's the reason why you're thinking like that. We use both the highs and the lows of the last 4 months. Okay, last 4 months highs and lows, last 4 weeks highs and lows. In fact, last 4 days highs and lows as well. When you see them overlapping, that's a very good, powerful area. If you are combining that area with any other thing, it can be very profitable. Okay, it can be very profitable. So we have this more or less a butterfly pattern coming up on the chart. I don't really like it much, but yeah, it doesn't mean that it's not there on the charts, and this D level, we are still waiting to get to that D level. All right, so let me hide this one for now. Let's look for possibility of patterns that we can see. So we have a 4-hour, and this is the way that price is going down. We have this sharp price, we have the sell-off, we have that level over there, we have this harmonic pattern forming. All right, let me see whether we have another thing forming as well. So we have this sell-off. I want to see whether it is triggered by harmonics or some other stuff as well. So only two, that will be Krabas at the same time. No, it can be Gatley, isn't it? Yeah, this can definitely be Gatley. But somewhere around there, price didn't get there. I'll just hide it as well. Thank you. You're welcome. All right. So what I can see over here is I'm looking for possibility of patterns. I'm looking for things that can aid my trading decisions. All right. And I can't see anything much clearer on the Euro USD more than I'm looking at this. Dun, dun, dun. Dun, dun, dun. Back to that, back to that, back to that. All right. So this might be, yeah, I think we've checked this one. We've checked this one. Definitely check this one. And 127. Yeah, I'm gonna delete that. So what we'll now do is, if we can't find anything, we will now go back to basic. Okay. So what is the basic that we go back to? We keep tracking this price with this. Sometimes you can't find anything on the chart, or you can find your trend. Can you see that? So that's my trend line. Okay. So I want to see if price is going to break this trend line going back up. Okay. And then I want to now put another trend line at the back of this. Okay. So with this trend line now, certain things are coming into perspective for us. All right. And what is coming into perspective is we can see that low, higher low, and then we've broken this, we've gone back to retest it, and price is going back all the way back down. All right. So with this now, what I can then do with my trend line again is I can have a channel in place from this high, all right, to that area there, and then bring it down like this. What I want to do with my channel is I want to stretch it out, and I want to stretch this up like this. So we made that high, we made that low, we made that high, we are going to make this low. Are we going to be able to break back up? I don't know. All we are doing is we are trading inside this channel for now, and that is what we are doing. What I'm going to do is I want to make that distinct. All right, so that when I go to my hourly charts, I can still see it. Okay. When I employ, let me see if I don't see anything. Sometimes I like to check what other things are saying. So if I look at this on 4-hour charts, so all the indicators is currently oversold. Okay, this is oversold. We are in oversold territory at the same time. And price can start to turn. This we are waiting for this to turn green. We are waiting for this to cross over, but let's look for it on 2 hours chart. Excuse me, sorry about that. So we can see some divergence on stochastic, which is telling us that price can go up. All right, any divergence here. So I like this divergence that I'm seeing on the MACD as well. If you're paying attention, can you see this divergence? Okay, so if that divergence started from here, so this is the divergence. Price is going down while MACD is going up. Okay, we have a little bit of divergence over here too. Stochastic is moving up higher like that. So we've got a couple of divergence, although price is not yet ready to turn. All right, but we're having an indication that price can turn to the upside. All right, let's look at 1 hour. So when you look at this, look at the divergence exaggerated elaborately on the 1 hour chart. So MACD divergence, price is making a lower low, right? MACD is making a higher high. All right, we have the stochastic divergence as well, okay? And then we can see the awesome oscillator divergence as well. So there are a couple of things that's telling us on this hourly chart that things might be looking to the upside. All we are waiting for is just for price to cross, for all this to cross to the upside in the south direction, and then that can continue to be a reference for us going forward. So we have all our trend line in place. We are watching for the EURUSD decision. We don't know what's going to happen, but everything is indicating for us that this guy might turn at any point in time. And when it turns, you obviously want to be part of that particular, obviously want to be part of this particular move. Let's put a trend line on it. Remember, the main trend direction is up, all right? Sorry, is down. So what you want to be doing is you want to be seeing price coming back to this zone here, right? And this is where you want to be a serious seller, especially at 1.1239, all right, which is above here. So when price starts to turn back up, you want to see whether you're going to have a failure in this zone here. All right, you remember that our trend line and the channel line, they are a good area for price to move back up to, and then we find that sell-off. Okay, and then that sell-off now, if we get a move back down to here, say for example, this sell-off that we are encountering will be in the direction of the main trend. Okay, so that's one thing I'll be looking for. I'll be looking for my area of 1239 on the EURUSD. And I mean, for the people who are seeing, I hope yeah, that literally makes sense for us. So with this divergence that we are seeing, price can go up a couple of pips. Okay, we can take advantage of that move up about 30 something pips. When we hit this particular area again, then we can take advantage of the move down at the same time as well, right? And take advantage of the move down to about 72 pips. So that's all I can see on the EURUSD for now. Somebody asked about the EURUSD before we call it a day. Any other questions? Let me see. All right, so let's look at the EURUSD. Okay, So this is a
Bola,
very good.
can you do a fib example?
Go on.
Bola, fib example.
Can we do a what?
A fib example.
All right, so we've done a fib example on this. Probably you missed that, yeah? So I'll do a fib example on the Euro Aussie, all right? Because this zone right here where we are, all right? This is a Fibonacci zone as well, but I'll do a fib example on the Euro AUD. But in the meantime, what I wanted to do is I want to take this trade in my account as a pending order. And then obviously we look into the Euro Aussie. And then I'll do a fib example on the Euro Aussie for you. All right. So the reason why I'm taking this trade now is because the monthly direction is down. Oh, come on. Please bear with me. Then I'll do a fib example for you in a second. Euro AUD. We've talked a lot about fib today. All right, so I'm having a sell opportunity on 12. Sorry, I need Euro USD. Sorry. It's really so Euro USD. I'm looking at 12.39. $12.39. Somewhere around there. Okay, and it's going to be a low risk entry for me. It's going to be a low risk entry for me. I'm going to have my risk at about just a little bit above it. Let's say about 15 pips above it. Because I'm targeting this. Sorry. 1 second. I'm targeting is 11.79. Sorry. Right. It's 11.79, not 12.39. 11.79. That's my entry on Euro USD. Okay. I've got all this trend line here that should be acting as a resistance for me. And then my target now again will be, I'll be looking towards 11.15. All right, so that's just about 62 pips for that 15. Wait me a second. Okay, I can't really take it on this. Let me see whether. Yeah, that's why I love C Trader. All right, so that is done on that. Let's do the Euro Aussie and then we fib it out, and obviously Niche can take advantage of that. I'm gonna go to a different template. Spartan. All right, so the Euro Aussie, wow. We are actually on the fifth wave for the Euro Aussie. All right, I'll look for a clean chart anyway. We got some zone coming up around there. Wow. So the Euro Aussie is looking promising if we carry on some push higher. Let's look for Euro Aussie on another broker so I can have a clean chart. Okay, I think this is a clean chart for us. I'll look at this on monthly. Yeah, you can. I'm going to copy it. It's 1192 for the stop loss, 1175 area for the entry, and 1114 for the take profit. I'm looking at this. Excuse me. Right. So going forward. So I'm looking at the EU charts, Euro AUD chart. Yeah, stop loss is important all the time. Yeah, and then you take a sensible lot size. Okay, so this is the Euro AUD chart. Looking at this chart, basically what I can see that is glaring to my own field of vision, that should be glaring to every other person, is the way that we are approaching the highs. All right, so we are approaching the highs. Look at this low, higher low. We came down, we continue to push back up higher. All right, so although we know that we've seen this massive move down, what we can do is to have a clear perspective of the entire move, the entire swing. Okay, and then obviously we can just apply fib to see where we are on this particular chart. All right, So what I'm gonna do is let me reverse this so that we can see where we are going. So the entire monthly move that created this swing down, right, is now hitting this particular 50% level. All right, this is a very big numbers for this currency. All right, you can see that we've attempted to go there the first time, we sell off, attempted again the second time, we sell off. All right, eventually the third time we're selling off, the fourth time we're selling off, the fifth time we break above it. What is the high that was created over here? 66.89. What is the high over here? 66.06. Look at the difference. 66.89. That was the high that was created on that. On this particular month, we have 66.06. So which means we've managed to go above this side. We even go above it 86 pips and more. Okay. So knowing fully well that we have a 50% over here, what I'll then tend to do is I can be looking at this zone, the sweet spot, which is going to give us 78%. What's it called? Discount or retracement. Okay. It's a discount opportunity to take advantage of everything that's happened before all the way down. So I know that in this zone, I have that particular opportunity right there. Okay. What I'll then do is I want to combine that zone with other things as well. Okay, so I want to combine it with current support and resistance that I'm seeing. All right, even over here, I can see a couple of supports right here. Okay, you can see all those ones right here. So those are areas when you're looking at the charts, you can see what has happened before in those areas that when price gets there, then it can reverse this or anything can happen. So that's what we are looking at on this monthly chart for now. All right, so the monthly zone is showing us that things are going slightly up against the previous trend. We are sitting at that 50% level. If we manage to break above this 50% level, all right, then the opportunity is looking to go to the upside. And is that going to be a possibility? Yes. Why? Because I can even see on my EMA that we have a cross of the 5th of the 12th above the 36, all right? And price has been tracking this 12 for a very long time, which is our volatility EMA. And not only that, we have a wide opening gap in between the 36 and the 12, which means things have not started to turn all the way back down. So it's looking positive to the high side. And the good thing about it as well is this. Let me show you this. Over the last couple of how many months? From May 2018, right? The last low that we encountered was right here, right? So we have another higher low in December 2018, all right? Over the last couple of few months, March, April till May, all right, we are seeing significant high lows, all right? So if there are sell orders, if there are many people selling the euro against the Aussie, okay, what we'll be seeing is if that orders is there in the market, we'll be pressing down, but a lot of people is buying euro against the Aussie. There can be so many reasons for that. One of the reasons why people will be buying euro against the Aussie, let's look at it from here. All right, so global central bank interest rates. All right. So currently, the European Bank is giving 0%. Let's do this. Excuse me, sorry. So the European Bank, they haven't done anything since since March 10, 2016. The rate has been very low, okay? It's at 0%. So what the traders are anticipating is let's continue to acquire cheap euro because euro is very cheap. so that at a point in time whereby the central bank is going to increase interest rates, we are going to have more euro to our disposal and be benefiting from that rate increase. Euro is cheap to buy right now for the knowledgeable traders. But look at the Australian dollar. So what we are seeing is before the interest rate, before the current rate is at 1.5, we used to be higher than this. All right. So what they are trying to see now is they are seeing that European Central Bank has been weak for a very long time, since around the 10th of March 2016, right? The Australian Central Bank, however, is at 1.50, but the last time they caught 25 basis points, which means European Central Bank is not growing anyway, it's weak, but when it starts to grow, it will start to have strength. Meanwhile, the Australian is looking downward, all right, from the high that it used to be, from over 3 point something. I think at the point in time we are at 4 point something, right? From over 4 point something, we keep going down. So Aussie is actually weakening, right? Right about now, right? Why they are waiting for European Central Bank to see possibility of picking up, okay? And that's the reason why people are loading up on euro against the Australian dollar. So if there's any particular central bank that is offering more, is Russian Central Bank of the Russian Federation. So if you are actually holding the ruble, which is the Russian ruble, you will be getting more, what's it called, more interest on holding it against a majority of the other currency. Brazil too is offering a very good, attractive rate right by now, while all the Western world, the BOE, the Fed, they are offering, Fed too is a little bit attractive, 2.50, but you can see that the Eurozone is slightly not growing. England is around the Eurozone 0.75, EU, the Europe exactly 0, Swiss National Bank negative, you know. Every other thing that's got to do with Europe is not as positive. Japan can always be negative for a very long time anyway. All right, so what we want to see is, this is the ECB. ECB used to be at 5%, and then now they break down, and they're breaking down for a very long time, since October 2014, to the same rate. So let's look at the RBA now, so I can understand where I'm coming from. So the RBA at a point in time in the early 19-something, they are at 7%. But the most important level that I'm talking about was when we are actually around 7.5%, you know. So you can see that when it comes to the way the interest rate is being allocated in the market, you can see the trend is actually going down for the Aussie, right? And it still have more room to go down. Meanwhile, the ECB has gone all the way down. The only room that it has to do anything now is to slip into negative territory. But you know, it's a big bank, it's a big country. It's likely not going to slip into that, and then they will give a lot of people opportunity to acquire cheap euro. And when things start to look positive, then it will start to look positive for good. All right, so that's just a brief analysis going forward. So I've shown you others are now more in the euro. People are happy to buy the euro than actually selling it against the Aussie. All right. So they are holding the euro up and selling the weakness in the Aussie. All right. So this is one particular region. What I'm going to do again is I want to put I'm going to put another horizontal line on this 50% fib zone, so that we can know where it is. I'm going to make that horizontal line green. We can call it 50% or whatever, so that we just know. Then I'm just going to delete this so that we have a clean chart. So we are looking at price hitting all this area and pushing all the way up, okay? So we are looking at price remaining positive 220 pips, 1,140 pips. We still have 2,500 pips to continue to go higher. All right. So we look into what I want us to look into again is what will be our reference points when we are going high. So 1, 2, 3, 4. So we are well above the 1, 2, 3 months. Are we strengthening or weakening? Does it look, are we strengthening or weakening? Right. So we are strengthening and we are strengthening into exactly. We are strengthening into a resistance zone, okay? And all this resistance zone that we are strengthening into, we are actually drying up all the sell orders at the bottom. So there are more buyers in this market, the way that I'm seeing it clearly from here, than the sellers that are in the market. So we're gonna be pushing up and possibly push against this resistance zone again, and then yeah, get into all this congested zone moving up. All right. So that being said, we have a couple of reference points that we're going to be looking into, which is the 166.95. Another reference point would be this area here, 162.40, just to have an idea of when things are likely going to turn and how we're going to cover up ourselves. All right. So we have this massive weekly rejection candle, okay? And that weekly rejection candle is what we are going back to look for, all right? The good thing about it for us is when we create that weekly rejection candle, price move back down, we create a lower high around there, and price continue to move back down, but we've never seen a significant follow through. And if you can understand what I've been training all along today is once you now know this low, okay, you want to be looking for opportunity of crack and snap back above it, okay, so that you just don't get lured into the market just because you're seeing things coming down. You have to take your reference low. That's your reference low. So when price comes down below it, right, instead of you to think of selling quickly, first of all, you'll be looking for whether there will be a follow through to continue to go down, or there will be a what, a rejection, all right, of this particular low for price to turn back up. So it takes, look at that, it takes us 1, 2, 3, 4, 5, 6, 7 days of a move, all right, and that 7 days is nullified by 1, 2, 3, 4. So you can see where the impulse is coming in into this market. You can see that the strength is actually on the buying side, because it's taking more time to take things down, while when the buyers come in, they just come in with strength. So we're going to be careful of all these areas so that we don't have a head and shoulder pattern, all right? So we be careful of this area, because this is a huge area of resistance. We'll be looking at this like this. Wait a second. And these are the kind of things that you'll be seeing in the market as you continue to analyze. They will be showing up themselves to you like this. All right. Okay. So there's possibility of a head and shoulder pattern. I don't like the way this look, but let me look for it on another. So for my head and shoulder pattern, this is going to be the left shoulder. This is going to be the head. Okay. This is going to be the beginning of the right shoulder going forward. And all this place can be the right shoulder. And I'm going to be careful. And I'm going to be looking for a neckline around there. Okay. So this can be a head and shoulder pattern that we are forming, and we are not just forming head and shoulder pattern, we are forming it at the end of, at the almost end of a trend, okay? And this trend is leading into what? A resistance zone, all right? It's not just leading into a resistance zone, it's leading into a very big 50% retracement. So we can fail or we can continue. Anything can happen. We can break above and then crack and snap back down as well. Just pay attention to the head and shoulder pattern that is forming as well. All right. So, but what I wanted to show you going forward is this. I've seen the cross of the EMA going forward and we're still looking positive. In fact, we just add another new cross to the upside again, okay? And this new cross to the upside can be the cross that we need that's going to break up above. But yeah, everything is still looking positive despite the fact that we are approaching resistance. What would have been good for this trade is this. This will also actually be able to have that patience to be able to wait, okay? To see this particular move, all right, break and retest and carry on going, or do not overemphasize. We can continue to see price hit that zone and try to come all the way back down again. All those are possibilities. So whatever is possible according to Murphy law can always happen. So these are the kind of things that we are facing around there, especially when we've seen a massive rejection like that, right? The only positive thing is just because we've gone above here. But yeah, going above it, we see looking for all these negativities that can befall price in that zone. All right, so I'll be monitoring this closely. I'll be looking for opportunities going forward in it as well. And then I'll be the kind of opportunity that I'm looking for, I'll be able to share with you going forward. And this is what I've seen again in this chart. So I haven't said all that. Let's look at the daily chart. Okay. So these are Euro Aussie on the daily. All right. We can see a massive range zone here. Okay. But just before that zone begins, what we can see is price was coming in a way from a zone like this. Wait a second. All right. So what I always like is once I see a break like this, all right, I have the ultimate belief that until I see a break back down, yeah, the trend will continue. All right. So I believe that all the time when the prices was below here is the sellers that's in control. But the moment I got a break back off, then I can say or vouch that is the buyers that are in control. All right. So, and this is now going to give me, if I'm looking at who is in control and I'm seeing this particular kind of a break, this is what is going to be leading me to believe that, okay, the price have started to exhibit one single direction, and that particular direction is to the upside. Where is it likely going to terminate? All right. So I will investigate this move down, okay? I will investigate this move down. And when I'm investigating this move down, I will be looking for how did this move get to come back up here, all right? So the first thing that I see before this move come back up is the move to this trend line again, which is the third sign, okay? And then I saw the failure to go back all the way down to push things down. Look at the way that we hit that and we went back down. Look at the way that we hit it and we went down, and then we in fact goes all the way down here again. So when we actually make this move, we did not continue to go seriously down. All right, there's a change of mentality which I can demonstrate with this, that we move from here, all right, and we hit that particular high zone over there, and then we retrace back down, okay? And while we are retracing back down, I want to check the reason why this retracement hold. All right, I'm going to show you what I mean by that. All right, let me move this away from here. So we were holding at this particular level, all right? So this particular level to me now, it's an important level to start with, first of all. Why did we stop here? Why did this level becomes the level where we stop before we continue to move back up, okay? So what I can see is I can now start to see the structure along that particular level, all right? So I can see that it's a big support for us, price shoot back up, a big support for us, price shoot back up, support, shoot back up. We try to struggle around it, all right? Eventually we break back down, we went up, and then we turn it into a support, okay? We turn it into a support, and then we continue to go back up, all right? So I can see the reason why this space is very important, why we break it and then come back to it. And then it's from this support now that price starts to go all the way back up, all right? So when price starts to go all the way back up and we eventually break this trend line, okay? What I wanted to see is, do we come back to look at any of this important structure over here, all right? So what important structure can I see? Again, this point here is a powerful point for me. This area here, all right? So when we break, eventually when we break, we move from here to here, we come back to retest this zone, okay? So retesting this zone lead us to go higher again, and we come back, we're still respecting that zone, we push up, we come back and still be on top of that zone, we push up, and then now we are tracking things with the trend line, all right? So this is how this zone has played out, and in fact, if I decided to do this settings, so you can see that going backwards, all these areas have been a very important resistance point. You can see how price is respecting it in some of these location, resistance, 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 you know, as we call it. It's an important barrier for price moving forward. All right, so two things I can possibly do now. Once I've seen that and we've broken this particular trend line, is I can start to employ my Fibonacci to see how we are faring really and truly. All right. So if I put my measuring tool from this low to this high, okay, what do we see? And how have we performed? What is the retracement structure like? Okay. So if I do reverse, so when we move from this particular low level, yeah, that breaks the trend to this high, okay, and then we reverse all the way back down, we are actually reversing into support into near the 50% retracement, okay, near the 50% retracement. The sensible target for that would be 1.618, okay, 1.618. All right, so if I reverse this, so my move from here to here that retraces all the way back down like that. So which is this move from here to here that retraces all the way back down like this. Okay. We'll be looking for a target for it at 2 to 3, which is going to be at 1.618. All right. So this is now the beginning of us understanding how the wave theory in the market occurs. All right. So what does that do for us? I'll show you now in a minute. So there's a 5-wave theory that we look at first of all when we are considering a trend. All right. So that 5-wave theory, it can extend beyond that. It can go to a 7-wave and 9-wave theory as well when we're looking into Elliott waves. But the first primary waves that we're going to look into will be the first 5 waves. All right. So once we hit level 3, all right, which is the third wave, which means from here, if you can manage to understand your wave theory from this particular zone, each and every drawdown that we are seeing over here, you could have still been in the trade pushing it up after you believe that a big trend line like this, yeah, on the daily has been broken. So you could have seen being part of this particular move. Your stop will remain the same, which is just going to be below here, below this, and you can see each and every time that we come back down, we are not hitting that stop. And this is what gives a lot of traders confidence to be able to trade the wave, because they will put their stop right here and they won't mind about all the drawdown that they will be seeing, price going up and down. They can even be scalping this, knowing fully well that their direction is to the upside. All right, so when that upside target is hit at 1.618 now, what we are expecting price to do is to take that 1.618, all right, level, and then retrace it back down, okay, by measuring it to be at 38.2, okay. So we're looking at price to take this level from this level and that level and retrace it back down. All right, so I'm going to reverse this so that we can see the kind of retracement that we're getting. So in this case, we actually move all the way to 3, and then we've seen that retracement back to a level of 61.8. This is actually a deep retracement from this move down, but you can see how we now use that 61.8 fib as an important support zone. Niche, are you there? So, and normally the 3 to 4 should start to end at 38.2, okay? But because we have this huge reversal, it is changed to 61. It is twisted back to 61.8, and that 61.8 could have been a very good location for us to look for a next trade. All right, that will give us the 4 to 5. All right, that will give us the 4 to 5. Okay, all right. So our 4 to 5 would have been just starting from here, and that is what we are chasing now. Okay, so what we can then do, thank you, Edward. What we can then do, this is the final part anyway. What we can then do is we take our trade from this 61.8, just following the wave theory and knowing where things is going to get to. We can take our trade at the back of this, put our stop below here, right? And then manage to ride this all the way back up. So riding it all the way back up now, we are on wave 4 to 5 in this particular case. Wave 4 to 5 in this case, and that's what we are trying to ride up. Sometimes we can get that right, okay? And where we're going to be riding this to is to 618 zone, okay? So we ride this back to this 618 zone for one particular reason, then you're going to have to sell, whether you like it or not, all right? Because you're not just selling alone based on your own intention, but remember the big monthly zone is right over here, okay? So we are actually gradually moving into the monthly zone, and once we get to that, that's where you're gonna have to respect that zone, and then you want price, you want to calm down a little bit on your buying pressure, and then see some selling in place, and then you can capitalize on both. So you can capitalize on the move from here to targets, yeah, and then sell a little bit back down again, and you have your trend line that is following this and it's been working sincerely well. All right, so that is what I'm seeing on the Euro Aussie. I hope you see the same right now. Our trade on this now, I've started, yeah, which means we miss it according to the wave theory. We now get into an area whereby we can find resistance. We might be lucky that this resistance will come into force and then give us this particular move. Yeah, back to this trend line, and then that is where we're going to be looking for opportunity to continue to take this off. But yeah, we are on 4 to 5 waves now, all right? And that 4 to 5 waves, there's possibility that we can see that 4 to 5 waves going forward, all right? So we can look for new entry opportunity on the 4 to 5 wave. How do we do that? So now you go to your 4-hour charts. So always remember that even if you have a move up, there's always a retracement back down, isn't it? So where we likely going to see that retracement back down is when we are hitting all this area of resistance at the top here, all right? So we can hit this area. I want to be selling this particular zone. Look at this zone. You can see that although we've broke above it, okay, we're gonna come back to there, and it can be a very good area to look for sell. All right, we look for sell around that area as we are pushing up, and obviously you can sell a little bit around there if price continues to sell off, then you'll be able to make some decent profit. But yeah, at this 50% level where we are having this particular, let's look for it. That's my next call for sell. These two areas there, 163.56 is corresponding to a quarter point of 163.50 as well. I might be looking for opportunity to sell a little bit, right? Especially if I get a rejection candle around there, all right, on my 30-minute chart or on my 1-hour chart. If I get a rejection candle, this is where I'm looking to push the button, the sell button in this zone. We have both the 50% and then we have the resistance zone around there as well. So as we continue to dribble all the way up, I'll be looking for a sell opportunity around there if I got any. All right. So if there's a rejection kind of coming in, then I'll be taking this for a short. All right. So there's a particular entry around there, and yeah, if it comes in, and that's where we are looking for a short in the market. And that particular short that we are looking for, all right, we want it to target this particular trend line technically to come back to this particular trend line. All right, so I'll be looking for an opportunity over here, and eventually this zone can be broken, but yeah, I'll still be looking for a sell opportunity around that area because of all this that we have. You can see massive supply from there. Supply. So when price still gets there, yeah, we might not get say about 900 pips move. Okay, over here we go about 633 pips move. All right, but there's potential to about 400 and something pip move. Okay, so we look into that, we capitalize on that. That's a opportunity for me right there. In fact, what I wanted to do on this one right now is I'm gonna place a pending order because some of the time you may forget. So EURUSD, I place a pending order. All right, just before I place that pending order, I want to look into this again. Look at what we are seeing right here, whether you can see it too. So we have a move from here to here, down. It distincts this, the B point at 41. Okay, we have this right here, which I don't really like. And then we might be looking for, we are looking for box of 88.6. So just before that, I'm gonna delete this, but what I wanted to show you is this. So niche, your fib, again right here to this low. Okay, I'm gonna now change the settings and reverse if you're there. All right, so what can you see accordingly? So over here now, you're seeing zones on zones. So I like what we are seeing over here. Tell me if you don't like it. So we know we have this zone right here. At the same time, we are now having our 61.8, which is a golden proportion zone, aligning everything is right here right now. Okay, so this is the zone where we want to watch for rejection. So price is pushing up to here. Be ready for this particular short opportunity. Okay, I don't know if we have any resistance around there, but yeah, from this move down and that, I'm looking for an opportunity to be a seller. If it gives us that opportunity, we'll just take advantage of it. All right, move that move. It's a crack and snap type of a move. It always occurred in the market. This particular low, we come back up, we crack that low, but we didn't get a 1.13. That's just the problem. But we have the 78.6 somewhere around there, but that's fib anyway, which is good. So I can delete this for now. I can delete this for now. These are our wonderful spots where we're going to be looking for a sell opportunity. So with this, we're just going to be patient. All right, we're going to be very patient to see the kind of candlesticks that's going to be forming. What I'm going to do, I'm going to put an alert on my chart. I'm going to put an alert on my chart. Wow, on EURUSD, I've actually got a sell going on right now, probably because of that particular resistance, which is good. It's actually in profit, but I have more sales coming in at this zone, 164.70 something area. So I've got an entry right there. I'm gonna make my stop to be just above that zone. Okay, and then my targets will be looking at 6100 zone. Wow, it's a big target if we got it. 50% is at 63.95. Okay, my target for this will be at let's say 61.17. All right, so I've got that one on like that on my live account. Quite happy. It's a very brilliant zone. There's so many things that's going to be causing chaos around there, and then yeah, we should be able to find out an opportunity right there. All right, so that's it for today. I hope you benefit something sensible. Ade, Kwaku, and Ola, thank you so much for your time. I'm gonna try and get some rest now, and then hopefully I hope this will enlighten you and open your eyes and going forward. Let me know how things are progressing. If you have any questions, you know where to find me. Um, I will always do my best to make sure that I can continue to assist. I hope this is of value to you. I hope this is an eye opener to you. For all the people that were able to stay, thank you. For the people that come and go, thank you as well. I so much appreciate your time. For all my strong people who remain here, I will always remember you, Ade, Kwaku, Anola. Thank you for staying with me till the end. You know, you're a big inspiration behind me, and I've got some positive things coming up for you guys as well. I won't share it now until it surfaces. Oh, okay, no problems. Ramadan Mubarak to you too, brother. Thank you. Um, yeah, appreciate your your time. No problems. Get in touch. I'll get them ready for you. Thank you so much. Ah, wow, sister. Where are you from, sister? Oh, wow, Nigeria. Interesting. What about Lagos as well? Wow. I've got a lot of ladies that are just taking this by the on. And that's brilliant. Because the thing is, it's quite for ladies, they are very good in the way that they manage things. Ladies are even much more stronger and a better trader than man, I must confess to you. And this is not just a one-day statistics. This is statistics that we build over a long period of time. So I know you do exceptionally well. I don't know, most probably you've followed me all through the 7 hours, and were you the one telling me that this is your first time on my session as well? Oh, interesting. So, I mean, all I want you to know is you've got a very solid mentor behind you. If you need any assistance whatsoever, I know you're just joining in. Um, just let me know if you want to join the funding opportunity as well, whereby you'll be able to have access to institutional funding. Yeah, definitely let me know, and then we see how best we can. Yeah, sure, definitely. Just give me some time. Let me attend to the kids, to the family for some time now. I haven't attend to them, so and then we take it up from there. All right. I'm here anyway. You know where to find me, and hopefully when I come to Nigeria, very soon, we'll be able to. No problems. We'll be able to meet up and take things beyond where it is currently, because I'm going to be coming down soon anyway. Yeah, and carrying on helping quite a lot of people. Oh, wow, Ronaldo Nichols, thank you for joining in. We are just about to call it a day, and you are just coming in. Where are you from, Ronaldo? Where are you from? All right. In the event of me not hearing anything, Ronaldo, yeah, I'm gonna stop sharing now and call it a day. I wish you all a very good evening, and yeah, um, thank you so much. I love you all. Take care. Bye for now.